question number 1. And question number 2 is, Alex, what's going on here?
Well, so I heard there's a lot of stuff that's happening in Europe, so I thought I'd be a little French today.
Oh, okay. Is that what we're calling this?
Really bad.
I mean, I came up with it on the fly. Come on.
That's a bad one. We hope the markets open better than that response. But yeah, Alex is trying a new look. Tell us what you think.
Yeah, tell us what you think. So on Ask Profit, we'll kind of have that poll going.
Why not?
But
let's focus on more important things.
But I just want to start off with a small piece of good news as well, right? So amongst everything else and all this conversation around what's happening to flows, etc., globally, locally, etc., if you just see one of the key comments that came in from HDFC AMC on their investor call, they have said that SIP flows at 98% of peak flows, despite volatility, provides comfort on future flows. I think we've been all talking about how the domestic flows are the bulwark of our market. The largest AMC, the second largest AMC, does see that it will likely remain that way, which is not a bad thing.
So Indian investors are the boss.
Yeah.
And they've been proven correct in so many ways. If you bet on banks last week, well, you weren't disappointed with ICICI Bank and HDFC Bank. What rock stars. ICICI Bank especially. And, we're going to talk about that and more. So much to cover after a 3-day weekend. We'll get right to it. Let's start with the implied. Implied showing a little bit of softness in opening, but we'll see how that pairs out. We'll probably open slightly flat or slightly in the red. Global cues were fairly mixed as well. It was a mixed day of trade on Thursday in the US markets. Of course, Friday was shut for Good Friday as well. Dow closed with losses. Dow futures are in the negative as well. But if you take a look at how markets closed, I think NASDAQ was the most hit as we've seen. Inching down as well. S&P 500 mildly in the green, if at all, but Dow worst hit, about 500 points down because of key components that had announced results. So you're seeing a lot of corporate results action in the US as well. Treasury yields stayed steady, the 10-year at 4.3%. Crude is sliding as trade war fears persist. No clarity there, honestly, even over the last 3 days. Brent is at the $66 mark because take a look at it. Trump talks about some kind of negotiation with Japan, suddenly sits in a meeting with Japan for negotiations, says, okay, I think we'll have a deal with China, then announces a new tax on anything coming into the United States if the vessel shipping it is made in China. So it's all a little confusing out there, no clarity at all on the trade war. Asian markets, meanwhile, have had a weak start. Remember, a lot of markets will be shut today because the Easter Sunday holiday is being observed today in a few markets, including Australia. But China has kept interest rates unchanged. So you're seeing probably the reflection of that on the Asian markets as well. Implied open, as I said, completely showing a soft start at this point. All right, let's get to Arvind Sanger of Geosphere Capital to get a sense of, what are the key factors to watch out for. Arvind, always great to speak with you on NDTV Profit. Very good morning to you from where we are sitting. No news is good news, I suppose. And that is one way to look at the known happenings of the last 3 or 4 days in terms of no new big announcements on the tariff war.
I think no news could be interpreted 2 ways. There was some hope that there was a deal coming with Japan, and that's clearly not happened. So we're waiting for, who the deal is going to come from next. In the meantime, we're getting, the bad news that Trump is looking at firing Jerome Powell, the Fed chairman. So I'm not so sure that there's ever new news in the Trump world. There's always some news or the other that is disquieting. And unfortunately, this weekend, the only news we got was the confirmation from somebody in the National Economic Council that Trump is looking to fire Powell. In the meantime, we keep getting hopeful news on the deal front for somebody, Japan, Korea, India. I don't know who it's going to be first, but I think right now no news is making market nervous. And I've been talking to a lot of people over the last few days in the U.S. in different industries. And it's clear that businesses are sitting on their hands. And that's clearly what caused a recession. And if he fires the Fed governor and tries to bring the Fed under control, that would be hugely negative for both equity and debt markets. And it would be, it would create major turmoils, I believe, in global markets. If U.S. and especially in the U.S. market, I think in that sense, India is somewhat more insulated than most other markets.
Arvind, hi, morning. Alex here. So a couple of things stood out to me. One which you just pointed out, which is the commentary on the Fed chair. His term, of course, set to end in May next year, so it's not anywhere close. We're talking about a significant amount of uncertainty for as much as a year, unless something happens quickly. And in the meanwhile, also on the weekend, which you didn't mention, was the IMF and the fact that it said that it's going to have to revise its outlook for growth for the world economy lower. But it says for the world economy, there's no recession. Of course, that doesn't preclude a recession in the US. You just mentioned that. What is the worst case scenario of a Jerome Powell exit before term? And do you think that he gets pressure at all to cut rates?
Well, he is getting pressure already to cut rates, but it is very clear that he and the rest of the Fed governors are not willing to cut rates right now, because the concern is, we haven't seen unemployment move up yet. So, Fed is supposed to act when they see unemployment move up. We have not seen inflation come down to levels which would justify Fed cutting. And the concern is we don't know whether the tariffs will cause more recession risk and unemployment growth, or it will cause more inflation and could it cause stagflation. So I think the Fed is doing what they're supposed to do. President Trump is unhappy with it, but the reality is that I don't think firing one Fed chair is going to cause the entire Fed to go 180 degrees opposite of what it's doing. So I just think that the Trump administration is kind of lashing out in different ways for a problem of its own making. And I think from a market standpoint, there's way too much uncertainty. And from an industry standpoint, there's too much uncertainty for sticking anybody's neck out and trying to make any decisions. So I think that all of this, and as far as the IMF is concerned, look, IMF didn't say anything that the economists on Wall Street haven't said. Everybody's taking their global growth down. So big deal that IMF said it also. At the end of the day, everybody's seeing that, China's growth is going to slow down with these tariffs. US growth is going to slow down. And the rest of the world, there could be some negative effect. So I think that there is not anything meaningfully new other than this risk about the Fed and the lack of any clear signs of what does a deal with a country look like. Do they get all the other tariffs going to zero and only the 10% remain? Does the 10% go away also? Or are there other things that could happen in between? We don't know what the world is going to look like for the friendly countries. So that's why I think that this makes for a very tricky market.
Arvind, good evening. Neeraj here. Because you look at India so closely as well, and a lot of talk around, the HSBC view, for example, calls India a safe haven amidst all of this uncertainty because of better growth prospects domestically, so on and so forth. The dollar easing probably helps EMs at large. Constructive India by virtue of the results that have come out from banks, et cetera, or are you not so sanguine on equities by and large?
No, I think Indian valuations have come down quite a bit. Indian growth, the growth slowdown seems to be in the rearview mirror. I don't think it's going to be a V-shaped recovery, but it's clearly in a better shape. And on a relative basis, India could actually be a winner from this whole tariff war. So I think there are many things that are coming together for India. Valuations are somewhat more interesting. The growth is starting to modestly uptick from the lows of a couple of quarters ago. And earnings are starting to show that and is the least dependent on goods from a trade standpoint. And so therefore, India, I think, is quite interesting and clearly one of the few safe havens out there. Although, let's be clear, Europe has been a dog for the last couple of years, and European markets are starting to do better despite the tariff uncertainty. So I think there are a few places which have lagged where valuations are attractive, like Europe, and there are places like India where valuations haven't gotten to be super attractive, but where the growth story is starting to look better. So I think we see a few opportunities. And China, which was looking very interesting, is now in a little bit of a more tricky situation because of the tariff impact. So India is a relative winner amongst a few.
I suppose a couple of factors, and thank you so much, Arvind, for speaking to us, Arvind Sanger there. A couple of factors which are also important to keep an eye out on is that India's own negotiations for a bilateral trade agreement are on in the US with our US team in Washington. The Indian delegation there is led by the Commerce Secretary Designate Rajesh Agarwal. Talks are likely to run 3 days from April 23rd. So this is an important week in terms of getting a sense of what really is the deal inked between India and the United States of America, apart from what everything else is going on in the world in terms of a trade war. Terms of reference are 19 chapters, including tariffs, non-tariff barriers, etc. And both sides hope to have an early harvest deal before the fall deadline, because remember, there's a 90-day pause, right? So the idea is to get that 90-day pause completely redundant and irrelevant. If we can ink a deal in the next couple of weeks, it becomes important. It's the next big trigger, I suppose, for the markets as well. Apart from that, J.D. Vance is going to be in India, the United States Vice President. He has a series of meetings starting today. Those are pictures of him, not coming in, actually, that's file footage. But you will hear and see a lot from J.D. Vance. And of course, there's that Indian connection there because his partner is Indian.
Yeah, and we've spoken about a lot in the run-up to the start of the Trump presidency as well, when his announcement was made, the appointment was made. But, I won't spend too much time, Tamanna, Neeraj, talking about what happened on Thursday, because it's so far back, there's so much that has happened. But I thought that just capturing what happened in terms of the fund flow, one, of course, you saw foreign institution buying once again, but just the moves that were made, right? So take a look at Thursday's move. If you were watching as we were, then that takeoff happened around 11:30, and we went to the high point of the day. Look at that chart. And it was the large caps that led the rally. Banks remained, of course, at the forefront. You had the Nifty bank that gained about 2.2% or thereabouts, and the heavyweights were really in the forefront there, leading from the front. The broader markets relatively underperformed, but they still gained. You had the mid-cap index gaining about 0.6%, and the small-cap index ending with gains of about 0.4% or thereabouts, close to 0.5%. ICICI Bank, Reliance Industries, HDFC Bank were the top contributors on Thursday's move, and two of those are going to be in focus at the start today, I'm sure, as well. The Nifty 50 now is just about 200 points away from its 200-day moving average, below, and certainly something to watch out for. It has moved ahead of its other moving averages, 100 as well as 50-day moving averages. And the Nifty bank, and this is where it's interesting, it could well hit an all-time high at the start today, because it's only about 177 points, or about 0.33% from all-time highs at this juncture. The Nifty 50 is now still about 9.2% away from all-time highs. Take a look at last week's move, and this will put things in context. The only thing I would like to know right now is whether we've moved too quickly, too fast, and whether or not there's a cool off at this juncture, because the Nifty bank moving as much as 6.4% in just 3 sessions. IT as an underperformer as well, moving about 2% higher, and the Nifty 50 up as much as 4.5%. I don't know what you think about this, Neeraj, but the foreign institution buying and the fact that banking results have borne out the expectations bodes well for flows in.
Yeah, the only fly in the ointment suddenly becomes that if the Trump administration stops funding the endowments in the US, then that money which is there, will they have to sell some of the equity exposures that they have wherever in the world? And does that create a small intermediate pressure? It's a bit of an unknown entity out there. But by and large, what you guys said, what Tamanna said at the start, what you said right now, all decks are set for the Bank Nifty to outperform the Nifty. Now, whether the Nifty corrects a bit and the Bank Nifty doesn't correct as much, or the Bank Nifty takes Nifty higher, is anybody's guess right now. But very likely that the decks are set for the Bank Nifty to do much better than the Nifty per se. The good part about last week also was that the expansion of market breadth was seen for the first time in the last 6 months as a weekly breadth. And that is actually a very, very positive sign. And you look at sectors, we all know banking is doing well, but suddenly if you look at the quadrant movements, right, and there are these relative rotation graphs that many people have, but aroma chemicals, housing finance companies, banks, have all strength and momentum on their side. And therefore you might want to look at some of these specific pockets of strength as well. The only alert that I give to all of this is the multiple quant indicators, which many houses now have, which are all showing that the markets are in the extreme greed quadrant. Now, these tend to maybe react or perform with a bit of a lag. They are kind of lead indicators, so just be careful with leverage is the point I would make. The last point on the trade setup today, I was looking at the HSBC asset management note, which they have put out. Some great stuff on China. By the way, guys, it's just insane that China now has gold ATMs. You go and put in a gold bar or gold coin in that ATM. It decides the purity, the weight, so on and so forth, melts the gold and gives the equivalent amount of cash for that gold into your inbox.
Whoa.
Right? It's quite something, really. But the HSBC Asset Management Note calls India as a safe harbor. And they say that Indian stocks have gained slightly since Liberation Day tariffs were announced, which is one of the few markets which have done this. And with India still exhibiting world-leading GDP and earnings growth and valuations having corrected over the recent months, the case for the country's equities in the face of global challenges is compelling. So that's actually not bad.
I wonder if they're
sign.
going back to gold standard, huh?
I think gold ATM should be done in India. I mean, I just wonder what that would look like.
The
Lines would be
CEOs
too
and
long.
MDs of Manappuram and Muthoot are gonna not like you too much,
Hate that
Tamanna, today.
idea. Hate
And
that
the lines
idea.
would be a little long, wouldn't you think?
I think so. The lines would definitely be a little long. But yeah, but those are gold loans with Muthoot and Manappuram.
Yeah.
This is an easy sale. But yeah, anyway. So much action. Before we get to the derivative setup, a quick set of factors to watch from my end. Corporate action is definitely going to be in focus this week. 10 Nifty companies will be reporting this week, including Reliance Industries at the end of the week. And really, can corporate results continue to surprise on the upside? Because the kind of tsunami of good results from banks has sort of taken the bad taste of IT out of the markets, if that's any indicator. But this week we get a sense of whether Q4 is going to be not as bad as expected across the board, and which is why corporate results will be on top of mind. Bulls are firmly in charge, no doubt, because look at this. The Nifty has gained more than 2,000 points in the last 7 sessions. The index has now moved above the key resistance at 23,870 and is trading above all major moving averages. Will we hit 24,000 this week, and then will we sustain is really the big question. It has also crossed the 100 EMA, indicating a midterm uptrend. The index is now approaching the 200-day SMA, which is placed around 24,050, now seen as the next resistance level. Support for Nifty at 23,650. Nifty Bank has settled at a 54,290, just shy of its all-time high. And immediate resistance, of course, for Bank Nifty at 54,467. A breakout could lead to a fresh rally. Previous resistance was at 53,670. So now that becomes your immediate support. With now that kind of a technical range, a lot of action expected on the derivatives end, Puneet.
Very strong session over the last week. 4.48% is what the Nifty advanced, and we're at a very key support level of 23,800 odd, and 23,851 is where specifically we ended on Thursday. It is indicating an implied open of just slight tinge in red, but overall with the last week we moved the support level slightly higher from the 23,300 to almost 500 points higher now. Now, going forward, there will be a lot of stocks in focus. Of course, large cap IT largely done in terms of results. We have HCL Tech tomorrow. So we could see some recovery in IT because of players in the mid cap space specifically. We're expecting 8 results in the IT space this week. So that's definitely going to be a positive because the mid cap IT players are expected to do better while the banks have been continuing to do well. So Nifty Bank level as well is another one to watch out for. We saw roughly about 1,000-point move on Thursday specifically in the session. It's 52,200 now, and that's another key level to watch out for. When you look at the open interest gainers and losers ties in terms of key stocks, let's pull that up very quickly as well. We are seeing long build up across Hindustan Zinc as well as something like an Avenue Supermarts, while some short build up has been seen in Wipro, and that's largely backed by fundamental results of poor Q4 results for the company, as well as a very, very negative Q1 guidance for FY26 as well. On the open interest loser side, we are seeing some short coverings across United Spirits or Pharma as well as IRFC, some long unwinding in stocks like, Exide, and that will be again in focus results by the end of the week as well. So overall, while the session has had very strong supports at 23,800, the Nifty Bank, I think, will be in focus today on the back of seeing the strong results that we've seen over the weekend as well. But overall, really strong session as well as cues going into today's trading session.
Yeah, and that sets up perfectly for the first stock on my watch list. Thank you for that, Puneet. ICICI Bank, it's all about ICICI Bank, isn't it? Clear thumbs up, double thumbs up if we could give that, because it's a stellar quarterly set of numbers on all parameters. Net interest income better than estimates, deposit growth has been 6% Q-on-Q, improvement in net interest margins as well. Their return on assets at 2.52% is a beat on profitability, and there's a sharp improvement in asset quality. Let's take you through the core numbers. Net interest income at 21,193 crores versus 19,090 crores. That's up about 11% year-on-year and 4% Q-on-Q. Above estimates is key to watch. The operating profit number is the important one. 17% upside year-on-year, 5% Q-on-Q, and this is not what was expected. Provisions at 891 crores, a sharp downtick Q-on-Q at 27% down, and PAT has also grown 18% year-on-year and 7% up Q-on-Q. This is why brokerages are excited. CLSA wants to maintain and outperform. They've hiked the target price to 1,700 rupees from 1,600 rupees. They say this bank never stops surprising. With a strong Q4 performance, they reiterate as top bank pick along with Bandhan. Curtailing loan growth but improving profitability is something they like. Asset quality is as stable as it gets, along with continued good OPEX performance. Jefferies is also quite positive. They've maintained a buy and hiked the target price to 1710. They say Q4 continues to deliver. They stay among the top picks. That's ICICI Bank. Healthy operating results and investing in distribution. Some improvement in asset quality, which is holding up with core retail slippages down quarter on quarter. They have cut the earning per share for FY26 to 27 by about 5% to factor the timing gap. Adani Ports was the other one that we're tracking. It's a thumbs up. They've acquired an Australian terminal for a $2.5 billion non-cash deal. They've acquired NQXT, which has a 50 MTPA capacity terminal in Australia. It's a 100% acquisition of Abbott Point Port Holdings, a Singapore-based holding company. And the strategy is in line with their target, which they've set by 2030 for a 1 BMT cargo. So what is NQXT? It's North Queensland Export Terminal, which they have acquired. Now, why is this being seen as a positive? Because this port that they've acquired, the new Queensland port, is located in the company's preferred east-west trade corridor. The EBITDA of this port is expected to grow at 400 million Australian dollars versus 228 in 4 years. The incremental EBITDA margin is over 90%, and the long-term lease of 85 years from the Queensland government is also a positive. It's also potential for green hydrogen exports in long term. Of course, standard disclosures here because you're watching this on NDTV Profit, owned by the Adani Media Group. Eternal is the third stock. Now, this is a slightly tricky one. Eternal is a thumbs down for this morning, but what they're doing overall should be seen as a positive, but immediately you will see some pressure on the Eternal stock today. Now, why am I giving it a thumbs down? What they've done is they're going to be seeking shareholders' approval to reset the foreign ownership limit to 49.5%. The board has approved a cap to FII ownership at 49.5%. The inventory-led model is likely to gain focus. So why have they gone in for this FII cap? You can put that thumbs down in, please, because they've increased domestic ownership and that will aid data localization norms, control over inventory, safeguarding local consumer data. Having said that, that FII cap will trigger passive selling because of the position on MSCI and FTSE. The selling could be as much as $1.4 billion spread over multiple quarters. So that's going to bring in pressure. The FI limit is at 49.5% versus current FPI ownership at 44.88%. Given that headroom is below 10%, weightage in MSCI and FTSE will come down. So expect some pressure on Eternal today because of that news.
So I've got the other big bank, of course, at the top to talk about HDFC Bank, because When we saw the numbers first up, there was a little bit of worry that maybe things were not looking good, but then you look a little closer and they actually look pretty decent. Take a look at the headline numbers. Net interest income at about 32,066 crore rupees, up as much as 10% on a year-on-year basis, up 5% sequentially. Looks solid. In fact, it's above certain expectations as well. Provisions came in just about 1% higher sequentially at 3,192 crore rupees. Again, nothing to worry about there. The PAT number came in at 17,616 crore rupees. This again is a thumbs up as much as 7% year on year, up 5% sequentially. And here's the kicker, because this is what a lot of people are going to focus on. The net interest margin at 3.46% in a declining interest rate scenario, and for a bank that already had a pretty large deposit book, which it was winding down slowly, especially the high cost deposits. This is a very significant aspect to focus on. 3.46% versus 3.43%. Remember the latest update, but this was something that happened just a short while back. It wouldn't have happened in the March quarter. It is that they have cut their CASA, or rather the savings bank account rate, and that's also something that is going to benefit them going forward. So expect there to be a positive effect on the margins even in the first quarter. The ROA as well is up is at 1.92%, and that's up as much as 4 basis points. So like I said, the net interest income is actually above estimates. The provisions are in line. The margins have inched up amid fallen interest rate cycle, as well as the ROA, which is held at 1.9%. All of them bode well for the bank. Macquarie on HDFC Bank, I've picked just one because we're going to talk about more, of course. They've maintained and outperformed with a target price of 2,300. The fourth quarter PAT, they say, is in line. The lower other income is offset by the higher margins. That lower other income, if in fact, was what led to maybe a little bit of a miss on one or two of their metrics, but nothing too worrying there. They are awaiting an improvement in the growth in margins, though, and the growth is set to be in line with the system levels. They also say that the credit costs are set to remain stable. They believe that improvement in the NIMs, the net interest margin, remains a key catalyst for the re-rating of the stock. Remember, this is a bank that has seen its stock price go up quite substantially in the recent past. Infosys, let's talk about the elephant in the room. It's a thumbs down because it was a weak Q4. There's no other way to say it. The revenue was down as much as 2% at 40,925 crore rupees. And I know that Puneet is going to talk about this in more detail, so I'm not going to spend too much time on it. Bear in mind that it was a weak performance overall. And more importantly, and I'm sure that Puneet will speak about this, the outlook for the next year has also been revised lower in terms of its revenue guidance. 0 to 3% is what it is right now, compared with analyst expectations of 3 to 5%. And this is certainly something that is going to be seen as negative by the street. The last stock on my list is Tata Elxsi, and this is a thumbs down as well. A weakness very evident. The revenue is down about 3.3%, and this is on a sequential basis at 908 crore rupees. The EBIT is lower by as much as 17%, and there is a contraction in the margins to 20.1% from 23.5%. The net profit as a result is down as much as 13%. What have analysts said? I just picked one. You have Morgan Stanley on Tata Elxsi. It's maintained an underweight, but it has cut its target price to 4,660, and that's quite a substantial cut from the earlier target of 5,400. What has it said? It said that there are recovery hopes, but there's a lack of macro support. The Q4 missed already low expectations, which is saying something. They say that autos may see some deal ramp-ups, but the media appears soft despite deal wins. The negatives as they see it right now are weak exit revenues, earnings downgrade cycle which continues, and also relatively high valuations for Tata Elxsi. So it's a thumbs down for the last one as well.
Yeah. Interesting on the banks front, particularly in the con call takeaways from ICICI Bank, so much stronger relative to HDFC Bank as well. Yes. So it'll be really good to see if there's a race between the two, who wins today. I'll be really keen to see that. My bet would be that ICICI Bank could be it. Just the con call takeaways were so strong. But the three stocks very quickly from my end. The first one is Divi's Lab, not an earnings thing, but they have entered into a long-term manufacturing and supply agreement with a global pharma company. Whether this is a result of the trade tariff war or just the overall China plus one strategy that global pharma majors may be following is anybody's guess. But the company plans to expand the manufacturing capacity with an estimated investment of 650 to 700 crores because of this. That is a large investment which will bear results over a period of time. But this very likely could actually have a big thumbs up for Divi's today. So watch out for good news for Divi's. So certainly watch out for that stock. Oberoi Realty, their FY25 booking value up 31% is the stated number. If you slice and dice the data, you will see that the Q4 numbers, the units booked were down 65%, the booking value was down 52%. So not the best of quarterly updates from a real estate company. Suffice to say, the stock could react negatively. Watch out for Siemens. That's the third one on my list because Bank of America has come out with a note on Siemens. They say that the valuations are expensive. They've maintained and underperformed. They've cut the target price to 2450 from the current 2810. They say that the energy segment has been demerged and therefore Siemens loses the key driver to growth. And the earnings are unexciting ex-energy with 11% CAGR over FY24 to 27. So they've cut the multiple as well. Do keep an eye out. Siemens could be one stock that could react negatively today. And by the way, speaking of Tata Elxsi, you might see whether maybe there is a collateral damage on some of the other ER&D stocks. Insurance stocks in US were down, maybe Persistent reacts, but so much to pack when it comes to IT. And we'll do it with of course, Sandeep in moments from now. But before that, let me get in Puneet to try and understand what is he made of the earnings season. Puneet.
Well, definitely, the large cap IT players, TCS, Infosys, as well as Wipro, we just look at the 5 key metrics for these companies. They reported results over the last week. Specifically, they were weak numbers. Let's pull up the first table. Constant currency revenue growth, it fell by 0.8% for TCS, down 3.5% on a constant currency basis, quarter on quarter for something like Infosys as visible on your screen, and similar for Wipro, not the greatest quarter essentially. While this was baked in estimates for quarter 4, it's still a very weak number, ending FY25 on a somber note as well. EBIT margin growth was down 30 basis points for TCS, 20 basis points for something like Infosys. They did have a salary hike impact as well on EBIT this quarter, while for Wipro, it's largely remained flat at 17.3%. It's the lowest amongst the 3 in terms of the absolute EBIT margin numbers. When you also look at, the TCV growth, and that was, I think, the only silver lining essentially. The deal wins was very strong in this particular quarter, 19% quarter-on-quarter growth for something like a TCS, while Infosys only reports the large deal wins, which have been slower for most companies, 4.2% growth for something like an Infosys, while for Wipro, it's been 13% quarter-on-quarter. But most brokerages have come out and mentioned that the deal wins is not translating into revenue as well as profit growth, and that's visible because of longer lead time for ramp up of these particular deals. When you also look at the attrition rate, and that's something, while it is not alarming levels, it's still starting to inch up on a quarter-on-quarter as well as on a YOY basis. So for TCS specifically, you've seen a 30 basis point increase in attrition on a quarter-on-quarter basis, 80 basis point on a year-on-year basis, while for something like Infosys, it's much starker. 40 basis point on a quarter-on-quarter basis, 150 basis points on a year-on-year basis, and similar feat for Wipro as well, an 80 basis point growth on a year-on-year basis, while quarter-on-quarter it's actually fallen by 30 basis points. So that's the only one. And finally, in terms of guidance, and we've spoken a lot about this, TCS does not report any kind of guidance for FY26. On the other hand, Infosys has come out with a 0 to 3% growth for FY26 in terms of revenue, constant currency. That was expected to be between 2 to 5%, so another lower. And for Wipro, they only report guidance for Q1 of FY26. Essentially, it's expecting a 3.5% to a negative 1.5% fall in revenue in Q1. So essentially, large cap peers, we'll see HCL Tech report results tomorrow. On 24th, we are having 5 mid-cap IT earnings. It's expected to be somber, but growth commentary for mid-cap IT is expected to be better than large cap. But overall, lots more to discuss with our next conversation going into IT as well as the earnings this week.
Thanks for that, Puneet. Let's put all of that into perspective with Sandeep Agarwal, fund manager and co-founder of Sovillo Investment Managers. And Sandeep, usually we talk about everything under the sun with you. Today we are going to keep it focused to IT. Good morning and thanks for joining in. Before we get to the results, Sandeep, and the larger results, can I start off with the smaller ones and just trying to understand? the commentary that is coming from Infosys around the European auto space is not that constructive. Tata Elxsi numbers also showed chink in the armor for them. Would ER&D stocks be under pressure because of this? And while valuations have corrected, is there room for more correction for ER&D companies?
Hey, hi, good morning, and thanks for having me on the show. So yes, as you rightly mentioned, there are multiple problems the companies are dealing with. The challenge with the good quality mid-cap names, particularly in the ER&D, whether it is Persistent, KPIT, or Tata Elxsi, LTTS, all of them is that they are insanely expensive. And insanely expensive means that they have to grow at 25-30% revenue growth consistently to maintain that multiple. Unfortunately, there are multiple problems which are going on. Remember, there is an issue in the auto space in Europe. More than that, there is also issue in the whole manufacturing space, and there is uncertainty there. And third, I have always believed that while the IT companies 90-95% exposure is to exports, and whenever there is an uncertainty on the global growth rate, they hit very hard, because IT is a very typical industry where 80-90% of the business is super important, super indispensable, and that never gets touched by the client because it is primarily annuity maintenance kind of revenue, which runs their day-to-day business. But 10% to 20% business is such which can be postponed, delayed anytime. And I think IT companies have always suffered because of this 20% business which gets postponed or delayed on slightest of uncertainty. And right now we are dealing with much higher uncertainty. So that is the reason, last 7-8 months, we have been consistently saying that the sector is too hot. It is very, very expensive. And in our coming presidential election and uncertainty, the stocks will be at risk because of time correction and valuation correction, not with so much with the, growth correction.
Okay. So at this juncture, Sandeep, hi, morning. It seems like, at least for the large caps, and we've got Infi to talk about as well. There is quite a bit that seems to be priced in at this juncture, because that uncertainty that existed last week, the week before that, it hasn't changed today. So from that perspective, do we stay very far away from these companies? Because I know that a few brokerages are still going out and saying Infi relatively buy, because when the bounce back happens, relative valuation comfort is there, and so you can add to it right now.
So the large caps have corrected meaningfully, both in terms of, they are down 30%, and also there has been time correction. Secondly, in large cap, the dividend yields are phenomenal, like, more than 4%. So there are many funds globally which would like to buy these stocks because they run dividend fund. And I think that is the reason there would be support at some point of time for the large caps. And they are not so expensive, like, they are expensive. You put them relatively to their growth rate. The PEG ratios are high. But at least, you would not shy away from paying a 15, 17, 18 multiple to a TCS or an Infosys forward multiple. And that at some point of time, they will find buyer. But the other companies which are, particularly good size mid-cap companies, they are really, really in challenging environment. And also large, they don't have so much of annuity business. So they have a lot of discretionary pieces. So the fall there will be very sharp in terms of growth and earnings cut. And because of that, this multiples at which they are trading are very, very unsustainable. So I think more pain for the good quality, expensive mid caps versus large cap. Large cap, I think, are now close to where, they can make a bottom, maybe 5-10% more.
Sandeep, hi, good morning. Tamanna here. I'm just wondering, what should be the view on IT in this case? You might, after the kind of bottom that have been made, see some kind of an upswing, maybe momentarily. But is the long-term view on IT souring in your view? And in that sense, how would you rank in Infosys, Wipro, and a TCS, considering all three numbers are out now?
No, so, Indian large cap IT companies, this industry has reasonably matured. So, this industry now should be looked at 7-8% CAGR growth. And whenever situations like COVID happen, when 1 year there is no spend, next year that spend will recover to 16-17%. And the operating leverage is so high that if your growth rate doubles from 7-8% to 16-17%, it means the margins also expand substantially till attrition starts coming and hitting you. So I think, this is the industry where you have to see it as a package that, it is a very, very defensive nature of business, very good dividend yield story. So they will always be little expensive in PEG ratio terms. But again, these are very, very, you have to have them from a defensive point of view in your portfolio. But don't expect very high return from this industry because it is fairly matured and penetrated now, and very big executions they are doing. So very difficult to grow at double digit and such rate on a structural long term basis. They are all 7-8% growth companies now.
Sound more than the rate of growth, Sandeep, is whether they're going to survive the kind of disruption, sectoral disruptions coming in. And, that's where the question mark really is. And I'm not just talking about tariffs and recession possibly in the US and economy, etc., but the tech disruptions in this field.
So, it is a very good question, but let me answer it this way. If you see last 30 years of data, Indian technology company, or for that matter, any outsourcer, has massively benefited from tech disruption, because tech disruption only gives you higher efficiency, but never lower cost. So they have always benefited. What they have always suffered is uncertainty on GDP growth rate, whether it was post-Lehman crisis scenario, whether it was COVID scenario, wherever. Disruption actually is very helpful. It is only painful for first 3-4 quarters till their workforce is not trained in that technology. After 4-5 quarters, once their 30-40% workforce is trained in new technology, they again, clients will come back to the larger vendors who can execute at scale and at a much cheaper cost. So we are software factory of the world. There is no doubt about it. So however, how much ever, disruption keeps coming, we will finally, after 4-5 quarters gap, we will train our people in that and we will start executing at scale that new technology also. So I'm never worried about disruption. Actually, disruption gives opportunity to the long-term investor to buy at a very cheap price. I'm always more worried, and because of the GDP uncertainty, the growth rate uncertainty for the client markets, that is something which postpones, delays for a long period of time the spends. So that is always more disruptive from the stock perspective rather than tech disruption.
Sandeep, we're speaking, of course, ahead of a raft of mid-cap earnings, and I'm guessing the pushes and pulls are slightly different if you compare them with the very large IT companies. And so from that perspective, what specifically would you be looking for in those prints? And at this juncture, if the opportunity arises, because we've seen in the recent past that when the street punishes, it punishes with a broad brush. So if there is an opportunity in the broader end of the market, some of the mid-cap names, what would you suggest going out and buying based on your expectation of fundamentals?
So, the challenge right now in the mid-cap is that if we are willing to assign, 3.54 times PEG ratio also. But the challenge is that we don't know what is the growth. So growth rate forecast may be 20% growth, but it can fall to 5% because they have much more discretionary proportion compared to the large cap IT names. They have a very solid backing of annuity businesses. But the mid caps, because they do a lot of innovative work, lot of time and material projects and all. So the risk to their growth itself is so high that whatever PEG ratio you assign, it may look much higher than that. So that is the challenge. So we are honestly not looking at any mid cap right now. We are only looking at large caps. And again, in large cap also, our belief is that, we are not comfortable at the current multiples, primarily because, we have to see some ray of hope on recovery of the growth rates in the economic growth rate of the client markets, because that is where, they can drag for long. And in that case, the time correction could be sharp. So we will wait and watch. We are not looking at any of the tech names right now, but yes, I will say that large caps are relatively well placed.
Caps are relatively well placed. I mean, I don't know how that's really going to look on a relative basis. Maybe you'll see some recovery here after the kind of hammering all of last week. Thank you so much for that, Sandeep. Always a pleasure to have you on. Let's welcome now Kush Bora, founder kushbora.com, in our studios this Monday morning. Parag Thakkar, head fund manager of Fort Capital, also joining in the studios. Great to have you here, guys, as always. Soni Patnaik joins in, AVP JM Financial Services. Soni, since you are not in our studios, I'm going to start with you so that you don't have, they don't miss out on all the excitement we are seeing over here. Can we have the bulls in charge this week? What's your take? Let's start with your index take first.
Hi, good morning, everyone. Thank you for having me on your show. Yes, I think, just to simply put it to your question, I think, yes, the bulls can take it in charge. We have seen a strong close above a 200 DEMA for Nifty, which is above its 23,400, 23,500 support. So I think that support may hold for this week as well. Ideally, before all the global impact that we saw over the last 1.5 weeks, before that, Nifty I was heading towards 24,000 before all the drama happened, and I think it's reiterating to those levels back again. So anywhere towards 24,000 to 24,200 is a range where we can see for Nifty this week. And the support has risen towards 23,500. So any dip that you may see towards a 700, 650 range can ideally be the accumulation zone or a zone where you can reinitiate your longs. Keep a stop loss of 23,500 on a closing basis, and towards 24,200 one can look forward to book profits and again buy on declines. I think that's the strategy to go forward, and there are multiple stock specific strategies that also one can apply, and both could be on the longer side.
All right, Sony, before we get to your picks, I think we should talk to Kush as well as to whether or not he sees that momentum. And last week we were talking, of course, curtailed week trading wise, but then if I remember correctly, you were talking about buy on dip strategy. Yeah. Does that exist right now, or do we see some bit of the steam fizzling out?
Sure. So first up, bonjour. I think the tone of the day is French, right? Today, so
guys, my legs are long enough.
We'll keep pulling them all day long. So, no, but the tone of the market thankfully is green, right? Just to answer Alex's question very pertinently, very pointedly, yes, the texture of the market right now is buy on dips. You could see the extension of this rally. So let me give two views on the market right now. If you have a long position and a slightly medium-term view, then by all means continue to ride your long positions. No harm, the momentum could well continue. You could see some volatility. But if you're looking to create fresh long positions, that's when you should wait for the dip. 24,000 is a bit of a resistance. The 200-day moving average also resides somewhere close to that. Call writing also seen around those levels. So you could see some pause around that level. But as I said, that's most likely to be a pause. 23,500, 23,600 thereabouts is the support. So if you get a pullback closer to those levels, the risk reward ratio will be a lot more favorable. So yes, the buy on dip strategy continues for anyone who's looking to invest or create long positions of fresh. If you've got long positions, continue to hold. You might be sitting on quite a handsome profit at the moment. Keep trailing stop losses in place. But on a broader picture note, I think I would have ideally called the bottom on this market, with the kind of moves that we've already seen. If it wasn't for the Trump volatility and the impending, yen carry trade fears, which not too many people are talking about right now, but continues to linger on. Anyway, we discussed as 21,500 to be the bet your house kind of a level. We came very close to that 21,700 thereabouts. So I think we'll take that, 4,000, 4,500 points from the top. If we do revisit those levels, then it will be a good idea to start accumulating, or perhaps even, as I said, philosophically bet your house kind of a level. That view still remains. On the whole, from a very near-term perspective, Nifty's hit overheated territories on the shorter-term charts on the momentum indicators. What's happened is that because of the weekly expiry, the PCR has been reset, and there could be an extension of this current rally. But that's about it from a near-term perspective. If any fresh positions have to be created, they should ideally be done on dips. As I said, long positions from a position standpoint continue to hold on.
What about stocks is the key question, right? Sony, I'll come to you first. What are the stocks that you are giving out in such a quote-unquote bullish scenario?
So Neeraj, it would be both our official recommendations actually, which we have recommended to our clients of JM. The first buy pick comes in CDSL. So the strategy is to buy at current levels with a stop loss of 1190 and a target towards 1320, 1350 can be seen. So the stock has given a decent close above its short-term moving average, and also if you look at the option chain, it has given a very strong option chain breakout above a 1220 level on a closing basis. So based on these positive parameters, we are recommending a buy in CDSL for 1320, 1350 targets. The second buy pick is in Naukri InfoEdge. It's a bit of a conditional buy that we're seeing. So if it's able to cross a 6770, 6780 odd range for the day, it can give you a good range breakout, and the targets would be towards 6900 to 7000 levels. So one can take a buy at current levels keeping a stop loss of 65.50 and a target towards 6,900 to 7,000 levels can be seen.
Okay. Kush, what about your picks this morning?
Still going with both trades on the long side. Financials have to make the cut, right? I mean, with the kind of moves that you're seeing. So this time around, it's Canfin Homes. Good run up. The stock seen, a goodish bit of recovery. There is a rounding bottom formation, resistance near the 700 mark, which was taken out on the back of good volumes in a curtailed, trading week. So on the long side, you're looking at targets of 725, 740, and 697 is your stop loss. From the power space, GMR Power. This is one stock which also has completed the rounding bottom formation near the 132 mark. Here also you've seen good delivery volumes pick up. There was a gap up trade, but that has sustained over the last week. So from a long perspective, 138, 142 are your targets, and 130 is where you place that stop loss.
What about an ICICI Bank? Would you still buy it, Kush?
Very similar view to the bank Nifty, which I think I didn't discuss in detail, which is that, incidentally, bank Nifty has moved 12.5% from the lows, which is, or rather 14%, I'm sorry, which is actually higher than the mid-cap index, which has gained only 12.5%. So the move has been stellar. But the view is very similar to what it is on Nifty. The rally could well continue, and it will in all probability continue. But do you create fresh long positions? I'm not so sure. So a buy on declines is a prudent approach. The same thing applies on the likes of HDFC Bank and ICICI Bank. Buy on dips is the strategy for fresh positions.
Where is the dip going to come, Parag bhai? Where is the dip should be a likelihood as well. After you've seen the results this weekend, what do you reckon? Do you think that this extent of positive, commentary on the results has been priced in already, or there's more to go?
Yeah, so basically, if you remember, last many shows, as Neeraj was also saying, that I was always constructive.
Yeah.
In domestic-facing stocks like banking, cement, these were my, or NBFCs for that matter, good NBFCs. So I would say that I would completely agree with Kush. I could not agree more that I would not jump and buy today because the numbers are good, definitely, and they were priced in by this 14% move in Bank Nifty, especially in large caps. And see, my principle is this, that when others are fearful, you have to be greedy. So I was greedy at that time, and now I'm fearful.
You're fearful now.
Means I'm saying that I'll not buy. I'm not saying that I'll sell. But I'm not going to buy on today's 3-4% gap up opening.
Basically, you're going to look
banks,
at this.
you mean?
Yeah. All the banks are going to open gap up, right?
You're seeing a 3-4% gap up opening for the banks today.
No, it might happen. I'm not saying that it might happen. The ADRs were up, right? So I'm saying that if they open 2.5 or 3% up, I'm not going to jump and buy because remember one thing, that in February the rate cut started, right? And then in April again there was a rate cut. All this will play out in June quarter. So there will be some margin compression from here on, which has not played out in this quarter.
Okay.
To mitigate this, banks have reduced deposit and saving rates, because all thanks to RBI, which has given a fantastic liquidity cushion, so that deposits are easy to come by. And so banks have been able to reduce deposit rates and SA rates both. Which will to some extent mitigate the margin pressure. But I would say that still, I think margins for large cap private sector banks, we might be staring at some decline going ahead as the, and that will be a quarterly phenomenon. That will be a quarterly phenomenon. At the end of this cycle, again, the NIMs can stay here.
But how is it that ICICI Bank, for example, has actually not spoken about that at all? In their con call, they have largely sounded very constructive, even as HDFC has said that they might see some pressure.
So basically, ICICI Bank, after Mr. Sandeep Bakshi has done phenomenally well. I know when he came, the stock price was 300. Today it is 1400, it is going towards 1500. So he has made the stock 5x. He and his team, the entire ecosystem, right? They have done phenomenal job. So this quarter also, see, their SME portfolio, business banking, which is what they call it, has grown by 33% YOY. Right, so that is how they have protected their NIMs in spite of very low loan book growth, right? Because they went and landed to a segment where it was a secured segment and still was yielding higher margins. So their NIMs are 4.41%, right? So they continue to do this every time they surprise. How they manage to surprise the entire street so well is something which is very, very commendable, and full marks to Sandeep Bakshi ji and his team for that. Yeah. So I don't know whether they come out with something which is not known today and again protect the margins next quarter. One thing which I can make out is they have reduced their CD ratio this time. So they again have an operating leverage now. Their CD ratio is now 83-84%. So they again have operating leverage. They don't have to grow their deposits in line with advances, which many other banks will have to do.
Just on the contrarian view that you're talking about, Parag Bhai, would that apply at all to an Infosys? I'm saying because the expectation was of a weak quarter, and on those metrics is there. Maybe some would argue in relative terms, not as bad. The worst is baked in, built in. Would you apply that at all to any of the IT pack and an Infosys today?
So I was always saying that I only have one IT stock in the portfolio, in the entire portfolio, which is TCS, which is 5% weight in our portfolio. So on overall basis, I am strongly underweight IT and any other US facing businesses in my portfolio, I would say, because still this entire tariff saga is on. Imagine if you are in US and if you are a Walmart, how would you spend money now? How would you do a discretionary spending now? You don't know your costs. It will only get, once US and China settle at something, or on 9th July when reciprocal tariff gets, withdrawn and reciprocal tariff thing, it settles down. It is very difficult to imagine that US consumer is going to increase his discretionary spending. So till then there is an overhang. There can be trading rallies in between.
Yeah.
Because when market gets oversold, definitely there will be some people who will do value buying, and so it will recover by 7-8%. But as a structural theme, I would still like to be a little bit cautious on any US facing businesses for that matter.
Which leads into the conversation, the takeaway from the large IT companies, that TCV is there, but it's not converting into revenue growth.
Yeah.
So push it down the line. We'll speak about that in a lot more detail and individual stocks. We've got more to cover, of course, before the start of trade. We're slipping to a very quick break. More on the other side. Stay tuned.
India specifically, I really think India has a fascinating opportunity, because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
The first stock on the list is it's IGL now. If you see the stock that has perked up around 4% in trade, and this is largely on the back of the buzz that is on the street, that the company might announce a price hike of anywhere between 3 to 4 rupees from the 1st of April. Now this might as well happen in phases, so keep an eye out for IGL. Now this stock had to, the company had, in fact had to take a price hike post the Delhi election, because the cost of gas had increased for them, and because of that the margins had come down, but they had not taken any price hike so far. So the street is expecting a price hike announcement to come in, which will be effective from the 1st of April, and it could be around 3 to 4 rupees, and it could well be implemented in phases. So keep an eye out for IGL.
Do you really know the company you invest in?
Welcome back. Just a couple of minutes for the pre-open rates to hit, and let's look at what the implied is showing us, about 18 points. But honestly, this could go any way once we open. We'll have to see what the mood is. What is pretty clear is that you could see some pressure in Eternal. The counter is in focus after its board has approved an FII ownership cap of 49.5%. Now, we're going to look at this story from two angles. Mahima and Somit are both joining me on this. One is, what is the strategic aspect of why Eternal, which is Zomato, of course, now known as Eternal, wants to go ahead and cap the extent of FII participation in its stock. And then Somit also coming in to tell us why this is going to be a down day for Eternal at the start. But Mahima, let me start with you to understand strategically why Eternal wants to do this.
Right, so there are two things here. As you rightly mentioned, the board has approved an FI ownership cap at 49.5% from 100%. And the second thing is that this will also lead to an inventory-led and this will likely gain focus post the FI overall holding is trimmed. Now, in terms of what has happened so far where fundraising is concerned for Zomato, Zomato had recently come out with their QIP and raised around 85 billion. Now, in terms of that, 8% was subscribed by leading DI funds, and post the QIP, FI ownership fell to around 47.3%. DI ownership increased to 20.5% versus that of 17.3% earlier. Currently, DI ownership stands at around 23.5% and FI ownership stands at around 44.4%. Now, what does this lead to overall? Increase in domestic ownership will overall aid data localization norms, also see control over inventory and safeguard local consumer data as well. An inventory, heavy-led model will also have better control over product, quality, pricing, improved consumer experience, higher margins through bulk procurement, easier promotion on private labels, as well as enhanced delivery-led time as well. But there are also changes where the overall inventory-led model is concerned. It requires stronger grip over operations, requires higher working capital in order to store the inventory, and the risk of unsold and obsolete inventory will be high and might negatively impact the overall margins as well as profitability. Now, Elara did come out with a note on this. They've maintained buy with a target price of 300. What they're saying is that Nykaa follows a similar model, and because of which they've overall enhanced customer experience. And the entire story that Zomato is now trying to trim FI ownership also indicates that Amazon and Flipkart are preparing for their IPO as well. So this is the overall view as to how and what will happen to FI holding in Zomato, and that is Eternal.
Somit, in fact, let's just get the other aspect of it. So it sounds like a good plan, right? There's a strategy behind it, but technically that board decision will impact flows today.
Yes, fundamentally it seems like a strong plan for Eternal going forward, but yes, because of this FI limit cap that the company is looking to put, there could be massive MSCI and FTSE passive selling that we could see. Not today, over a period of quarters, but yes, this is expected to come given the fact that there would be a cap on the FI limit, and there could be outflows of nearly $1.4 billion when it comes to Eternal. Now, why this selling is expected in Eternal, which is earlier known as Zomato, because if you look at the difference between the proposed FI limit cap, that is 49.5%, and the current FI holding in Zomato is around 44.88%, which means that the headroom between the proposed cap and the current holding is less than 10%, and whenever there's the headroom is less than 10%, the weightage of Zomato or Eternal in the MSCI and FTSE index will come down, and because of this we could see this passive selling when it comes to the MSCI and the FTSE index. Now, for MSCI, the current weightage of Zomato is around 1.33%, and this could halve, which could lead to an outflow of close to $600 to $800 million after the review, and this review might happen in May 2025 or in August 2025. So, for when it comes to MSCI limited outflow, there is around $600 to $800 million of outflow expected, but when it comes to FTSE, the current weightage stands at around 1.17%, and whenever the headroom comes below 10%, it leads to deletion of a stock from the index, which means that Eternal will move out of the FTSE index, which could lead to an outflow of anywhere between $500 to $600 million after the first review happens, and the first review is expected to happen in June 2025. After that, every quarter, whenever the headroom is less than 10%, there could be outflows. So over a period of 4 or 5 quarters, there could be outflows of anywhere between $70 to $100 million for Zomato. So there would be overall outflow of close to $1.4 billion when it comes to Zomato, because the headroom of FII limit is coming below 10% post the proposed cap of 49.5%.
Thanks a lot for that, Somit and Mahima. So that's well covered. Now, Parag Thakkar, the views are differing here, right? The stock is no longer at 280, but it's not at 200 either. Suffice to say, it might correct today or the short term. Now, is this weakness until the Zepto IPO comes out likely to stay? Because that's the other conspiracy theory. And would you use that weakness to build positions in what is arguably one of the many futuristic businesses in India at least?
So I would, so I have always said that I would refrain from commenting on these stocks because this falls out of my circle of competence. But just to tell you, just to tell you
not a buy sell recommendation.
What is going on in my mind, I'll share with you.
Sure.
That till now we don't have position in Eternal. My thought process is that, as you very rightly said, that this long selling, I think it is $1.4 billion, which is around 13,000 crores spread across multiple quarters. So it is going to give us good time to study the business, good time to study the competition in the business from Zeptos and Swiggies of the world, and then take form a view. And I think we have to be patient enough and to buy after forming a very good view. And market is offering that opportunity. So I would take it as an opportunity.
I'm curious, Parag bhai, now you want to start studying Eternal, but knowing you have already looked at it very closely. Any reason why you've stayed off a stock everyone is so excited and bullish about?
Yeah. So basically, ultimately I want profits. That is my key thing. Actually I was very bullish in between, but when they bought Blinkit large stake, and Blinkit was also burning cash at that time. Full marks to the management of Zomato for turning the Blinkit around very fast. And so that is why the stock got re-rated, and today market cap is around 2.2 lakh crores. So I think sometimes, you cannot have a complete control. And as such, as I told you, I accepted that my circle of competence in this kind of businesses.
So Eternal was a miss for you?
Yeah, you can say that.
Okay.
You can say that.
That's what I love about you, Parag bhai. You're like very honest about it. On the chart, Sony, on the charts, Eternal?
So, Tamanna, we can see the stock actually has recovered and given a strong close on above 215. So I think that could be a short-term support one can see just around the corner of 200 DEMA. So if it continues to stay or sustain above a 230 to 35 range for the day, possibility that it can head towards 250 in near term. In any way, I think 220 to 15 is still that support level. So it has to be a positional play, not an intraday, and to continue up to 250 can be the targets.
Okay, very quickly want to go to Parag bhai on banks, because he made a statement. He said banks relatively on the larger end, at least, you're going to be staying away. You were bullish, you deployed a while back, now you're going to sit and maybe look at the screen and smile. But are you going to deploy in any of the banks, given what you've heard so far?
Yeah. So basically, I would say that, so Federal Bank comes top on radar. And I am not hesitant in saying that what attracted me to ICICI Bank after Mr. Sandeep Bakshi took over. I think in Federal Bank also same thing can happen with Mr. Manian, Mr. Manian coming in. See, Federal Bank. Yeah. So I would like to say that it's a large holding for me with full disclosures. That there is a vested interest from my portfolio and my clients' perspective. So I'm not recommending for intraday or something like that. It's but I would say, see, all the basics are in place in Federal Bank, right? They have got a very good deposit franchise. They have got a very good calibrated lending. They are not over bullish on. They were not over bullish on microfinance or such sectors which were very juicy. So they have stayed away from that. They have stuck to their core, retail, SME kind of thing. They are already above 1% ROA bank, right? And now Mr. Manian will try. Of course, this year will be difficult because this year you are in a repo rate cut cycle. So I think, but from next year you will see improvement in ROAs also. They are well capitalized, very good balance sheet. So I would say that, and very attractively valued at 1.2 times FY27. So I think I am expecting wonders from Mr. Manian. Let's see. So other thing which I am betting on is IDFC First. Again, because of this capital raise, I feel that, of course, they will have some hiccups in Q4 and Q1 because of the microfinance exposure. But I think with this capital raise, that will be taken care of.
They've done 3 capital raises. The previous 2 at higher prices. If they've not been able to manage growth with earlier capital raises.
They've managed growth, but the problem has happened due to this microfinance book. So 900 crore is a loss.
So now it's sorted, you think?
I think in next 2 quarters it will get sorted, but that is already called out. The management has already said it, that it is going to happen. So in next 2 quarters it will fizzle out. And then now they will have enough capital. And third one after and this again I'm saying this is not in my portfolio, but the thing to look out for is Yes Bank also. I saw the results. I think they are doing basics right in terms of what a bank should do. That is why your loan book growth was minimal, but your profit growth was 63%. And profit growth was 63% because of control on OPEX and good asset quality, better asset quality. And so I would say that Yes Bank is something also which will be in my radar from now.
Okay. I'm just glad you brought out Yes Bank. It's a top gainer on the Nifty 500 this morning because of results. Kush, very quickly on charts, Yes Bank.
Well, you are seeing an uptick. I mean, that can't be denied, but it's not really given those kind of returns in the past. So hence the skepticism. But purely from a technical standpoint, 20-day, 50-day moving average taken out, you're looking at higher levels of 19.5 and even about 22 kind of levels coming in play. Stop loss comes in at 17.5.
I just want to mark, now we go to the big brokerage call, but just want to mark Divi's because I think it's starting off really well. 3.5% higher because of a large contract. And Eternal, because it was flat when we were speaking about it, but 8 minutes are gone by, starting off about 1% lower. But the big brokerage call for the day today is the BOFA note on Siemens. They've maintained an underperform on Siemens. They've cut the target price to sub 2400. It's opening in the green at 2846. Harsh, what is BOFA's rationale?
Well, 13% odd in terms of a downside, of course, to yesterday's or rather Friday's close, or rather Thursday's close. Now, in terms of the demerger itself, they believe that Siemens Limited actually worse off with regard to where the demerger is because they're giving away a very high growth segment. The energy segment, and they've broken down this contribution nicely for us, in FY24 has contributed to 37% in terms of order flow, 31% in terms of revenue and 35% in terms of profit after tax. It's the higher growth segment therefore. The 9 lakh crore capex just adds to the kind of visibility that Siemens Energy can bring to the table. They believe that energy is likely well placed to capture 50% of the market share in terms of large orders which are coming through, and therefore the opportunity is significant. Siemens Energy, in contrast, they're expecting just a 11% CAGR in terms of revenue growth, whereas for Siemens Energy, X-Energy is 11%. For Siemens Energy, it is actually 26% CAGR in terms of revenue growth expectations, so significantly faster. The X-Energy business could start to see earnings cuts is what BOFA is putting out. The energy segment contributes around 41 to 43% of earnings for FY25 to 27. That's the expectation. They're valuing Siemens Limited, therefore, at 44 times earnings. And they're reiterating their underperform because the stock currently is valued at 52 times earnings. And therefore, bearish with regard to this one.
Okay, thanks a lot for that. Interestingly, in the green right now, Siemens. Keep an eye out for that. Soni Patnaik, on the charts, anything on the derivative positions on Siemens?
So, Siemens is also looking strong. In fact, it has a good base around 2,700 odd levels. So, if it continues to hold that level, which is where we can find the maximum put writers, I think if it continues to hold, it can test towards 3,000, which is going to be the next level of resistance. The moment it's crossed and closed above the 3,000 mark, positionally stock can retest its highs of 3,400, 3,600 positionally. So I think one can continue to hold on to the longs with the 2,700 as a closing stop loss.
Okay, keep an eye out for the tech names. I don't know. We took the technical view on Eternal as well, but the Tata Elxsi's, Persistent Systems, KPITs of the world on the back of weak numbers from Tata Elxsi and commentary not looking strong for European automakers. Kush Bora, any trades here? Elxsi, Persistent, KPIT, and LTTS. Any of them?
if at all you've got to pick one, there'll be short trades only.
Of course.
On all of these. Tata Elxsi was one stock that we had recommended short on last week for targets of 4,700 and 4,600 with a stop loss around the 4,900 mark. That view still continues. There has been nothing, at all.
Can you do a fresh one?
Absolutely. 47, 4,600 target, 4,900 stop loss 1:2 risk reward ratio, volumes going up on the short side. So yeah, Tata Elxsi is a short.
Sorry. Go ahead.
I was just wondering about Cipla because there's good news or relatively no news is good news kind of a situation for one of their plants. It's up about 0.6%, moved very quickly. Is there a trade here, Kush?
I'd wait it out. 1535 is where the rounding bottom resistance comes up. So if that is taken out, during the course of the day, then perhaps. But otherwise, you could see, some profit booking coming in. It's already seen a very sharp up move. Plus, as you said, no news is good news kind of a trade is not really something that you'd want to play in this sort of a market. You'd rather prefer more clear, up moves. So for me, this is a book on, sell on rise kind of a situation right now.
No, sorry. What I was asking you is that, what is the Nifty trade? I think the most exciting trade this morning after the pre-open is going to be the Nifty. 24,000 in view. And then now how do you open?
See, 24,000 is more of a formality now. Even if you hit that, it's a done deal for all money. Bank Nifty all-time high, so done deal. You take profits off the table and you wait on the sidelines for a dip. As we were discussing offline, the dip is perhaps just one headline away, so you don't know when that will come about. But yeah, a buy on dips is what you should implement on Nifty and Bank Nifty right now.
I mean, we should have a little more fanfare at this juncture because we have hit all-time highs, or we will when things open up. Obviously, we're talking about a 1% up after the pre-open trade for the Nifty Bank at 54,891. Let's see how far we go today. And that's, of course, the Nifty 50. Take a look at the Nifty Bank because we were just about 177 points away from the all-time high at the close on Thursday. And we've, as things look like right now, up about 600 points, Neeraj.
Yeah, well, this is what very interesting times look like, that the largest sector by weightage is doing well when all of last year, 2024, it was largely written off as an underperformer. And boy, are the banks coming. I must say, it's not that HDFC Bank has really come back to the fore as much, but some of the others are certainly doing really, really well. But here's how we are starting off. 1/3%, Bank Nifty 1% higher. IT, I reckon, should be underperforming very quickly. Just pull that one up as an index. And then instead of going to mid caps and small caps, or maybe we can do that as well. Nifty IT, 1% in the green. Very interesting. Keen to see what's looking on the heat map. Mid cap, small cap, very quickly. 0.5% higher. Okay, green all across. Let's get the heat map and show you what stocks are actually dragging the index lower. Okay, Adani Port down 2%, HDFC Life, Eternal, Ultratech, Asian Paints, HUL. So FMCG looks like the one which is pulling the index lower a little bit because IT and banks are doing okay. Tech Mahindra and Infi, both of them. Wow, there's something happened in IT today. Techem, Infi, HCL Tech, Wipro, all of them in the green. Is it got to do with some bit of trade deal that India is signing? I couldn't think of any other reason. I mean, I'm missing any reason why this is happening, but clearly there is concerted buying happening in IT. We thought banks would be the showstoppers. I must confess, IT is the showstopper right now. Tech Mahindra is up 4%. Infosys up 3% on the back of those results. Nothing dramatic about that. Is it that the correction has been done quite a bit? HCL Tech, Wipro, everything in the green. Not to take away the fact that HDFC Bank and ICICI Bank are in the green, coupled with Axis Bank and SBI. I can't take my eyes off IT. Okay, Adani Port is sulking really badly on this deal. 4% lower, 3.5% for that one. And HDFC Life is reacting to numbers. Eternal, a muted 1%. Let's see if there is more in store. But this is quite dramatic, really, what's happening in IT this morning, Tamanna.
Yeah, I mean, what we discussed earlier, maybe overdone on IT selling. And Infosys has not disappointed as much as expected. That could be one reason. Tech Mahindra will report, of course, this week. But Bank Nifty is the stellar move, has hit an all-time high. And look at the leaders over there. AU Small Finance Bank contributing to that. IDFC First contributing to this. Remember, IDFC First under pressure because of further equity dilution, but the street liking what it sees and looking for new leaders in this space. Axis Bank as well joining that party. HDFC, ICICI Bank is a no-brainer there, but of course that's moving ahead very strong. IndusInd has had some changes in the top deck of management that have been announced, and that stock about 2% up. Kotak Mahindra Bank the only one in the green. But let's look at the broader indices as well. Is this just a bank Nifty and Nifty story? No, you have 0.5% up on the Nifty Mid Cap 150, the small cap also about 0.5% up. So not a bad morning at all. I'm waiting to see if the Nifty hits the 24,000 mark in the first few minutes. We'll keep an eye on that for you. Let me pull up the sectoral indices for you very, very quickly. And it's the banks that are going to be dominating there. The Nifty Private Bank 1.5% up, Bank Nifty up as well. But so is Nifty IT. And this is interesting about the kind of up move you've seen. Has the complete sell-off in IT been done now that the results are over, at least of the top three? I suppose that's the question the street is asking. Is the picture not as bleak as it would seem? Nifty PSU Bank's also doing well. So the top line is all about BFSI with IT there supporting as well, which is why you're seeing inherent strength in the markets today. But let's pull up individual stocks and look at what's happening there. So we told you corporate results is going to be in focus this week. Let's pull up what's happening with a clutch of them that have reported over the weekend. Yes Bank, Just Dial, Tata Elxsi make the cut there. Just Dial and Yes Bank, both stellar set of numbers. And especially Just Dial, much better than what the street expected. 8% up this morning, could well be the stock of the morning. Tata Elxsi and Mastek actually were not a great set of numbers, but the mood seems to be very positive on it. Mastek now dipping in the red. Divi's Lab has been in focus because of a large contract that was announced, 4% up on the stock. JB Chemicals has an approval for a new drug. That stock reacting mildly, just about 1% up. Oberoi Realty booking numbers weren't that good this quarter. The stock about 2% down. And we're seeing Devyani International as well. An acquisition news has come in. That stock about 2.5% up. So you have some movers there, but the broad move quite positive this Monday morning, Alex.
Absolutely. I mean, you can look down the list of the stocks, of course, but you have to mention the Nifty Bank at the start. 800 and nearly 900 points, 1.5%. This was expected, but I want to talk about the unexpected at this juncture. We have to. Let's pull up the Nifty IT to see whether it's still holding up. And wow, it is. In fact, so 300 points. And what's contributing? You have the likes of Tech Mahindra, which has cooled off just a tad bit, but it's still up about 2.4%. You have Oracle, you have Coforge, Emphasis, HCL Tech as well. Some of these stocks, Infi, by the way, it was being written off and was a thumbs down based on the outlook for the new financial year, and in fact the fourth quarter up about 1% or so. So, Kush, I'm just wondering if anybody had placed a bet. How do you extricate yourself? Because I'm guessing that the bet was placed on the downside for IT. Do you extricate yourself very quickly, and what is the potential on the upside?
You stay put, Alex. I think this is more of a FOMO rally. This is the only sector which had seen consistent negative views, be it from the fundamental side or technical side of things. This is more of a short covering rally. You look at something like a TCS, it's already in the red. Infosys has given up most of the gains, of the open. Not saying that, this might, end today itself, but the broader play is on the short side. So if you've got a short trade on it, even if your stop loss levels are triggered and you have that risk appetite, you might want to just push those stop losses higher and stay put on the short side. That's the broad view on the IT. Nothing yet to suggest that something's changed dramatically. It's just, as I said, a FOMO rally, a sharp spike up, but most of the gains already being given up.
Yeah, starting to be given up actually. Just the Nifty IT. Just keep that one because that is certainly doing well. But there are a lot of individual stocks which are doing very well. So Sony Patnaik, initial thoughts, anything that stands out for you? Couple that up, of course, Sony, with a view on either Divi's Lab or Just Dial. Both of them are standing out, as is Yes Bank, of course, but I'm sticking to Just Dial and Divi's Lab. And of course, anything else that you spotted.
So, Neeraj, first covering Divi's lab, I think it's still facing the resistance around a 5900, 5950 range. Until and unless that resistance is not taken out, long side could be difficult. So, I think it's wise to wait for the resistance to be taken out. Then only above that, we can see it heading towards a 6200 sort of a level. So, I think it's just wise not to enter into any long trade as of now. Talking about just dial on technical charts, I think it's not on derivatives, however, but it seemed to have crossed its 200 DEMA today, and anywhere towards 1000, 1005 range, if it crosses on intraday basis, may continue towards 1050, 1070 on a positional trade. So I think as long as it holds above a 980 on a closing basis, the stock may head towards 1050 plus levels. And to answer to your third question, something that would have spotted my eye, I think, since morning, I would still stick to my Naukri's trade that I've recommended in the morning, which is actually very close to its target one, up about 2% And I think one can continue to hold on to the longs for a short-term trade towards the 7,000 second target.
All right. So that is a review of Sony's pick from before the start of trade, Info Edge. Keep that on your radar. I just very quickly want to pull up Nifty IT just once more to see if there's a further cool off. I see where it is right now. Let's pull up the intraday chart if we can. It has in fact cooled off quite dramatically, still gaining about 1%. Let's keep that on your radar though. GAIL is a stock that is up and about 3.5%. At one point it was up 4% at the start, and it is in fact up 4% as we speak. The update is that the Petroleum and Natural Gas Regulatory Board has released a consultation document for the review of GAIL's integrated network tariff. The implication, of course, is that it's seeking comments from stakeholders by the 1st of May 2025. It will then submit its responses by the 16th of May, after which there will be an open house discussion. But the long and short of it is that there's an expectation that tariffs will go up, which is beneficial for GAIL. Any view here, Parag Bhai?
So basically, just a disclosure that I don't own GAIL in my portfolio, but the thing is that I have studied this. GAIL has asked for a tariff increase for their pipelines, and which covers major part of their pipeline. So if the outcome is positive for them in terms of if they get what they've asked for, it will be a big material positive, because remember, transmission EBITDA is structural in nature. It cannot go down, it can only go up. So market will assign higher multiple to higher earnings if this really happens.
Okay.
And just to touch upon basically one of the other, I would say, is little bit overweight positions in my portfolio. PSUs is something which is broadly, yeah. So whether it is HL, whether it is NTPC, whether it is NHPC, many stocks which we like.
PFCREC?
PFCREC we have not bought, but I think energy basket, so whether it is NTPC or I would say GAIL, we have not bought, but I am saying NTPC, GAIL kind of things can do well. First of all, NTPC, like Bharti Airtel, has a structural earnings, right, which cannot go down due to recession or something. Ultimately, they earn regulated ROEs, right. So these are some of the hiding places also, and valuation wise attractive, strong operating cash flow. You are seeing EV demand growing, you are going to have a very hot summer. So I would say that stocks like NTPC or of course HL, now everybody is bullish, so I would not like to talk too much about it. And see, if you see the DPAM secretary's statements, even PM Modi is very much focused on creating value for investors through PSUs, right? So that is a very clear mandate, I think. So you have to have PSUs, you cannot ignore them.
That's a good point, because this government has made it very clear they're not interested in disinvestment. They want to fix the running of PSUs and create shareholder wealth and want Indians to participate in its growth.
Correct. And see, PSUs have one very good thing. One, most of the PSUs have very good cash levels because they are not doing any acquisitions unlike private sector counterparts. So they are left with a lot of cash. They are under leveraged. And they are very genuine large businesses. If they are run well, they can create huge value.
Speaking of the power theme, another stock that is doing particularly well today is Tariff, transformers and rectifiers, up 4.3% in trade today. Let's pull that up and just take a very quick technical check on it. Kush, any view here? And then I'll also ask Parag Bhai whether he has any view on this one.
So good moves. The near-term trend has turned positive. Also, it's taken some pause in the last week. So that's also a good sign. That's a healthy sign where the stock doesn't give you a one-way up move. There is also some pause along the way. So I think this is a good chance to accumulate transformers and rectifiers. You're looking at a stop loss near the 525, 530 zone, which is the low that the stock had made on Thursday. And on the upside, with this rally continuing, you're looking at 580. And then 610 as your target. So this is a good steady move, volume backed, and with sufficient pauses just to avoid the stock from getting overheated. So could still be considered on the long side.
Any fundamental view on tariff?
On this is not a stock which is there in my portfolio at least. I would say that overall power sector looks interesting because of, I would say, in such scenario where everything is uncertain.
So actually, Parag, just come in on this. On Thursday or Friday, right, there's this whole piece about how for wind equipment, for example, the government will lay focus on getting the end-to-end procurement being done by made in India products, etc. Does all of this make, as you said, energy transition as a theme, but the pick and shovel instead of the actual gold, the mining companies more favorable? So would you look at the equipment manufacturer?
Sure. So case by case, bottom up basis, we'll look at it.
So what do you like within that?
So basically, up till now, I have bought only NTPC in my portfolio,
which is the generator.
Which is the generator, and more because of, I would say, and in my ICICI Pru days also, we were big fan of NTPC and Bharti kind of stocks where the cyclicality of earnings is very low.
Right.
It's a structural earning which can only grow. Right, unless we have a COVID kind of scenario where also the telecom revenues don't go down, they actually go up. So, but I would say that so we like such businesses, and see, in the current environment where president of US is fighting with central bank Powell on whether he should cut rates and whether he'll fire him. On this kind of global macro, you would like to hide behind such businesses where at least your earnings are protected. Right, and in that this NTPC kind of thing actually plays out very well.
So, Sony, I'm wondering how you're feeling about an AU Small Finance Bank. AU Small Finance Bank, IDFC, IndusInd. I'm going back to the financials because that's the talk of the town, and I think more opportunities are being hunted there right now. So, any view on these three?
Yes, certainly. Just on a very light note, I think whenever I've given a view on AU Finance Bank, it's always gone the opposite. However, I'll still make an attempt. It's crossing a 200 MA today. It is just about to give you that option chain breakout. So anywhere above 605, 608 levels, if it's able to cross and sustain above it, a possibility that it can head towards 630 plus levels. And on immediate basis, 590 seems to be a good support. So if anybody is holding on to the longs, 590 has to be that trailing stop loss where one can hold on with the longs, and for towards 630 plus levels that can be seen. And overall, also the entire financial space seems to be leading and stronger in comparison to rest of the indices or sectors. And I feel that the entire rest of the April series and upcoming May series, we may continue to see this uptrend for the NBFCs and financial sectors.
Okay. Just the list of names in which things are doing well. Clearly, banks stand out per se. But Kush, I'm inclined to ask you about some of these power companies because that's a space that is standing out today. So transformers and rectifiers, Inox Wind, Suzlon, the clutch of names which are doing well in that bucket is fairly large. Anything that stands out for you?
So transformers and rectifiers we've already spoken about. So Suzlon, again, it's moving up, but it's now facing that congestion. So I would wait it out. Maybe in the clear of 60 and those levels, perhaps you could see a fresh rally emerge. Up until then, there could be a sideways consolidation, perhaps even a time consolidation that you might see on Suzlon come about. Compared to that, Inox Wind is much better placed. There are some resistances, but with the kind of volume action that you're seeing and the levels that it has crossed, all the long-term and the short-term averages taken out, you could look at a move towards 175 once that is taken out, a 188 as well. So between the two, Inox Wind stands out, from a technical standpoint. Suzlon you could very well hold, but with a stop loss around the 53 mark.
Okay. I'm just wondering, would you review anything with regard to your call on frontline banks based on the way that they've moved? I know that Neeraj just pointed out the Nifty bank, but let's look under the hood, talk about HDFC Bank, which is up about nearly 2%, 1.87%. Let's also pull up ICICI Bank. Okay, it's come off a little bit from the high point of the day, cooling just a tad bit. But I guess that is also par for the course considering the kind of move we've had. So would you book if you were in?
Alex, I don't use this word lightly, but this is scary. The kind of levels, overheated levels on the shorter time frame that Bank Nifty has entered into. Typically, in the past, when it's gone into those overheated territories, it's seen a correction of 1,500, 2,000 points or maybe more. So that's why I was a little cautious and buy on dips on Bank Nifty, Nifty. That was the same view today. Even now in fact, I would say it's not a bad idea to book it out completely, sit out.
So not good scary, bad scary.
Bad scary. Oh, absolutely. Bad scary.
The roller coaster ride is a good scary.
No. Completely sit this one out. You might lose another you might lose another 500,000 points on the upside just because of the momentum. But this is not a good place to create a long trade on the Bank Nifty at least.
I just want to know if Sony has the same view, because if you look at it, I mean, even fundamentally, you will look for a domestic facing business that is going to, grow with what is still the world's fastest growing economy. It is banks. Then you have those that are on top of their game. Why fear that?
Right, absolutely, Taman. I think I would also align with the same view, because also if we just look at technical or derivatives data for the entire index, I think it's sort of in an overbought zone right now. There could be some correction, some profit booking, but nothing to panic or fear about, because it's still above a very strong breakout level. So only any dip towards a 54,000 could be wise that one can reinitiate the longs. Although if anybody is already holding longs, it is also wise that one may look forward to booking the profits at current levels, wait for the decline towards the 54,000 to reinitiate the longs. Overall, the entire series or the upcoming series, I still feel that 53,500 to 53,000 range is going to act as a strong support, even if it has to be for the entire of May series. We may head towards a higher highs in Bank Nifty, but any dip could be the right strategy to go about for.
Okay, so a concurrence there from Sony and Kush. Be cautious, and look at booking profits if you have a long position here. Parag Bhai is also nodding along.
Same.
Yeah.
I told that I'll not jump and buy today. At least the banks which have, at least the large cap banks, because they have already rallied, and as I said, that you cannot rule out a possibility of 1 or 2 quarters of margin weakness going ahead. Plus, you have to also consider that globally things might slow down, and that will have its impact on, because see, a conservative banker will always see what is the evolving situation.
Correct.
And then try to lend. So the growth will anyway come down a little bit. And there can be some compression in margins also. That's why I'm looking at second tier banks, which are where the valuations have not gone up so much.
Top pick in a second tier bank.
So as I said, Federal.
Federal is the next big pick.
Just to quickly complete that view, what Sony said, that's exactly what even I'm trying to say, which is in the near term, the Bank Nifty is overheated. That's where it's looking scary. The structural issue hasn't really come up just yet. So buy on declines 53,500 thereabouts is still a good opportunity to enter. From a very near-term perspective, today, tomorrow, I wouldn't want to buy Bank Nifty, just to complete that view.
Okay, today, tomorrow, he wouldn't want to buy Bank Nifty. Thank you so much, Parag Bhai, Kush and Sony. This sets us up perfectly for our next conversation. We're keeping the focus here on BFSI because you've seen reporting from all of the top banks, and you have Harsh now giving us perspective on this.
Well, let me first start off with comparing loan growth for all three. I'm going to first talk about HDFC because the numbers stood out there, 4% sequential. On ICICI, it was slightly on the softer side, 2% sequential growth. Now, where HDFC is concerned, they've also guided FY26 growth to be largely in line with industry. So they won't lose market share for sure. So despite it being a softish year for them, on a YOY basis, growth was subdued. But on a QOQ basis, growth was decent on the loans front. Deposits, though, strong on for pretty much all three. And standing out, HDFC and ICICI, a relatively larger size, growing at 6% sequential, very, very strong in that sense. Let's talk about margins as well. Margin accretion for all three banks were solid. You're seeing HDFC up just about 3 basis points, slightly on the softish side, between solid and inline, somewhere between that. You're seeing ICICI, though, extremely sharp improvement in margins. That's impressive in a quarter like this, 16 basis points. Cautious though on margin guidance going forward given the rate cuts that have come through. Yes Bank, again, cautious in the near term, but they are expecting maybe 4 quarters down, the margins to be better than where they are even today. So you're seeing margin improvement of 10 basis points sequential, but a year from now it will get even better as the lead and lag of the repo starts to take effect. Provisioning, 1.4% credit cost for Yes Bank, staying flattish on a sequential basis, but you're seeing a 23% uptick on a YOY basis where credit cost is concerned. So something to be mindful of. Retail is again that space, but they're saying that it's largely stable, and that is the case as well on a sequential basis. So they're expecting credit costs to likely taper as well. That's broadly the commentary they're giving. ICICI, HDFC, absolutely fabulous, both of those on the credit cost front, so no concerns there. ROA profitability, improving metrics across the board. HDFC is improved. ICICI on that very high base to be able to do 2.52% has been outstanding in that sense. And Street again surprised by the kind of result that we've seen from ICICI. Yes Bank as well, quite satisfactory in that sense. Progress is happening and is evident from that ROA number.
Okay. And let's talk about all of those perspectives with Rahul Malani. He's Senior Research Analyst at Mirae Asset Sharekhan, joins us right now on the show. Rahul, good having you. Thanks for taking the time out and good morning. What's your sense, Rahul, of the banking results and the commentary, more importantly, that has come out? Does it give you confidence in a repo rate cut next 6 months, 9 months period?
So, good morning, first of all. So, overall, we believe that our view is that there will be around 100 to 125 basis points rate cut in this cycle. And looking at the key surprise, positive surprise came in from the results was the margins on the margin funds. But going forward in the coming quarters, we should see some margin compression due to the lag and lead effect, due to the repricing of the asset mix as well as the liability mix. But we think that the margins they have reported that the large private banks have largely been peaked out, and more or less going forward in the coming quarters, we should see lower margins due to the repricing led by the repo rate cuts. Apart from that, other operating metrics, core operating performance continue to remain largely in line with our estimates and consensus estimates. On the asset quality front, ICICI HDFC continues to do well and remains a sector leader in terms of asset quality, remains pristine in all the given segments. So, in terms of profitability also, it continues to remain both for both the banks.
Rahul, hi, Tamanna here. I just want to come to that point that you made, that you could see margin pressure in the quarters to come. Can you elaborate on what you see the key risk factors here are and why?
So basically, what happens is that during the lower interest rate cycle, yields get compressed. So you have to pass on the lower interest rates to your borrowers, right? And banks at the same time borrow from the depositors. Although they have taken initiatives like in the last week we saw HDFC Bank taking a 25 basis point cut in the saving account rate in order to make partially set off the margin pressure which they would come from the external benchmark lending book. So overall, the banks have a floating rate book on an average 60 to 70% of their book is based on floating rate. So whenever they are in the external benchmark, whenever there is a cut in the report, they are repriced depending upon their time period, stipulated time period, and their contracts. And so there would be certain margin pressure, but they partially would be offset by the reduction in the cost of deposits in the form of saving account also and the form of retail term deposits also.
Got it. Okay, Rahul, now in the morning, the guests that we've had have all said that some of the smaller banks are starting to look fairly attractive. When I look at portfolios across the board, there has been some serious addition in names, even Bandhan for that matter, Jana Kalyan Bank, some of the NBFCs, smaller NBFCs. Friday or Thursday, we saw some, Thursday and Wednesday, we saw some microfinance companies really shooting up as well. So my question to you is, are larger banks have the safety? Yes. But is there merit in trying to buy any of the mid-sized names?
See, currently there was a valuation catch-up, and apart from that, the key commentary from the players, like for example, yesterday ICICI also reported that overall delinquencies in the unsecured portfolio, especially in the personal loans and the credit card book, are more or less stable. And the expectation is that the slippages would mostly peak out in this quarter or the next quarter in terms of, and the credit cost will likely peak out by quarter one of in the banks, from the banks which were which face headwinds in the personal loans as well as the credit card portfolio. As far as the microfinance segment is specifically concerned, we believe that worst is yet to be over for the microfinance sector. So the banks which have higher exposure to microfinance segment will continue to report higher credit costs as well as the slippages, at least in the first half of the FY26. So we should thus we have to bifurcate this based on the segment wise and how we should take.
Rahul, apart from the banks that we've spoken about, HDFC, ICICI, yes, of course, have all reported. Let's talk about where you see a further upside. What would be your top picks right now? How do you look at IDFC first, and IndusInd and a Federal?
So basically, I would not be able to comment upon IDFC because we don't have coverage with it. And we continue to favor the large private banks currently, which have good liability mix and more. They are able to report sustainable growth rate above the system growth will grow, and given the condition liquidity improving, currently they are reporting around 1 to 2% above system growth. As the liquidity improves, they would certainly be the first one to report higher growth and outperforming the sector. And at the same time, we have comfort on the asset quality front, where we can where in this challenging time, which can navigate those things, because challenges remains there from the trade war risk. Like for example, there could be consistent downgrade in the GDP growth rate for the global economy as well as for the Indian economy. So we will continue to favor large private banks. In terms of, we have topics in large private banks as ICICI Bank, Axis Bank, Kotak, and HDFC. In mid-tier private banks, we like Federal Bank because as I have alluded that largely my view is that here the return ratios will be largely remain on marginally 5 to 10 basis points rather than a large impact on the return ratio profitability.
All right, thank you so much, Rahul. Always a pleasure speaking with you. Rahul Malani there. Let's talk now about JNK India. It's the next stock we're talking about, a company that manufactures heating equipment. Stock is on fire today as well, locked in upper circuit. Company expects FY25 revenue to come in between 600 to 700 crore rupees. Before we speak to the management, let's go across to Mihika.
So a little bit about what JNK India does. Well, it's one of India's leading heating equipment companies from thermal designing, engineering, manufacturing and installing. Now, in the 9 months of FY25, the company's performance has not been that great. While revenue is up 15.6%, EBITDA is down 48%, but this is because of project execution delays in certain PSU projects. So one of the key questions that we need to ask is how is FY26 going to shape up compared to FY25, and whether FY25 will meet the guidance the management gave out in H1 FY25 of 600 to 700 crores of a top line and maintaining the 18% margins that we saw in Q3. We also need to know how their order book trajectory is going to shape up. Their Q3 order book did stand over 1,200 crores, and 82% of this is from heating and 92% of the order book is domestic orders. And they do aim to hit a target, hit rate target for their order finalizations between 20 to 30%. And the pipeline bidding pipeline does remain strong at 4,000 crores. So where does it come, where does it go from here, and what's the execution timeline on the same?
Thanks a lot for that, Mihika. And Mr. Arvind Kamath, chairperson of JNK India, joins in to talk about all of that and more. Mr. Kamath, good having you. Thanks so much for taking the time out. And just starting, the pleasure is ours to have you. Just trying to gauge how has Q4 largely been for India Inc. per se and specific companies, and which was one part of the conversation. Now, would you believe that what you had guided for at the end of Q2 is something that you'll be able to meet when the numbers largely come out? Because I'll tell you why this is coming from as well, Mr. Kamath, right? That contrary to expectations in Q3, and you spoke about it to us, but in Q3, for example, your operational metrics took a very large hit relative to what was anticipated, relative to what probably you had spoken about as well. So just trying to gauge, how has H2 been for you?
Yeah, Neeraj, I mean, we've not, announced the results yet for Q4, so
yeah. So whatever permits you.
Speak much about Q4.
Yeah.
Understand? Yeah. I mean, just to give this thing. I mean, Q3, you saw generally the field, the execution has been a bit challenging in H2 in terms of because of the lot of PSU getting over the earlier issues and things like that. Yeah, but just to give this thing in FY26, we are pretty confident of completing the execution as what we want to do, basically. Yeah.
Okay, now again, because you can't talk numbers, I'll not ask you numbers, but I'm just trying to get a sense. Has Q4 been a decent quarter? Because we have seen signs of some pickup in capex, better liquidity terms, mostly for India Inc. in Q4. It started from December, but I think largely took shape in February and March. And then, of course, the avalanche of tariffs have hit, and therefore uncertainty comes in. But Q4, was it okay?
I mean, it was okay per se, but what happens for our kind of we are into the heating equipment business, which is a very long term. It has a long lead gestation period in terms of execution and the engineering design, supplies, and including the site construction. So immediate response, it takes time in terms of any of these issues getting hit. It does take some time to come over the things. Yeah.
Okay. So, then I'm trying to understand, Ms. Kamath. Yes, long-term gestation periods, which ideally should cushion the business from any near-term uncertainty. But boy, are we looking at some near-term uncertainty. Is this a positive for you, Mr. Kamath? Or does this uncertainty result in delayed confirmation / communication with end customers because of all that's happening due to the tariff war?
No, that's in terms of geopolitical issues, it's been positive for us, Neeraj, because it also opens some of the opportunities. And this year, I mean FY25, in terms of the order wins, it's been a fantastic year for us because we have forayed into cracking furnaces, incinerators, process plants, and also flares, which we did not do earlier. And also we forayed into some of the geographies which we were not doing earlier, like USA, Malaysia. So overall, in terms of the order inflow and the visibility ahead, it's really been a positive.
Okay. So would the order inflow, Mr. Kamath, and my last question to you, because it might be difficult for you, like you said, to give in some exact numbers right now, but would you believe that order inflow or order booking for you might actually improve in the first half of FY26 relative to what the recent trends have been, if indeed this is a positive, or does this happen with a bit of a lag, the ordering activity?
The ordering activity, because of this, it would take some time, but we already have a good inflow or good pipeline from the previous quarters as well. So we do expect a good traction in terms of the H1, in terms of the order inflow, even FY26.
Okay. So, fair call. Mr. Kamath, I reckon that we'll be able to better gauge how the situation is once your Q4 numbers come out. But this was just to get a sense of how Q4 has been, and you've kind of spoken as much as you can. So appreciate that. Thank you so much for taking the time out. Looking forward to talking to you post your numbers.
Yeah, thank you, Neeraj. Definitely, for sure. Yeah,
that's JNK India.
Thank you for having me.
No, the pleasure is ours, and you're just trying to gauge how the numbers could have looked like. Now, remember, this is an important week simply because there's the J.D. Vance visit to India, the US Vice President, and therefore one. Tomorrow, the IMF comes out with some details around what the outlook could be like. This is, of course, the feed that we have, and Minister Ashwini Vaishnav in conversation out there. And Tamanna, suffice to say, in a larger scheme of things, yes, it'll be buoyant when the US president is here, but this is a visit of tremendous significance as we try to get an idea on bilateral ties.
Yeah, he's not really going anywhere right now. So, and
exactly.
this is, and in terms of Trump. And JD Vance is not a just a paper rubber stamp kind of vice president. So JD Vance coming here is a big deal. I wouldn't compare it to, he's not a vice president like Kamala Harris was, for example.
Exactly.
So JD Vance coming here is a big deal. He has a big role to play in the Trump administration. He's by his side in every conference, in every conversation. So him coming to India, his first India visit as vice president is important. He's here for 4 days. And of course, apart from the usual, state visits, when someone comes, he'll go to Agra and he'll go to, the usual spots in Delhi, all of that, Jaipur, etc. But the trade talks is what I think is going to be important.
Very important. And the other thing, Tamanna, it is a symbol of strength, right? I mean, PM Modi was amongst the first ones to visit the US, and JD Vance deciding on a long tour out here. It's 2 countries that he's doing, and India is the prominent one. And from all the newspaper reports that we've seen, and the submissions that Indian delegation has done to the US when it comes to the tariffs and the negotiations as well, what the US Vice President has to say will be of immense significance. As Tamanna said, that he is not a poster boy alone. I mean, he's out there with purpose, and what he says will be of immense significance. So keep an eye out for sound bites coming in from the JD Vance visit in India. Okay, now from the macro to the micro, we focus on Zomato simply because, quite unlike what most people would have penciled in, the stock of Eternal or Zomato has actually behaved reasonably well. Now, what's happened? The board has approved an FI ownership cap of 49.5%. Why is this important? Let's get in Mahima in. And Mahima, one would suspect that having a larger say and it being a domestic industry alone or domestic company alone has more implications than what it might meet the naked eye.
Right, so absolutely. And as you rightly mentioned, they've capped the FI ownership at 49.5 from 100% now. And this will lead to focus on inventory-led model that will be more of a domestic play. Now, in terms of how fundraising has been for Zomato or Eternal so far, they recently done a QIP of 85 billion. So this move probably corroborates with the focus of increase in domestic ownership. The QIP that they raised, the overall domestic fund investment was around 8% was subscribed by DIs itself. Post the QIP, the FI ownership fell to 47.3, that is around December 2024. DI ownership increased to 20.51 from 17.32 again in December 2024. Currently, DI ownership stands at around 23.5% and FI ownership continues to fall, standing at around 44.4%. In terms of what this means for Eternal, increased domestic ownership will probably aid data localization norms, control over inventory, as well as safeguarding local consumer data. The inventory-based led model will have certain benefits. They'll have better control over product quality as well as pricing, improved consumer experience, higher margins through bulk procurement, easier promotion on private labels, as well as enhanced delivery lead time. Now, there are certain challenges also with respect to this inventory-led model. It requires stronger grip over the overall operations, requires higher working capital in order to manage the inventory, and the risk of unsold and obsolete inventory will negatively impact the margins as well as profitability overall. Elara did come out with a note on this. They've maintained buy with a target price of 300. They said that Nykaa follows a similar inventory-led model, and for them it has worked out well in terms of consumer experience. And the recent news flow also suggests that Amazon and Flipkart might be preparing for their IPO as well. And of course, we have Zepto IPO also coming in. So this is the overall view as to what capping FI flow at 49.5% means for Eternal.
Because there are 2 points of view, there is confusion on the stock as well today, flipping from the positive to the negative. Now, here's the negative point of view. Somit, the cap on FII participation means that we're going to see an outflow.
Well, yes, there will be massive outflow, passive outflow because of the Zomato's inclusion in the MSCI and FTSE index. There could be passive outflows and that could be as high as around 1.4 billion US dollars because the company has capped the FI limit at around 49.5%. Now, why this selling will happen? Now, if you look at the proposed cap is 49.5%, while the current FI holding in Eternal is 44.88%. Which means the difference between these two numbers is less than 10%, and whenever the FI headroom, there is a difference between the proposed cap and the current FI holding falls below 10%, there will be a weightage reduction of the stock, and that is what is going to happen when it comes to Eternal. Now, when it comes to the MSCI index, the current weightage of Eternal stands at around 1.33%, which will become half, and this could lead to an outflow of close to 600 to 800 million US dollars in one shot, and this will happen after the review, and review could be either in May 2025 or in August 2025, but this will lead to an outflow in one shot of around 600 to 800 million US dollars. But now, when it comes to the FTSE index, the current weightage of Eternal stands at around 1.17 percentage points, and because of the fact that the headroom is falling below 10%, Eternal could get deleted from the FTSE index, and this deletion could lead to outflows of anywhere between 500 million to 600 million US dollars, but this could happen over multiple quarters because FTSE will check in every review whether the headroom is continues to remain below 10%, and if that happens, then every quarter we could see an outflow of anywhere between 70 to 100 million US dollars for Zomato. For MSCI, there will be one shot outflow of around 600 to 800, but for FTSE, it could spread over at least 5 quarters, and it could be around 70 to 100 million US dollars every quarter.
All right. Thank you so much for that, Samit. We'll take a very quick break. We're coming right back with the conversation with JSW Steel. We're also speaking to Mastech. We're keeping the focus here on the markets. Stay tuned for more.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
The first stock on the list is it's IGL now. If you see the stock that has perked up around 4% in trade, and this is largely on the back of the buzz that is on the street, that the company might announce a price hike of anywhere between 3 to 4 rupees from the 1st of April. Now, this might as well happen in phases. So keep an eye out for IGL. Now, this stock had to, the company had, in fact, had to take a price hike post.
JSW Energy in focus after the power generation arm of JSW Group has raised its generation capacity target from 20 gigawatt to 30 gigawatt by 2029 or 30 or earlier. Before we speak to the management, my colleague Harsh caught up with Sharad Mahindra, MD and CEO of JSW Energy, which is the management incidentally, and hear out what he had to say.
This particular project, which we are now starting the construction work in the state of West Bengal, is a very significant step for us at JSW Energy, because this is the largest single investment in a greenfield project which we are going to do now in the history of this organization, which is 2 into 800 ultra supercritical thermal power plant which we are doing. And this we have seen, this is in line with the Government of India's announcement to ensure power reliability and reliable supply and ensure energy security that the Government of India announced some time back of 80 gigawatt thermal capacity addition by 2032. So this is a part of that strategy, and to be a part of this growth story for the country, we went through the competitive bidding process and we have been able to secure, and which we are setting up in West Bengal, for which the long-term PPA has already been signed with the state of West Bengal. to ensure that the fast-growing needs of the state, where presently the per capita energy consumption is significantly lower than the country average. But yes, with the present focus of industrialization, urbanization, the service industry with the data centers and artificial intelligence, and the focus on textile industry, the power demand in the state is going to grow faster than the national average for next 10 years. So that is where to ensure that the power deficit possible, which is there, is taken care of.
Point taken, sir. Sir, more so I want to understand what the opportunity size is like. So you've suggested how the opportunity size is large overall for the country as a whole. How much of this opportunity is JSW Energy going to take, or rather, what is the thought process? What's the goal like?
Yeah. See, as I told you that we have been maintaining, when we announced our strategy 2.0 of reaching 20 gigawatt by 30, our benchmark, which we have from the day one, which we have been maintaining, is 2/3 of green energy and 1/3 of fossil fuel. In the current fiscal, which has just started, with the further capacity additions which are going to happen, including the RE platform of O2, which we have recently acquired in this month only, we will be definitely ending FY26 also with 2/3 of renewable energy and 1/3 of thermal. So two things which are very important in line with what the country needs are that we all know that government has announced of energy security by 2047. Energy security means reliable, dependable power supply. So it is right now, it is only thermal. Going forward, maybe nuclear will also play a role, but it is slightly away. And also government's target, which we have announced to be carbon neutral by 2070. So that is where the green energy, renewable energy, is going to play a role. So we are focusing on these two fronts, and as an opportunity in terms of energy security, reliable round-the-clock power in thermal space, and also in the renewable energy space, where we are seeing huge opportunities, which has resulted in building our portfolio of operational capacity plus capacity in hand at various stages. We are in excess of 30.2 gigawatt right now.
Point taken. Sir, this PPA, could you give us more details? Tenure, pricing, how is all of that playing out, if you can? Give us that perspective.
Yeah, see, the tenure of the PPA is 25 years, and in which the fuel security is there because the government of West Bengal has the allocation from the Ministry of Coal, from the mines. The mines were identified, and it was informed to all the bidders that which are the mines from which the coal is going to come. So all those things are secured for 25 years in terms of coal. And then based on the investments and all, tariff, because this is in the public domain, so there is no point not sharing. But I will, before I share the number, I will just like to tell that this is a very, very great achievement by state of West Bengal in terms of last 4 bids in recent months, which have come in the thermal space by various big states. This is the lowest tariff discovered by West Bengal. And the total tariff put together, including the fuel cost, which is anticipated from the mines which they have allocated, and the fixed cost what we quoted, the total tariff is 5 rupees 41 paisa per unit at the state periphery unit. So which is a very attractive tariff for a round-the-clock power.
Okay, so that's how pricing, etc. is stacking up. Now, sir, give us perspective. You've recently exceeded the 10 gigawatt capacity, and that was your target for FY25 end. You've exceeded that, and which is a key positive. And therefore, what are your targets like for FY26 and 27? How quickly do you get to the 20 gigawatt target? What's the kind of timeline and guideline for that?
Yeah, see, giving exact timeline is right now we are working on, but I can tell you that FY25, if we talk, we started the year with an operational capacity of 7.25 gigawatt, and we have added another 3.6 gigawatt in FY25 through organic and inorganic route both. And with the acquisition of O2 Power in April current year, in the current month, with an operational capacity of 1.3 gigawatt and a portion of the capacity at advanced stage of commissioning, I can definitely say that total capacity addition through organic and inorganic. Inorganic has already happened, O2 Power, and organic, it will be significantly higher capacity addition than 3.6 gigawatt what we have added last fiscal in FY26. And so we are working on the exact numbers. So 20 gigawatt, definitely FY30 target is going to come forward by significantly earlier, maybe few years earlier. And we are working and very, very soon we will be coming with our strategy 3.0 with revised number capacity addition and reaching a capacity number by FY30.
Okay. Now, in that sense, you've already put together the 1.8 gigawatts available from KSK Mahanadi, and that was swift on your part.
Yes.
What about O2? The 2.3 gigawatts, which is immediately available from O2, and then the 4.7, the larger capacity of O2. How quickly does that scale? Because that's the other acquisition you've made, and it's a large one.
Yeah. See, O2 as we acquired in the current month in April, the operational capacity is 1.3 gigawatt. And by quarter end, by quarter one end, there will be significant addition. Maybe at various stages, we have just acquired the asset and we are working. Maybe it will be close to 2 gigawatt by June. So when we are talking 10.8 gigawatt closing capacity of FY25, today when we are talking, the operational capacity is 12.2 gigawatt, out of which 1.3 is O2, and some of our more greenfield capacities have got commissioned. And in the current quarter, we are also going to commission our hydro project greenfield of 240 megawatt, plus O2 capacity, plus more in wind and solar. So these capacity additions will, by quarter end, maybe in excess of 13 gigawatt will be the operational capacity. And in balance 9 months.
So by the end of Q1 FY26, you will be in surplus of 13 gigawatts. Is that what you're saying?
Yes, that is definite. Yes,
Okay.
that is definite. And O2 Power, total portfolio size is 4.7 gigawatt. And by year end, by FY26, based on the PPAs which are in hand and the project which are in various stages of execution, we will be in excess of 2.5 gigawatt operational capacity by March 26. And balance, based on the PPA timelines, entire portfolio will get commissioned before June 27.
Okay. June 2027, if I'm getting that right, and not Q1 FY27.
No, it can be in H1, you can say, based on the PPA timeline. Based on the PPA timeline.
Okay. Excellent. Understood, sir. Understood. How is, and therefore, if I were to slice and dice this, FY26, overall, where will you be at? You'll be, at the end of Q1, you'll be at 13 gigawatts. What will your full year FY26 aspiration be? And of course, just to kind of break it up, 2.5 gigawatts will be added from O2, out of which 1.2 is already operational, and KSK will be at 1.8, which is fully operational for now. So everything else will be greenfield, is what I understand.
Yes, exactly. Yes. Even 1.3 is operational of O2. 1.2 also will be greenfield. And balance from JSW Energy, JSW Neo platform of our renewable energy will be adding. So we are working on those numbers, but as I told, 3.6 gigawatt addition which happened last year through organic and inorganic, this year it will be significantly more than 3.6 gigawatt, which gives an indicative number from 10.8 to whether it is 14, 15 to 16. These numbers we are working, but I'm sure it will be significantly more.
Understood. And FY26 and FY27, what is the aspiration in terms of adding capacity?
See, as I told you that with the order pipelines which we have, the PPAs which we have signed already, and in various solar and wind PPAs, the timelines are 18 months to 24 months depending on the timelines.
Correct.
We will be executing those projects, and maybe in excess of about 8 gigawatt of PPAs which are there in hand. Maybe in next 18 to 24 months, we will be executing those.
Understood. So we are at the start of summer, and therefore demand is something that I would like to understand from you. How you are seeing demand trends and pricing playing out, and you know, you've got a great ear to the ground, and therefore very relevant for us to get that perspective from you.
Yeah. See, definitely the projections which are there and the weather which is being experienced, when we have still not seen the real summer starting in north of India, the power demand, especially maybe last 3 weeks, have seen the demand driven from south and west of India. And with north now, the summers starting and the temperatures inching up, demand definitely is going to be significantly higher than what we have witnessed in previous year. That is what we are anticipating. And in terms of the tariffs, though, I just to tell you that our very, very small number, barring our JSW Utkal unit in Odisha and a small portion in our Maharashtra unit and all, our overall portion of the open capacity is not very high. And our JSW Utkal plant, which is a 700 megawatt, is entirely merchant untied capacity, which is to an advantage because it is a domestic coal-based plant close to the mine where the fuel cost is low. And with the merchant prices moving up, demands going up, we see this as a positive for us as well as for the industry.
Okay, and so you know, you've kind of broken this down and told us that out of 20 gigawatts, 2/3 will be renewable, and therefore battery storage will be a massive project for you. What's the kind of investment you're putting in, and what are the goals on the storage side of things? Because that will be crucial from a renewable energy perspective.
Very rightly said. Actually, energy storage is going to play a very, very important role for two reasons. Lot of thermal capacity addition for round-the-clock power is happening, but it takes its own time. Maybe 4 to 5 years, 6 years time to start to end, commission the project. And in the meantime, the way capacity addition in solar and wind is happening, solar especially, I think daytime power is increasing, but at the same time, it is resulting in instability of the grid also. It can, because grid capacity is limited, new transmission capacities are taking its own time. So for grid stability also, the storage is going to play a very important role in terms of discharge during off solar hours. So we are also we have been pursuing on this, and I'm happy to tell that in battery energy storage, we have already orders in hand for almost 3 gigawatt hour of storage capacities, which we are going to execute, which are coupled with solar. Solar during the daytime, charging the battery through solar during the daytime, and discharging the battery during off solar in the evening peak hours. That is one. In addition to that, but there are some challenges in battery energy storage for a really optimum value power, cost of power. 2 hours to 4 hours is the maximum continuous discharge. Beyond that, it starts becoming economically unviable. So Government of India also last year in the budget has focused on pump storage. So we are actively pursuing on that, and I'm happy to tell that the country is one of the largest battery and pump storage project, hydro pump storage of 12 gigawatt hour with 1500 megawatt capacity with 8 hours discharge. We have won the competitive bid, and we have signed the power purchase agreement with the state of Maharashtra, and our project work has already started. So pump storage is going to play a key role, and battery energy storage also. So these two, along with wind and solar, is the future to provide a reliable and a higher percentage of renewable energy even during off solar and off wind hours.
All right, that was the view from JSW Energy. Now, we're speaking with Mastech on their numbers. Numbers need to be seen with a bit of a nuance. Q4 looked weak. Profit has declined by 14%, even as revenue saw an uptick. Now, before we go across to the Mastech management, I'm getting in Puneet, who tracks the sector. Puneet, what has worked and what has not worked?
Well, thanks for that. So definitely a weak quarter, as you rightly said, but just a few questions to the management. for this particular result, because as you rightly said, revenue was up 4% on a quarter-on-quarter basis, but profit has fallen 14% in this particular quarter. Now, the other expenses portion has gone up by 8%. What is the bifurcation of this? Because this does not involve any kind of wage hikes. That's question number one. Specifically, the other aspect is that in this particular quarter, the company also, had a, one-time expense of about 8 crores, which impacted profits. And there has been a twofold, impact to this. One is a 39 crore impact on the company because of expected credit loss provision. And that's 39 crores impact. That's negatively impacting the profits. On the other hand, the company also has a 31 crore positive impact on contingent provisions. So this 39 crore unbilled revenue, is that expected to not come back? That's the second key question. And the third is the US share. Now it's fallen to 26% in this particular quarter. It was 28.3 in the previous quarter. Is it expected to be around 1/4 of the revenue going forward? And if the company has seen any project delays? So three key questions to the management. Overall, it's expected to be a slow quarter for all the IT companies, but any kind of project delays from the US, that's the third question specifically to the management today.
Thank you for that, Puneet. Umang Nahata joining us, CEO of Mastech. Mr. Nahata, welcome to the show and thank you so much for your time here on NDTV Profit. Let's get your take on how you've seen this quarter.
Yeah, I think it's a modest quarter, I would say. We've had good revenue uptake in the quarter, especially our UK Europe business actually saw phenomenal growth as far as their quarterly performance. The overall revenue growth in that sector was phenomenal. Having said that, the North America business did have a degree of impact of the short-term uncertainties that we are currently running through, which led to slowness in some of our businesses that we run there. In spite of the overall setup, I think overall revenue performance did grow well in this quarter, around 4% QOQ. As we look at the bottom line performance, so the growth that we saw in our businesses were largely driven by data AI-led capabilities, especially in our UK Europe business. These are more front-ending and secured resource kind of capabilities that we are currently getting into and delivering. Some of these required us to execute and hire more on-site, as well as work with a few partners and startups to really, deliver the kind of, front-ending work that we are getting into. And those have impacted our, bottom line performance in the quarter. There's also been a one-time prior period charge because of, this change in accounting method that we were following. So we're now following a more scientifically or a more objective ECL method for recognition of provisions on our unbilled revenues. So those, I would say, are a mix and match. In general, I would say we feel very optimistic about our focus and demand in the core business that we have, which is around UK, Europe, Oracle. And we are also upbeat about the growing penetration of data and AI in our business. There's also, I would say, a balance between how we see the macro in the North America business that we run.
Okay. Tell us a bit about these other expenses that are up. Is that because of the accounting change?
No, so there are two parts to it. The other expenses that you see are largely, like I said, the kind of work that we are getting in UK is a lot on data and AI and front-ending capabilities. These are capabilities that we are still building and expanding into. So some of these capabilities we have to partner and get subcontractors in our business. These were also locally required security cleared resources in UK. And therefore that subcontracting / partner expenses for the quarter has gone up. So that portion of work comes from them. We had almost around 80 on-site resources that we have to add or ramp up in the quarter. The second is the difference between the operating profit and the PAT. That is largely due to a one-time cost that we saw prior period as we changed the method. It's not that these receivables are not collectible. It's just that the accounting method change allows us to put up a higher provision than what we were putting up earlier. And therefore, it's a one-time charge for the prior period.
8 crore exceptional loss that you're describing right now.
That is correct, the 8 crore exceptional loss that you saw.
Okay. Tell us a bit about the order backlog as well, Mr. Nahata.
Yeah.
That is, is that giving us a sense that you're going to see a bit of pain in new orders going forward? How are you looking at that number?
So the order backlog, you are rightly pointing out, our overall order backlog, while if you look at technically it's only 1.7% year over year that we have grown. Having said that, the cycle of business that we run usually has a week or two of delay in some of the order cycles before we get the contracts signed in. So as we speak, as we stand today, we've added another 15 million worth of these contracts that were already in commit stage, but they've now been signed in. And if you add that 15 million into our backlog, it's almost 7 to 8% year on year and a 12% quarter on quarter increase in the order backlog. So yeah, it's a little slower than what we would have hoped for, but it's not the dramatic 1.7% that we are looking at. Having said that, our business in US especially is seeing a degree of right shift in demand or customers being slow in making their decisions, and that might have some short-term impact as far as the new book of business is concerned.
Umang, good morning, Neeraj here. Just a couple of macro questions. This India-UK FTA being on the throes of getting signed, could it have any meaningful impact on business considering the UK exposure that you have?
We feel very upbeat about our relationships and the India-UK relationships also growing. And we are right now in the, one of the key Indian partners working with the government as well as healthcare and government affiliated organizations like, various, financial services organizations. So we are pretty optimistic that our focus on the UK-Europe market will allow us to, create a significant, balanced growth for Mastek as an organization. I think for now, our, moderate dependency on US and a much higher business in UK is actually playing to our strengths as we step forward. So yeah, we feel that the strengthening ties between India and UK should also allow us to further grow and expand into the business that we have there.
Got it. The other aspect, Umang, and because you do not have as much US as maybe some others, but even in US facing companies, I've heard companies post the results talk about 0 to 3%, best case, worst case. Some companies talking about a completely flat number for FY26 over FY25, and a couple of very small size or mid-sized companies relative to the Nifty names talk about lower double-digit or just higher single-digit growth as well. Now, considering the dynamics that you operate in vis-a-vis some of the other IT companies listed out of India, what's your sense? Where do you wedge in for FY26?
Yeah, Neeraj, I think our overall book of business in US is pretty small. Right?
Exactly.
So it's not as big, and therefore, the potential for us to grow is much higher. Having said that, we are also closely observing the macro changes. A lot of our customers are in public sector and healthcare, which clearly have an ask from the government of either their funding has been held back or they've been asked to bring down their fundings. So we are currently seeing, given all of this together, and having said that, in the same breath, we are also seeing a lot of positive demand on data and AI from our existing as well as new customers. So putting all of that together, I would say early double-digit kind of numbers is where we are currently anticipating our FY26 performance for US.
Okay. One last question from mine. This whole DXY or the dollar weakness that we've seen, and there's a serious one thus far. No one knows where it will go. But with the presumption that we are looking at a relatively weaker dollar than what we've seen in the previous decade, does it have any meaningful implications for either the pricing of the orders or your hedging strategies or both?
Yeah, I mean, as far as hedging strategy are concerned, clearly, so for example, we had a hedging strategy which would keep looking at like year 3, year 4 also. We've constantly started reducing the year 3, year 4 exposure or bought down the hedging. We are not necessarily hedging year 3, year 4. We're more hedging short to medium term right now because we don't know how the long-term rates are going to play out. So from the hedging point of view, we are actually taking a more cautious view. We are, it's a more wait and a watch before we go out and do more long-term hedges. As far as the rates are concerned, we haven't seen any effects of dollar rupee kind of change that has really made any important change in our rates today. Having said that, we are closely observing those also, and I mean, depending on where it lands, like you said, it's very uncertain and volatile. So it's hard to make any change immediately because many of these contracts are much more long-term in nature. So we're currently not making any rate impact changes, but if this grows or continues to grow in that direction, then yes, there would be a pricing impact that we will have to take care of.
All right. Thank you so much, Umang, for speaking with us. Umang Nahata there, the CEO of Mastech, talking about the quarter gone by. The story of this morning, and yes, the Nifty is above the 24,000 mark, but the story of this morning, Neeraj, is IT, the Nifty IT, 1.5% up. Infosys, I just want to pull up components of the Nifty IT if we can. Infosys, Tech, Mahindra, completely shining. I mean, the speed with which concerns have seemingly been shrugged off on the IT pack after those results is interesting to note. At the very least, you have a Techem about 4% up and an Infosys also about 2% up. Apart from that, some notables in the broader markets are Just Dial about 11.5% up now. Pull up the intraday for Just Dial and you can see the sharpness on that chart coming in. AU Small Finance Bank, the other one that has been really running up. Adani Power in focus about 5% up. So you have a great breadth of the market as well. We'll pull up the advanced decline very quickly before we wrap for this morning on India Market Open. And what's heartening is that you were seeing a broad-based rally continuing after the last 7 sessions, Neeraj, and you're seeing that sustain the first 2 hours of trade as well.
Yeah, which is actually very, very heartening. The only question is it's an uncertain week with the IMF projections tomorrow and earnings. But yeah, maybe that's the trick. Earnings for India are looking okay.
I'm saying even in IMF projections, I think one outcome is going to be that India is relatively still the fastest growing.
Exactly.
You are maybe going to have that GDP outlook down tick slightly, but that's been done.
Yeah, and most global AMCs, so Goldman Sachs Asset Management and HSBC Asset Management both call on India as being one of the key markets. Yeah. In fact, Goldman says it is great for a standalone allocation. It's a big deal.
Yeah. So all those cues right now are positive. That's all the time we have on this edition of India Market Open, but stay tuned. Ask Profit up next.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
The first stock on the list is it's IGL now. If you see the stock that has perked up around 4% in trade, and this is largely on the back of the buzz that is on the street, that the company might announce a price hike of anywhere between 3 to 4 rupees from the 1st of April. Now this might as well happen in phases, so keep an eye out for IGL. Now this stock had to, the company had, in fact had to take a price hike post the Delhi election.
You're watching Ask Profit, a show that gets all your stock related queries answered. I'm Mahima Vacharjani and with me is Alex Matthew, and today we're going to start with something very interesting. We're going to take an audience poll where we're going to ask our viewers whether Alex should keep this beard or not. And then we'll decide whether Alex is keeping it or not. Okay, Alex, that's what we're doing.
Opinions solicited this time around. You can tell me what you think, of course. And well, I must say that I'm getting mixed reviews so far. It's early days.
Yeah.
But let's talk about, okay, so that's on a lighter note. By the way, you don't have to. Make sure that you do send in your questions, though, whether or not you comment on my beard. You can send us a message on that number that you see on the top of the screen, or you can call us on the number that is on the bottom of the screen. In the meanwhile, let's get you where the markets are right now, because you have gains of about 0.8% for the benchmark Nifty 50, and you thought that banks would be at the forefront today. And that has panned out. Gains of about 1.7% or thereabouts for the Nifty Bank. It's at 55,200. That is very close to all-time highs which were hit earlier on in the session. May not be all intraday high, and indeed that is a fresh all-time high. But really it is banks that are powering through. And the only thing that has surprised in the morning is the performance of IT as a pack. And really, there was an expectation that this pack would be under pressure on account of the Infosys results, which was a muted Q4. And if anything, the outlook for the coming quarters is not great either. But there is positivity on the street. The question is whether or not this is a relatively short-term phenomenon, and perhaps we can get Vikas Jain's view on this as well. But technical analysts earlier on in the program, or not program, but in the day, pointing to the possibility of short covering playing out for Nifty IT. What are the gains? You have Tech Mahindra, Mphasis, Oracle, Coforge, even Infi gaining close to 2% at this juncture, and despite the weak Q4. What else is standing out to you?
Right, so something like a Spandana Spurti is, gaining in trade. It's up by about 12.6%. Just Dial is another counter on the back of its, earnings. Significant margin expansion, almost 300 basis points on the back of cost efficiencies is what the management is stating. There's Nippon Life, which is up 6.3%. Utkarsh Small Finance Bank up about 5.7%. There's Vijaya Diagnostic, JNK Bank, Adani Power, Aavas Financiers, Tata Elxsi from the IT pack doing well in trade today. Some counters not doing well. Well, Avanti Feeds continues to see the pressure. Although tariffs are paused, this counter is still witnessing significant heat. It's down by about 4% Kesoram Industries again down in trade today. There's Aarti Pharma down by about 3% Network 18 down by about 1% Valor Estate also down by about 4%. So these are some counters that are buzzing in trade. With that, let's also welcome in our guest for the day, Saurabh Jain, Equity Head Research at SMC Global Securities, and Vikas Jain, Head of Research at Reliance Securities, joining us now. Welcome to both of you, gentlemen. Our first caller for the day is lined up. Raju is calling in from Hyderabad. Raju, a very good morning to you. How can we help you?
Good morning, madam. I have brought HDF Kotak Mahindra Bank at 1645, 700 shares.
Okay.
Can I buy, can I sell or hold now?
Okay. Raju, when you've bought this, did you see the technicals or the fundamentals of the bank?
Can I sell or hold? That I want to know it.
Okay. Vikas, I'll take this up with you. What are the charts indicating for something like a Kotak Mahindra Bank?
So Kotak Mahindra Bank has been the leader in this current upmove of Bank Nifty rally. So if you look at the stock has witnessed good amount of upmove from the lower part of 1850, 1900. Now it's at multi-month top. So we believe the stock will continue to do well. And it has also broken out from its suggestion of its 3 years, 4 years cycle. So the stock has further led routes up move to near to 2350, 2400 levels. So we can continue to hold on. The results are yet to be out. So we believe a leg of post the results also to be witnessed into the stock. So we can book profits near to 2350 and hold it to the position.
All right, so that's the view on Kotak Mahindra Bank, up about 23% over the last 6 months. And in fact, it has gained along with the rest of the banking pack in the recent past. You see that in the trend line on the screen. We've got the next question from Chennai. Zamir is writing in and asking about Lloyd's Engineering. He has bought a significant quantity, as much as 12,000 at a price of 27 rupees. It is more than doubled from his buy price, or it has close to doubled from his buy price. The question is that should you hold at this juncture, especially in the context of the corporate action? Saurabh, on the fundamentals, would you hold?
I do not know much about this company, but clearly on the valuation side, it looks expensive, trading at 16 times to book value and 70 times to its trailing earnings. So my sense is it is better to book partial profits.
Let me get Vikas's view as well on the charts. Is this the best point to book profits?
Certainly book it, because if you look at, no doubt his purchase price is pretty low at 27, but he has also witnessed a high of around 90 odd rupees post his investment. And from 90 odd rupees, it again declined near to 45, 46, making a base, and now moving higher, 61, 62. So you can book some amount of partial profits, because mid caps and small caps will take some more time to move up the ladder from current levels. So you can book and it's near the resistance area.
Okay. All right. So let's take the next question. And in fact, this is a caller from Bengaluru. Suman is calling us. Good morning, Suman. How can we help you today?
Good morning, Nadesh. So this RCF, I wanted to take the position at this current market price for 18 months period.
Okay. So basically you want to know, based on the price trends, whether this is the right moment to buy, or are you more keen on understanding the fundamentals of the fertilizer space and the chemical space, and whether or not now is the right moment to deploy?
Yeah, fundamentals.
Fundamentals. Okay. So Saurabh, based on the fundamentals, I guess the focus should be on the monsoons likely to be normal, the expectation of a normal cultivation period for the agriculture sector in here in India. From that perspective, would you buy an RCF at this point?
I think the last year Rabi season was good, and after the SkyMet initial weather estimates that this year rainfall is going to be very normal. Since then, I think there has been a lot of buying activity happening in the fertilizer space. Talking about specifically RCF, I think it is a good company to choose in the pack. The company's profitability is also improving if you look at the numbers. So in my sense, the likelihood of monsoons will augur well for companies, fertilizer companies and RCF also. My take is he can buy.
Why is the view coming in on RCF? Our next query is from Rajesh, who's writing in from Bengaluru. He has 4850 shares of Ola Electric, bought at an average price of 72.5. So he's sitting on a significant loss of 1 lakh rupees, and he wants to know whether he should hold, average or exit. Saurabh, I'll come back to you again. What's the view like for Ola Electric?
View is negative with respect to the company sales, and lot of allegations about the promoters and the work style ethics also. So in my opinion, I think it is better to book profits if he gets some kind of a relief rally.
So that's the view with regards to where Ola Electric is concerned, and sell is what Saurabh is suggesting. Our next caller, Dheeraj, is calling in from Hyderabad. Dheeraj, a very good morning to you. How can we help you?
Good morning, ma'am. My query is regarding Tube Investment of India.
Okay.
I'm holding 40 shares of Tube Investment at, one moment, at 2502, ma'am.
Okay, yeah.
Yeah, ma'am. Could I wait until the results, or should I add more, or regarding Tube Investment, I would like to know more.
Okay.
Like its all-time high is around 4,700.
Okay. So I think, Dheeraj, you saw the technicals and bought the stock.
Yes, ma'am.
Okay. All right. I'll take this up.
One more thing, ma'am. Can we accumulate Adani Enterprises?
I will. So, Dheeraj, we'll take only one query per viewer. So you have to choose.
Okay, so I'll choose Tube Invest.
Tube Invest. All right. Okay. I'll take this up with Vikas. Vikas, what are the charts indicating for Tube Invest?
Charts are strongly. Yeah, the charts are strongly positive for Tube Investments. No doubt, it has been a laggard in the last few days with respect to the market run-up. But we believe the technical formation remains strongly positive. It has made double bottoms near the range of around 2450, 2480 odd levels, and the stock is witnessing some amount of strong move. So we believe with the F&O rollover and the price action forming through, the stock can move higher near to 2750, 2800 levels over the next few days, weeks. So it can continue to hold and add more.
Continue to hold, add more is a view. Hopefully that answers your question on Tube Investment. We've got a next viewer who's looking for a very long-term view, 10 years on Motilal Oswal, and he had bought at levels of 420 shares. So he's gotten at slightly elevated levels. The stock is up and about today though, 5% or 4.5% gains. A very long-term view, so I'm not sure whether you've looked that far, Saurabh. The point is that we are bullish. Everybody is bullish about the mutual fund story here in India. At just over 5 crore unique investors, I guess you're looking at an industry that is only scratching the surface. If you're talking about 70 plus crore PANs in India and various other metrics, there are more people betting in lotteries than they are investing in mutual funds. So from that perspective, it is a sunrise sector. Would you continue to invest in or hold your investment in Motilal Oswal?
The growth is very much linked to how the market behaves, and in the long term, from 10 years perspective, I think one can easily say that the Indian growth story is likely to shine, and so companies operating in the financial services will also do good. So in my opinion, I think we can certainly expect that the benchmark indices will gain at a pace of maybe 12 to 15% per year at a 10-year CAGR, and because of the lower penetration and the increasing penetration, company like Motilal Oswal is likely to grow in the higher double digits in the next 10 years. So my take is it is a hold.
Okay. All right. So it's a hold on Motilal Oswal. Govind is calling us from Hyderabad asking about Enviro Infra. Morning, Govind. What about this company stood out to you?
Yeah, good morning. Good morning to all, sir. Actually, I have pleasure to receive my call, actually. Sir, Alex, sir, actually, this is the wastage theme, actually. Wastage recycling theme, actually. India is basically a broad wastage is there, actually.
Right.
In future also, you have to reduce some recycling themes, you have to encourage and then reduce the environment actually for a better actually. Actually, Vietech Wabag is already one company there actually previously, but I think maybe that is a slight expensive values.
Yeah.
I think this is the new theme actually. This is another new emerging company, Enviro Infra.
Yeah.
I can purchase some of the shares at the time of IPO. After that, I will add some more actually on the up of 260 there.
Okay.
I think to maybe add some more, at least another 700 or 800 shares for at least 1 to 2 years long-term prospect.
Okay, so you want to know about the long-term prospects. Okay, Saurabh, there are quite a few options now. In fact, there are few waste management companies that have come through, right? There's Enviro, there is Vietech Wabag, as we pointed out, and if you broaden the space, and you're also talking about Anthony Waste, which we've featured, by the way, on KYC, on Know Your Company. How would you rate Enviro Infra, and would you continue to hold? Would you add more at this point?
Well, the business is good, but it is very difficult to say it is good at this price. Even after the correction, it is trading at 10 times to book value, and which looks expensive to me. I think it is a very small company. I think Vietech Wabag is also expensive. Anthony Waste does business with a low margin profile. And don't know about Enviro Infra much, but it's a recent listing in the same space. So my opinion is, if you want to invest for the long term, I think better to wait for some time. I think you may get lower prices.
View with regards to where Enviro Infra is concerned and the entire waste management sector. Our next question is from, we have the name of the Vinay. Okay, Vinay is writing in from Mumbai and he is holding Utkarsh Small Finance Bank at 30.7 and holding significant quantity of 34,000. So he's sitting on a loss of around 1.5 lakh rupees right now, and he wants to know whether he should hold, exit, or what should be the next course of action. Because I'll take this up with you. What are the charts indicating? Is there a possibility for him to recover some of his losses in the near term?
Some of the losses can be recovered in the near term, but again, there could be an exit opportunity because if you look at the small finance banks or the microfinance companies have not been done great over the last 2.5 years, and still conditionally it poses challenges in terms of it. So we believe anytime any rally near to 28.5, 29 levels would be a good exit point for him to exit the stock and invest into some tier 2 private banking names like IDFC Bank or RBL Bank, which looks attractive.
Okay, and in fact, we also have a query on IDFC First Bank, Angel. So I hope that answers your query as well, because she's also holding 3,000 shares of IDFC First Banks, and she wants to know whether this is the right time to enter. So I hope, Angel, that answers your query. All right, our next caller, Vijeta from Kolkata, is calling in. Vijeta, very good morning to you. How can we help you?
Hi, good morning.
Good morning.
So I have a query on LT Foods.
Okay.
I have 150 shares bought at a price of 185.
Okay.
I want to know the long-term perspective about this share. So I want to hold, say, for 2 or 3 years. So what is the target price that I can look for?
Okay, got your query, Vijeta. I'll take this up with you, Saurabh. With everything that's happening right now, right now we do have a 90-day pause on tariff, but if that pause gets lifted and if we are imposed with tariffs, LT Foods is one of the counters that might get impacted because they do export a large amount of rice to the US. Around 34%, if I'm not wrong, is the percentage of their revenue from US. What's your view with regards to LT Foods and any other rice manufacturing or even trading counter that you think would be a counter to invest into right now?
I think the point you have talked about, any company working in the consumer staple space can fall prey to the tariff. But in my opinion, I think there will be some rationality in imposing tariff because earlier it was a blanket tariff. In my opinion, I think US also doesn't want to raise its food inflation, and being a rice company, LT Foods, I think it will not be impacted much going forward. That is what my opinion says. So in my opinion, I think she can hold.
Can hold on to LT Foods, but remember that as Mahima just pointed out, with Apex Frozen, if I'm not mistaken, Avanti Feeds, which is down about 4% in trade today. There's a lot of volatility in these stocks because of the kind of uncertainty that's swirling around global trade. As things stand, of course, by the way, you might have seen those visuals of JD Vance in India. There is some talk of a bilateral trade agreement between India and the US, which could be worked on. And sources are telling NDTV Profit that this could in fact be wrapped up before the deadline. And so that's certainly something that could be a tailwind for all of these stocks. But there's a lot of uncertainty at this juncture, remember that. Yes Bank is a stock that we're talking about next, and the bank came out with a decent set of numbers, in fact. And all of the metrics look pretty decent. You had an expansion in the NIM as well. You had a decent ROA, a return on assets as well. Ranjan Karkera from Bengaluru wants to know about this next, and he's holding Yes Bank at a price of 23.5. In fact, we've got a few other viewers also who have bought around that 21 to 23.5 level. The question is, would you hold on for the next 5 years? In a very long-term holdings being sought, I'm pretty sure you don't have visibility for that long, but then this is a dark horse, if you can call it that, in the banking pack that you would bet on, right? So would you deploy more at this juncture based on what you saw in Q4?
Yeah, I think you are absolutely right. The numbers were good on all the parameters, but in my opinion, I think the balance sheet is still not out of woods. I think there is some problems with respect to its NPAs and the cleanliness of the book and with respect to the growth. I would rather suggest to bet on the mid-sized banks like AU Small or Federal Bank for if you have a time horizon of 5 years.
Okay, Federal Bank, and this is a pick that we had earlier on in the day as well. India Market Open, we had Parag Thakkar talking about Federal Bank and the fact that Mr. Manian was taken in charge. He feels, Parag Thakkar, that a similar story to ICICI Bank will play out, and that's quite a big call. So keep that on your radar as well. Up about 3% in trade today is Federal Bank. We've got the next caller from Bengaluru. Solar Industries is the name of the counter he wants to know about. Ray, good morning. How can we help you today?
Hi, good morning, Alex. Can you hear me?
Yes, I can hear you very, very clearly. Good morning. Please go ahead.
Yeah, good morning. Yeah, so I bought Solar Industries in Feb, and it gave, it has risen almost 30% since then.
Yes.
So I would just like to know if it is time to book partial profit or I can still hold on to the share.
Okay.
And in terms of both technical and fundamental view, if you can provide, it will be great.
It would be great. But then when you bought it, I just want to know, Ray, what was the time horizon that you had in mind?
3 to 6 months.
And so, okay, so are we done with 3 months? When did you buy this?
Feb.
It's
just about 2 months.
Just about 2 months. So, but did you have a target in mind when you bought the share?
13,000, I was expecting somewhere around that in 3 to 6 months.
Okay, Vikas, I will come to you then. We've already made quite a bit of ground and quite a stiff target that he set himself, 3 to 6 months, right? We're talking about 40% or thereabouts, if I'm not mistaken. Is there a possibility of 13,000 on the cards?
Well, 13,000 could be on the cards. That is almost near to its 52 previous 52-week high. But I would suggest to book some profits and get out because the stock has seen a good consistent move since he has purchased. No doubt his timing would be right, same coincidentally with the market's bottoming somewhere with the solar industries per se. So he could put some profits as the stock is also into the F&O basket, so which would witness some amount of rollover activity, and it can again chip in near to 11,800, 11,600 odd levels. So some partial profits would be recommended.
Partial profits on solar industries, but Saurabh, any view on the fundamentals since it's been sought?
The companies on the operational front, companies posting 30-40% growth in both in the top line and bottom line year on year. On the valuation front, it looks expensive to me. I think it is better to take some money off the table.
Better to take some money off the table is the view coming in. So contradictory views there. While Vikas seems to be bullish with respect to the charts, Saurabh says
I think he had a sell call.
He had a sell call. Okay,
yeah.
Then my bad. Okay, then both views are in a similar fashion. Both are saying book some profits right now. All right. The next query is on Reliance Industrial Infrastructure Limited. Karan from Kolkata wants to know whether he should hold or sell. He's holding 83 shares bought at 1075 a piece, and 1 year is his time horizon. Saurabh, I'll come to you on this one. What's the view like?
I would suggest to exit.
Exit is the view coming in on something like Reliance Industrial Infrastructure. The next caller, Soma is calling in from Bengaluru. Soma, a very good morning to you. How can we help you? Okay, I think we seem to have lost the caller, or we do have his query. His query is on SBI. He's holding 255 shares bought at 730 a piece, and probably wants to know what should be the next course of action for him.
It's a very good buy price.
Absolutely, and sitting on profits of around 23,000 odd rupees. Saurabh, what's the view like for SBI?
I think it is clearly a hold for long term.
Okay, hold for long term is the view coming in.
Why don't you also get Vikas's view? Because Vikas, the private sector banks really are what we've been focusing on, but I think very quietly, relatively speaking, the public sector banks are also ramping up. State Bank of India, 3% up in trade today itself. What are the prospects on the charts?
The prospect looks promising. As you said, you suggested, Alex, that private banking sector has been dethroned. It is outperformed. It is still a new all-time high. But in fact, today, PSU banking sector index has also broken out from its 200-day average with strong volumes. And with SBI leading the front, we believe State Bank could see some amount of more. So 868.80 could be possible onto the target, which is near to its previous 52-week high. So the short should do well. We can continue to hold.
State Bank of India, both on the fundamentals as well as on the technicals. We've got more questions coming up on the other side. We have to slip into a very quick break. Do stay tuned. We'll be back before you know it.
That's huge. That is a biggie. It's out of it.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
The first stock on the list is it's IGL now. If you see the stock that has perked up around 4% in trade, and this is largely on the back of the buzz that is on the street, that the company might announce a price hike of anywhere between 3 to 4 rupees from the 1st of April. Now this might as well happen in phases, so keep an eye out for IGL. Now this stock had to, the company had in fact had to take a price hike post the Delhi election because the cost of gas had increased for them, and because of that the margins had come down, but they had not taken any price hike so far. So the street is expecting a price hike announcement to come in, which will be effective from the 1st of April, and it could be around 3 to 4 rupees, and it could well be implemented in phases. So keep an eye out for IGL.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your
Hi, welcome back. We're talking about all of your questions on the stock markets as things stand right now. And we've got quite a few of your questions already answered, but there are more, of course, that have come through. And the first one on this side that we're taking is on GMR Airport, and Sandeep is writing in, and he's asking about this. He's bought at a level of 99 rupees, which is above the current market price. He's bought 1,000 shares, and he's wondering what the prospects are. Saurabh, on the fundamentals, the latest update came through on the fourth quarter, and they have handled 8% more traffic than they did in the same quarter last year. So it's positive. It's looking good, right? Would you continue to hold this?
Yes, I mean, you're absolutely right. The traffic is also rising, and there is a possibility of hike in the fees also. So in that sense, I think it makes sense to go.
That's the view with regards to where GMR Airports is concerned. Our next question is on RVNL. Bala from Coimbatore. Okay, so we are taking his South Indian Bank question. So he's writing in, he's saying the current situation of South Indian Bank is bought at 30 rupees per piece, and he wants to know as to what should be the next course of action for the next 3 months. Vikas, in terms of charts, what are they indicating?
The charts looks pretty promising because if you look at this stock has broken from its weekly structure, continuously making a higher top, higher bottom. So it looks pretty promising. We believe this stock can move further high near to 30-31 levels, which is its purchase price. So we can continue to hold up.
I'm going to try and take a combo view, since banking really is the conversation of the day today, and quite a few of these banks are doing particularly well. We've got Rajan's question, and he's asking about HDFC Bank, which he's bought at levels of 1750. Pull up HDFC Bank. It's done particularly well in the recent past. In fact, it is up to 1,922, and he's looking at whether or not he should continue to hold or book some partial profit, or at least he's got 50 shares, so he can book a considerable amount. And also on the fundamental side, I'll come to you after this, Saurabh. Dinesh from Gurgaon is asking, any pocket of relative value comfort in the banking space where you can hold for a period of 6 months? And I know that it's a relatively shorter term horizon, but something that you could see turn around on the value basis. So first, on the technicals, Vikas, would you book profits in HDFC Bank?
So continue to hold on HDFC Bank, because if you look at the stock is a strong outperformer over the Nifty 50 basket in terms of bank Nifty. Bank Nifty has broken out almost near to all-time high, and the outperformance will continue. So maybe the decline would be 40-50 rupees here and there, 2.5-3%, nothing more than that. It looks from the current levels. So we can continue to hold on. Maybe near the round number mark of 2,000, some profit boosts can be achieved.
That's the view on HDFC Bank. What about you on the fundamentals, Saurabh? Would you buy anything right now? Where do you find relative valuation comfort? Because we've moved very quickly on these banking stocks.
I think if you look at the long-term valuations, both private and public sector, there are many stocks which are available from at their long-term average or even below their long-term averages. In the last 2-3 years, banking hasn't performed in the market. In the private space, I would suggest maybe he can go with the Axis Bank, or in the PSU space, Indian Bank also looks good to me.
Okay, so that's the view with regards to where the banking sector is concerned. Our next caller, Jyoti, is calling in from Karnataka. Jyoti, a very good morning to you. How can we help you?
I want to know about Trent shares. Shall I hold or sell it? I'm having 2,000 shares Trent at purchase rate 2,600 rupees.
Interesting, Jyoti. You've bought at the right levels, I must say. You're sitting on a significant profit of almost 54 lakh rupees. So kudos to that. I believe you want a fundamental view on this, Jyoti.
Yeah.
Okay.
What is ultimately what I have to do? Whether I have to sell it or hold it.
Okay. Saurabh, I'll take this up with you. he's bought at the levels of 2,600 levels. That is quite attractive. Although the stock has taken a significant beating, he's still sitting on a profit of around 54 lakh rupees. Do you think that he should book partial profits or continue to hold? What's the view like?
When the growth was coming, the multiples were also expanding. Now the growth is tapering off, and the multiples are also cooling off. They are squeezing now. At this current price, also the stock is priced at about 100 times to trailing earning, 40 times to book value, which is quite expensive. I think you have decent position in the company, and it is good to take money off the table. I think they are good profits. Even you haven't sold it off at a higher price, but these prices are also good to exit your position.
I want to spend a little time, Jyoti, on this one, if you'll allow me. You bought at levels of 2,600. Can you help me with when you bought Trent?
I don't remember
approximately,
exactly, but
which year, for example? Was it post-COVID?
Maybe post-COVID.
Most post-COVID. Okay. So, and when it hit 8,000 levels, you were not tempted to book at that point? Book your profits, Jyoti?
No. Actually, I sold some little bit shares, but the report was that it will go up because there are a good number of positive ideas that were given to me by all the even your NDTV Profit also was telling that to continue the same. But it has come down from 8,000 to 4,000 and odd.
Yes.
So I thought of rethinking about this.
Yeah, it makes sense. And it has recovered from those lower levels as well, which is interesting. Jyoti, now, follow-up question, because you have a considerable holding, are you comfortable sharing with how much of your portfolio is Trent right now? Because the stock has also gained quite considerable since you bought it.
Yeah.
So how much of your portfolio is Trent?
My portfolio strength is about 40%. A large number of shares are in this only.
Okay. I understand. So Saurabh's advice to you is maybe take some money off the table. Saurabh, if he has 2,000 shares, which he's acquired at 2,600, and you're suggesting that he book some profit, take some money off the table, where do you suggest that he deploy it? If he's saying that 40% currently is Trent, where do you suggest that he deploy it?
I think banking sector makes sense, and tactically, I think he can also invest in the fertilizers. In the banking, I would suggest him companies like AU, Federal, Axis, Indian Bank, and the fertilizer space. I would suggest Chambal Fertilizer or maybe Paradeep Phosphates.
Okay, so those are the replacements for Trent. If at all, Jyoti, you want to book profits, is the view coming in from Saurabh. All right, the next question is from Mahalakshmi, who's writing in from Hyderabad. She's holding 800 odd shares of DLF from October 2024 at 884 a piece and is sitting on a loss of 1.65 lakh rupees. Wants to know whether she can average out right now or not. Because I'll take this up with you first, because she wants to know if current levels are attractive enough to average out and maybe reduce some of her losses, or do you suggest booking losses completely right now?
So I would not suggest to average also, neither to book a loss. She can continue to hold maybe a higher side of around 725, 730 near the 100-day average. A pullback could be expected, because if you look at the stock has witnessed some good rebound from the lower part of 585, 590 to 680 odd levels over the past 10, 12 trading sessions. So it would not be feasible to average at current levels. Maybe run up to the move, the real estate sector could do pretty well with the strong broader market outperformance. So 720, 730 would be a good exit point to enter, which is near to the 100-day average.
Okay, so that's the view with regards to where charts are concerned for DLF. Saurabh, she's also asking if this is the good time to invest in something like a macro tech. If not macro tech, something in the real estate space that you feel is attractive enough to enter right now?
I think if you look at the real estate space, there have been price increases in various pockets, and there were good sales coming in. And now I think the prices are also getting stabilized, and the sales are also cooling off. In many cases, we have witnessed March quarter didn't went good the way it used to in the past 2-3 years after the COVID. And in my opinion, I think some kind of a top out has been made in the real estate for the time being, and these stocks are cooling off. So I would suggest, I think, better to refrain from investing in the real estate space.
Okay, so yeah, bear in mind that this sector as a whole has seen quite the gyrations between September of last year heading into December, and then it's seen a roller coaster ride, if you can call it that. It's up in trade today, but there you go. So you see quite the wild gyrations to the peak around December, and then it's fallen off the cliff from that point. Good pulling that up. Let's talk about Britannia next, and we've got Niva from Chennai, who's bought 4 shares at a price of 4,826 in the green right now, and wondering whether to hold or sell. What is the target price expected for the long term? Not defined the long term here, but since a target price is being spoken about, Vikas, on the charts, what does it look like?
The price can be higher near 258, 50, 5900 levels, because look at the stock has consistently moved up from the lower part of the range of 4650, 4800 levels. It has convincingly crossed its 200-day average with strong volumes and sustaining higher over the past few days. So maybe some consolidation where the IT and the banking part of it have been moving around today's trade, and consumer is at the receiving end. But once the rollover happens, we believe the stock could further move higher. So 5850, 5900 could be the potential targets for Britannia.
Next question is from Satyan, who wants to know whether he should hold Chambal Fertilizer, now about 35% of profit that he's sitting on, and wants to know if he should either hold or switch to some other counter like GNFC. I'll come to you, Saurabh, on this one. What's the view like?
I think he can still hold on to the Chambal Fertilizer, or in case he wants to shift money, I think he can shift some money, take money off the table from some profit of Chambal Fertilizer and shift money to the Paradeep Phosphate.
Okay, interesting. And we also have a caller lined up. Do we have him online? He's bought Chambal Fertilizer 600 shares at 10 rupee a piece. Amog, a very good morning to you. Can you tell us when did you buy that? Do we have Amog? Okay, it seems like we've lost him, but 10 rupees, the stock is currently trading at 686, so sitting on a profit of 4 lakh rupees right now. Vikas, with respect to where technicals are also concerned, what do you think? Is there a further upside there?
The stock is consistently making higher tops and scaling into 52-week high. It has consistently outperformed into the April expiry. But once the stock strongly outperforms in any particular expiry, then we expect some amount of sideways to corrective action in the consecutive month. So would recommend to put some profits if somebody is holding.
Some profits, and there are several avenues that you can consider deploying, and we've discussed some of them as well. Because I haven't asked you, where are you seeing value right now? Because I think a lot of people have been holding stocks despite the kind of ride that they've had over the last 6 months. And maybe some of them, it makes sense to book profits as you've discussed, as Saurabh has discussed. Where do you see opportunities right now?
The capital market space looks interesting. We have witnessed a good amount of move into the protein and the capital market related stocks. So protein looks pretty interesting from current levels. The company has been critically poised, and we believe the stock will move further higher. The company has also finished its QIP last quarter near to sub 1650, 1700 levels. So we believe the stock is interestingly poised, and the technical setup also looks pretty attractive. So protein looks pretty good from the capital market ecosystem, followed by Motilal Oswal or Angel One.
Okay. All right. The next question is on Tata Tech, relatively short-term question. Bimal from Mumbai is asking, he's bought at levels of 850 and he's got 1,000 shares. He's in a loss right now, and he's looking at getting a technical view for the next 6 months. Vikas, again, coming to you on the chart, 6-month view, where would you place your target, and what would you keep as stop loss?
Continue to hold on in terms of Tata Tech. No doubt the stock has witnessed a good amount of volatility over the past 4.5 months, and it is a continuous decline. So from the highs of around 1130, 1150, it made post the IPO of strong listing, it has been a continuous decline. But we believe the IT sector has rebounded and the risk reward ratio remains favorable in terms of loan from the IT sector. Maybe it would take some amount of time, and it has got a view of around 2 quarters, which is around 6 months. So we should hold on. We can move the stock, expect the move start to move high near to 745, 750 levels.
Okay, Parth is calling us from Gujarat. Parth, केम छो?
एकदम मजामा sir.
I think you've got nerves of steel, Parth, because you bought Suzlon at 5.3 and you have held. When it has gone to 80 rupees and it has fallen to 57 rupees, you've still held. Can you tell me how you're getting that kind of confidence?
Sir, it was just because I knew that this solar sector, I mean the wind sector and the renewables have been hyping up right now. So that was my sole reason, and I don't know why, but I have some kind of love with Suzlon, I guess.
Okay, and for a stock that has given you the kind of multi-bagger returns that you've gotten, there's no reason why you should not have that kind of love. The question is, will that love be returned by Suzlon in the near term? So what is your question? Should you book some profits? Is that what you're asking, Parth?
Yes, I want to know that should I book some profits, partial profits, because I was thinking of getting it off about 2,500 shares, and so I can place it somewhere else.
Understood. So basically you want to know on the fundamentals, or is it technical view that you're seeking?
Fundamentals I know it's getting the orders and all. I want to know the technicals about it.
Got it. Okay, got it. Vikas, it's held at around this 60 level, if I'm not mistaken, for some time. And so the question is, should you take money off the table? And you've discussed a few opportunities to deploy, but this specific question, 2,500 shares out of 5,250, would you book now and where would you put it?
We can continue to hold on because its purchase price is so mediocre, so it doesn't matter whether the stock declines by 4 or 5 rupees or from here on. And in terms of specific technicals, the Suzlon, the stock has made multiple attempts to cross the 100-day average of around, and they will and again resisted and declined. But this time it seems the stock is poised for a breakout. So we believe the stock will move further higher, and anything near to 64, 65 rupees, another 10 to 12% upside, we can book some amount of partial profits.
Okay, so that's the view with regards to where Suzlon is concerned. Our next question is from Umesh Parekh, who's holding 1,000 shares of Bajaj Finserv and wants to know the near-term target for us. He's a long-term investor and wants to know as to what should be the outlook for this particular counter. Saurabh, I'll come to you on this one. What's the view like?
For the long term, we can hold. I won't be able to give short-term targets.
Okay. All right. The next question is from Srinivasan, who's writing in from Pune. He's purchased Alkyl Amines 50 shares at 3050 a piece and wants a long-term perspective on this. What's the view like, Saurabh? I'll come to you again on this one.
For the alkyl amines, I think some kind of a turnaround is happening in the chemical sector. I would just hold. On these valuations, I think it seems that stock has been somewhat bottomed out.
Saurabh, Bajaj Finserv, he's given us a clarification, Umesh. 4812 prices before split and bonus. And so I think he's been holding since the 31st of January 2018. And so from that perspective, I don't know what the current price or acquisition price will be. But if you've been holding for so long, what should be the thinking for Bajaj Finserv?
I think long term he can hold, but if he wants to switch money, I think he can from the financials he can book. If he wants to book, he can go into the banking.
Go into the bank, and we've already discussed a few options in the banking space as well. All right, let's take the next question. And Nidhi, as always, is very kind and she's, thanking us. We should thank you, Nidhi, for tuning in. You've got a question on Jio Finance, and this is a company that has posted its numbers. 1,000 shares is what you own at a price of 220. What price should you buy more for the next 12 months or so? Holding with gains, and this is rare actually, because a lot of people who've bought into this company or this stock have been disappointed, at least in the near term. The question is for you then on the charts, Vikas. Would you hold for a period of 12 months or would you add more?
So she can continue to hold for a period of few months or 1 year, what she's been looking for. But in terms of addition, it should wait some amount of decline. No doubt the stock has made a double bottom near to sub 205, 210 levels. So I'd say the stock has done pretty well post inclusion into the Nifty 50 last month. The stock has witnessed some amount of ETF-based buying, which has garnered further to move to higher band of 245 to 48. There is a minor resistance near to 265 levels. If that has been surpassed, the stock would be in a strong bullish momentum. So in terms of adding, she would wait for some decline near to 233 to 35 for levels.
Okay, our next query is from Dharma, who is writing in from Hyderabad, holding 80 shares of ITC at 412 apiece, and wants to know the outlook for the stock as well as sector for the next 2 years, and wants to know if the stock will have any impact of Trump tariff, and also wants to know if he can expect 12 to 13% returns for the next 2 years on a counter like ITC. Saurabh, I'll come to you on this one. Today itself, we have significant updates coming in on ITC. It is on an acquisition spree. They've acquired 24 Mantra Organic, plus they've also further invested in Mother's Purse as well. 24 Mantra is basically an FMCG counter that they've acquired, and Mother's Purse is also into baby products. What's the view like? 12 to 13% achievable in the next 2 to 3 years?
I think it is easily achievable. In the past also, they have done some acquisition and they have been proved good for the company. If you look at all the businesses, tobacco business is growing, hotel business is doing exceptionally well, paper business, FMCG business. In the FMCG business, they are keep on adding newer products, and the growth is also coming. So I think a company like ITC, it is a kind of a portfolio stock. You can easily expect good return from it.
Okay, so that's the view with regards to where ITC is concerned, and bullish is the view. I mean, Saurabh is bullish on ITC. All right, our next caller, Nursing, is calling in from Visakhapatnam. A very good morning to you, Nursing. How can we help you?
What is the position of this FX frozen food?
Okay, do you want a technical view on this or a fundamental view?
Both.
Okay.
Both. Whether we can go for hold for long further period.
Okay. All right. I'll take this up with you, Vikas, first, and then go to Saurabh, because we already, were talking about how Avanti Feeds has already taken a beating because of Trump tariffs. Apex Food is another counter which could be impacted, although their exports are not significant enough as compared to where Avanti Feeds stands. But with respect to where charts are concerned, Apex Frozen, how is it looking?
Recommend to avoid, because if you look at, there are multiple headwinds going through with respect to Trump tariff, and no doubt in terms of price performance also, maybe Avanti Feeds witnessed strong amount of output, but Apex failed to follow up action with even the same relative in the sector. So nothing great exciting in terms of chart patterns, so it's better to avoid with an even.
Avoid is a view on the technicals on Apex Frozen, and remember, this is what we said. Significant uncertainty prevailing right now in the space. PFC REC, normally we don't take multiple stocks, but then since this is a pair that is often spoken about, we will take it. And this is Raj's question. He's bought both and he's wondering whether to hold for a period of 5 years. The stocks are up and about in trade today. Saurabh, on the fundamentals, would you hold for 5 years? Would you add more?
I think from the perspective of 5 years, both stocks make sense to hold. I think there is going to be significant activity in the power sector, and they are the financiers, PFC at the cities level, and the REC is more into the interiors of the country. So in my opinion, I think he can hold on to both the stocks.
Okay, Jeevan is making a point. He's been posting every day and we've not been taking your question. I'm so sorry, Jeevan. It is not on purpose. I'm taking your question right now. You've got 168 shares of Canara Bank that you bought at a price of 92 rupees per share. And can you hold or sell it? What is the target that you would put on it? The stock is up and about in trade today, 99 or thereabouts, so it's above the buy price. Would you sell right now? So Vikas, on the charts, how does Canara Bank look?
We can continue to hold on, because no doubt Canara Bank was a strong outperformer in the calendar year 2024. And since the corrective action happening through, the stock has witnessed some amount of volatility, but it is poised for a higher breakout. It has witnessed multiple bottoms near to those and higher tops. So we believe the stock to do pretty well. And as the PSU banking index is poised to break out the 200-day average, Canara Bank could be strong outperformer. So we can move higher. The target price near 205 to 207 levels over the next few weeks.
Hopefully that answers your question on Canara Bank. It is time, gentlemen, to hit the rapid fire segment, and this is where, remember, we throw as many questions at you over a period of 2 minutes as we possibly can. Do answer in a short and cogent manner. The first question is on Siemens, and Vishakha from Bengaluru wants to know. She's bought at price of 5,363. This is the pre-demerger price. Would you hold Saurabh for a period, for a long term?
Hold.
Okay, PC Jewelers is the next counter. Nagabhushana is holding 600 shares bought at 17.4. What's the view like with respect to where technicals are concerned, Vikas?
Maybe avoid and sell it.
Sell it. Okay. Gateway District Parks is a stock bought at a price of 62.5, and Arsing wants to know whether to hold. Saurabh, on the fundamentals?
Hold.
Okay, Prabhnur Singh is writing in. He wants to know what should be the next course of action for something like an SBI life insurance. His time horizon is 2 to 3 months. So where charts are concerned, Vikas?
We can continue to add more. 1680, 1710 should be the target price.
Okay, Venkatesh wants to know about Balu Forge, which he's bought at a price of 814. He's seeking a 1-year time frame. Would you reduce, sell, or add, Vikas?
Stock has witnessed some volatility at current levels, so it's better avoiding.
Okay, NMDC is the next counter. Prasanthi from Visakhapatnam is holding 400 shares bought at 16 rupees a piece. Should she hold, sell, or add on dip? Saurabh, what's the view like?
Hold.
HDFC AMC bought at levels of 4,000. 10 shares held. Should you book partial profit from a perspective 1 to 2 months? Rajiv wants to know. Vikas?
We continue to hold. Maybe 4550, 4600 could be the target.
Okay, RVNL is the next counter. Uma from Coimbatore wants to know what should be the short-term target for this particular counter. She's holding 500 shares at 490 a piece. Vikas?
RVNL 385, 390 is a strong resistance area. If that is surpassed, then we can move ahead.
Okay, we've already... CG Power bought at a price of 91 rupees. Vishwantha wants to know, should you book profits at this point? He's holding at 91 rupees. Would you book, Vikas?
Hold.
All right. Quite the acquisition price there for CG Power. All right, gentlemen, thanks so much for joining us this morning. Always a pleasure having you on the program. All right, and viewers, I know a lot of you have asked questions and maybe have not gotten a response, but hopefully the conversation that we've had and the stocks that we've discussed have benefited you in some way. We'll be back tomorrow to take more of your questions. In the meanwhile, from Mahima and myself and the team that put this show together, thank you so much for watching, and do stay tuned. This is NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
To India specifically, I really think India has a fascinating opportunity, because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
The first stock on the list is It's IGL now. If you see the stock that has perked up around 4% in trade, and this is largely on the back of the buzz that is on the street, that the company might announce a price hike of anywhere between 3 to 4 rupees from the 1st of April. Now this might as well happen in phases, so keep an eye out for IGL. Now this stock had to, the company in fact had to take a price hike post the Delhi election because the cost of gas had increased for them, and because of that the margins had come down, but they had not taken any price hike so far. So the street is expecting a price hike announcement to come in, which will be effective from the 1st of April, and it could be around 3 to 4 rupees, and it could well be implemented in phases. So keep an eye out for IGL.
Hello and welcome. You're watching KYC, Know Your Company. Today we're going to be talking about NTPC, and just to kind of list down a few reasons as to why we are talking about NTPC today. First off is we're going to try and assess whether this is a pocket of safety in this time of uncertainty, and there are plenty of them, at least at a global stage, and even more so domestically. Growth seems to be coming off in that sense, and it's a roll-on impact of everything that's happening globally. So is this that pocket which is domestic facing and looking better in relative terms? So that's point number one. Point number two, valuation. Is the risk reward fair at this point? So the opportunity size may be so, but is the risk reward therefore fair from an investor perspective? So this is the first reason why NTPC. The second one is valuation. Is risk reward fair at this point? Because it's not trading at its typical valuations or long-term averages. Can NTPC deploy fresh capital at high return ratios? This is my third question, and which I'd like to have answered. The fourth one is opportunity, whether it is so opportunity is large is absolutely fair, whether NTPC is well placed to capture that opportunity, or whether there are other players in a better space to capture the incremental market share coming out of the opportunity size. The fifth one is what are the risks like, including the risk of execution, because if execution does not happen, Mihika, you might likely not see the kind of outperformance that we've seen over the last 5 years from the NTPC stock. So those are the 5 key factors that I'll watch out for where NTPC is concerned. Welcome, Mihika, by the way, and let's quickly start off with what NTPC does. Well, it's the largest power generator in India. It has the largest capacity for thermal power in India as well. It operates 92 power stations and has a huge capacity. 76 gigawatts is the total capacity that NTPC has. It's 17% of India's installed capacity, 25% of India's utilized capacity for FY24. So extremely large, and it's a very, very important company in that sense. If NTPC stops producing power, you'd likely see
a big demand supply gap.
6 hours of our air conditioner not functioning, and likely being that the country will come to a standstill. So something to keep in mind. The second one is with regard to how, so it's 82% coal-based capacity that it currently operates, 18% renewables. This may shift, and we'll talk about this shift as well as it starts to happen and as it starts to unfold. We'll talk about how we're expecting that to happen. They have 17.6 gigawatts of thermal capacity under construction. Mind you, a lot of this has started to come on stream because of the large power demand and the deficit that we are playing at, and expected to add 5.5 gigawatts of thermal capacity over FY25 to 27 as well. So that's something to look out for on the thermal side of things. But ESG, Mihika, everyone wants to go green, so does NTPC. They're going into renewables, they're going into, they already do hydro in a big way, but they also want to go nuclear. So
Yes.
talk to us about that.
So, their focus on thermal is going to stay, because as we know that we're going to need that round-the-clock energy as we transition to renewables. But the priority for future growth is renewables. They're targeting 60 gigawatts of renewable capacity by 2032. This compares to 3.5 gigawatts on a consolidated group level as of FY24. Majority of this capacity will be built and deployed separately by NTPC Green, which is also its listed subsidiary, and they have 10.3 gigawatts of renewable projects currently under construction. But this, apart from thermal and your renewables, they have other multiple growth levers. Up first, they have coal mining. They have 8 captive coal blocks, means just owned by the group. 2 of them are currently under development, but these 8 blocks combined have an estimated mining capacity of 86 million tons per annum. The next part is pumped and battery storage. We've recently seen battery storage being mandated in upcoming tenders by the government itself. They're targeting 8 gigawatts of pumped storage capacity by FY30 and beyond, and the subsidy has also issued battery storage tenders of 2 gigawatts of capacity. And lastly is nuclear storage. Now they're exploring building small modular reactors. A concrete announcement is expected in 6 months or so, and they started work on 2.6 gigawatts of nuclear plants. And it's key to note that NTPC has actually a JV with one of India's premier nuclear capacity builders, and they already have a step in the door. But Harsh, let's talk about the KYC ratings.
Yeah, so first off, let's try and break down as to what are the metrics that we look for where an NTPC is concerned. We'll start off with an income statement, then we look at the balance sheet, we look at cash flows, we look at key ratios, and we look at capacity additions as well, because that's going to hold the key. So maybe capacity additions and how that plays out, because one is what they've done in the past, and second is what to expect in terms of capacity additions, which will impact the revenue going forward as well. We look at key ratios, shareholding, street cred, and street coverage, along with valuations. So we look at all of that and give you a quick summary on how we rate this company, and thereafter taking a view from Nikhil Nigania of Bernstein with regard to NTPC and with regard to some of the questions that we posed at the start of the show. Let's start off immediately with the income statement. Now, in terms of the growth itself, it's been fairly healthy. You're looking at FY22 numbers, which were roughly at 1.32 lakh crore in terms of top line. It's done that in the 9-month FY25 period. So the growth over the 3-year period has been fairly healthy, 17%. YOY, it's been slightly more tepid, 6%. But if you're looking at margins YOY, they've inched up a wee bit. While it's flat largely, but inched up a slight bit. 3-year margins have actually come off, and that's because of raw material costs and raw material power costs going up. So some energy related costs have gone up, including costs for coal and fuel, and due to which you are seeing the kind of impact on PAT versus the growth that we are seeing on revenue, which is 17%, but PAT is just about a 12% growth. So we're going to give this a neutral, because what we want to see is a translation of mid to high teens growth on top line to translate to the bottom line. That's not exactly happened, and that's something we're looking for. So we're going to do or give this a neutral. But what's the outlook with regard to capacity? Because that will give us more perspective on how this top line number as well as bottom line number will evolve. Mika, talk to us about that aspect of things. How, what's capacity adding up to?
Yeah. So first, let me just give a short synopsis on how it's grown historically over the last 3 or 4 financial years. Group capacity has grown 14% to around 76 gigawatts currently versus 60 gigawatts that we saw in FY21. And now total capacity of over 76 gigawatts is what we're seeing on a group or consolidated level for an NTPC. And they have 30 gigawatts of capacity under construction. This is across thermal, renewables, hydro, all of these counters. Now, the group has 17.6 gigawatts of thermal capacity under construction, and this is expected to be completed in around by FY31-32. And what thermal capacity getting executed does is increases regulated equity, which has guaranteed returns for the companies. Currently, all their coal-based capacities are under the regulated equity model. It's expected to add 5.7 gigawatts of thermal capacity over FY25 to 27 itself. And in the renewable space, like I mentioned, 10.3 gigawatts of renewable energy projects are currently under construction. So the pipeline, whether it's their core business of thermal as well as renewables, which is where they're pegging their next level of growth coming in, it's a healthy pipeline, and it's a thumbs up on this run, considering historically they've grown their capacity at a good pace, and they have specific targets and a good pipeline to execute in the next over the medium term.
Very interesting. So that's on capacity. Let's look at the balance sheet now, because it's a PSU and therefore picks up funds from debt markets at extremely low levels. Your equity share capital again is a decent-ish in terms of size. Mind you, this is a very, very large company. Just for perspective, I want to quickly pull out the equity share capital plus the reserves. That adds up roughly to around 1.7 lakh crore at the end of September of 2024. Of course, we don't have the full year FY25 number, but H1 FY24. So both equity plus reserves is roughly 1.7 lakh crore, but the debt, as you can see on your screen, is 2.4 lakh crore. So the borrowing number is extremely high. It's roughly paid out 13,000 crore in terms of interest payments in the last year or so, and therefore it funds its debt at extremely low cost of debt, which is again a key positive. It gets a sovereign rating because it's 51% owned by the government of India and therefore enjoys that, and its cost of borrowing is maybe 1% or 2% lower than most other players in the industry. For example, a JSW Energy who I spoke with just about today, or rather on Saturday, came out and told us that 8.8% is what they are funding their debt at. So this one is at a reasonably lower level to that, clearly. And that's the one big advantage that it has. But yet, the balance sheet size is very, very large, and the debt number is extremely large as well. And therefore, we'll give this a neutral. Risk is low, of course, of the debt on that balance sheet, but nonetheless, something to be mindful about. Cash flow, Nika.
So what they've been investing so far and adding, it is translating into a good set of, cash flow. Now, if you look at the cash flow from operations, FY22 to FY24, we actually did see a slight moderation. But H1 FY25, which is what are the latest values that we have available, 67% of the cash flows from operations that they saw in FY24 has already been reached. And in terms of their net cash flow is where you've actually seen the turnaround. FY22, you had a negative balance of 274 crores. This kind of contracted to 210 crores in FY23. FY24 is when they went net cash flow positive at 398, and in H1 FY25 the net cash flow number stands over 1,200 crores, which is 3 times than what we saw as a whole in FY24 as a fiscal. So it's a thumbs up on cash flows. Whatever they've been investing has been, fruitful for them, and we've seen the net cash flow number, which actually was negative 2-3 fiscals ago, turn positive and seen a triple growth in the first half of FY25 itself. So it's a thumbs up on the cash flows, Harsh.
Thumbs up on the cash flows. Okay, let's look at return ratios therefore, because once you have this kind of cash flow coming in, and the net cash flow number may not be the right metric to look at, Mika, here, because they're reinvesting a large part of their surplus. There's a power deficit in the country. They're pushing and trying to take advantage of that. And therefore, your net cash flow from operations could well be a minor negative or a very slight positive compared to the cash inflows from operations that are coming through. But the point, therefore, is return ratios aligning up. And what we're seeing is they're just about able to make early teens kind of return on equity. And therefore, is this a lucrative enough business is really the question. The other part also is the fact that traditionally this has always been the kind of range that they've operated in. So it's not, you don't expect a very large increase in this number.
That's true.
Also, a lot of the returns are pegged or are premeditated to a large extent, because you already have power purchase agreements which are locked in for 15, 20, 25 years, which kind of guarantee you cash flow, but at the same time lock in your return ratios as well. So the return on the regulated equity, which is generally the metric on which a power purchase agreement is signed and is decided upon, is largely 18 to 19%. So you will likely continue to see these kind of ratios last, especially in a high capex cycle, which we're just about entering, right, Mihika? Is that the right way to look at it? The other piece I wanted to explain is this regulated equity, this return on regulated equity. Wanted to take a minute to explain that concept.
Yeah. So regulated equity is basically something that is decided by the regulatory boards in the space. For NTPC, it ranges between 18 to 19%, and this is a guaranteed return on the equity capital base of the company. Now, usually when NTPC is setting up a certain project, they're not going to fund it entirely by equity. Obviously, they have a debt portion. We've seen that in terms of high debt, but it typically refers to the portion of a utility or other any regulated entity's capital structure that is considered equity and for the purpose of regulatory procedures, and it kind of gives some kind of predictability in terms of the revenue and profitability in how you can determine it for something like an NTPC. And more capacity they add, which is under the regulated equity model, the more their regulated equity kind of grows over the next few years. So capacity additions for the company's regulated equity to grow and thereby your returns on equity to grow is very important for something like an NTPC.
Fair point. And shareholding, Nika.
So it is a PSU. We have the Government of India steady shareholding, 51.1% ever since March 22 till December 24. We have seen DII's kind of their shareholding in the company fall from 45% in March 22 to 26.76%. But this is on behalf of FIIs actually being more interested. We had no shareholding or any kind of stake in NTPC from the FIIs in March 2022. This stands at over 18% as of December 2024, and minimal retail interest, just about 4%, but we've even seen a slight uptick in that as well. So it's a thumbs up on a shareholding. You have government backing, DI as well as FI interest, little low retail interest, but you have exposure via mutual funds, etc. from your institutions.
Yeah, fully agree. I want to quickly highlight a few large shareholders here, Mika. So one, Life Insurance Corporation was a very large shareholder, 10% shareholder in fact, in NTPC, currently holds 4%. So we've seen a dilution from an LIC. Who is adding? There's a Government of Singapore, very interesting, has hiked stake consistently over the last couple of quarters at least. So we've seen its stake go to 2.4% within that FII basket. So again, interesting here as to the fact that who some of the FIIs are and what are the DIIs also doing. So some moves happening on that count. Let's look at street cred and street coverage jointly. One, the 1 year performance hasn't been outstanding. The 5 year gains though have been really good. So we've seen a 281% return that the stock has given. It's been a multi-bagger over the 5 year period. In terms of valuations, currently at around 16.94 versus 5 year historical of 16.6. And I'm talking about price to earnings. Whether that's the right metric or whether price to book is the right metric. And in comparison to its peers, the price to book number is at a substantial discount, and hence you'll see a lot of analysts super bullish on this. Price to book is likely the better factor to look at it from a valuation standpoint. So street cred is largely a neutral. Valuations, we'll give it a thumbs down for the moment, but we'll get better perspective on how exactly should you try to, or how is the analyst community looking at this. The P ratio currently is at the highest seen in the last 7 fiscals, and that's where we're not getting enough comfort. Also, the dividend yield is just 2% when historically it's been higher. Cash flows are being churned back into the business. So some of those factors also playing out. But let's look at the cumulative rating on this one, and we'll summarize it very, very quickly for you on the screen. There you go. That's how it all stacks up. income statement. Capacity additions are going to be solid. Expect that to continue to come through. Balance sheet neutral, cash flow is positive given the fact that operationally we've been doing well. Return ratios is a neutral, shareholding is a positive given there's enough comfort. Government holding 51 and DIFI holding is quite healthy. Street cred and valuations. That's how it's really stacking up. Let me quickly bring on board Nikhil Nigania, director at Bernstein, to talk to us about his views with regard to an NTPC. Welcome, Nikhil. I want to quickly, first off, try and understand straight up from you. This is a sector where the tailwind is extremely strong. Is NTPC well placed to capture the tailwind? It's been a very strong player in the space. Can it continue to do so, or are smaller players eating into its share?
Fair question. So NTPC has been one of our top picks in the sector for the last almost 2 years or so. So if you look at from a tailwind perspective, what are the tailwinds which are happening in the sector? One is power demand growth, while FY25 was a bit slow at 5% growth. Before that, 3 years power demand grew at 8-9% CAGR. Going forward as well, we expect 1x real GDP, which is about 6-7% growth in power demand, which is higher than historical, what we had in the last 2 decades. The second more important theme which benefits NTPC is the evening power shortage. So what is happening in India is we have enough power when the sun is out, but in the non-solar hours of the day, which is after 6 p.m. or even early mornings in winters, is when we have a power shortage. Now, to solve for evening power shortage, the obvious answer is a thermal plant. And NTPC is the biggest player in the thermal sector in India. The private sector was hesitant to add new thermal plants, and hence NTPC took a big lead in that. So the need for thermal capacity, which was effectively written off a few years back, is where NTPC stands to gain from the tailwinds. And to the question, so NTPC recently announced their plans to do 30 gigawatts of incremental thermal capacity by 2032, which is a substantial number on a current total base of about 75-80 gigawatts of generation capacity that they have. So one is thermal story. Second, interestingly, is the renewable story. So as government pushes to add a lot of renewable capacity with an aspiration to reach 500 gigawatts of renewables by 2030, up from 220 today, NTPC, we think, will play a big role in that as well, even in the renewable story. Why do we say that? It's simple cost of debt advantage, which you were alluding to earlier as well. They can borrow money much cheaper than peers. And in a renewable business, which typically 75-80% debt funded, that can be a huge advantage for a player. So these two reasons primarily, the need for more thermal plants and the advantage NTPC has on the renewable side, is why we think NTPC continues to be a good player to own in the space.
Nikhil, you mentioned a lot of, thermal as well as your renewables, kind of, how NTPC gains from both of these stories. They have a lot of capacity, under construction, but execution is very key, whether it's in terms of your regulated equity getting higher. How do you expect their, consolidated capacity to grow in the next 3-4 years? Will execution be on time?
No, that's a fair concern. So the only concern we have to our thesis is execution. So thermal, there has been delays in plant commissioning, though quite a few of their plants are very close to commissioning, which should get done in FY26. But an even worrying trend has been renewables. So renewable also, they guided 3 gigawatts of renewable capacity addition in FY25, but we think they haven't even achieved half of that. So it's not just them. Most players have struggled to add renewable capacity against their guidance. But even for NTPC, execution has been slower than envisaged by us and the street, both on thermal and renewable. So going forward, thermal should improve. As I said, close to commissioning assets are there. Renewable also should get better, but again, their issues of land, issues of transmission could keep execution below their initial guidance.
Okay, and how should one look at return ratios, therefore, Nikhil? It's a space which has been in focus because there are prolonged power shortages in India, and has been the case over the last couple of years. We're expecting that shortage to continue as well. Shouldn't return ratios improve in such environments?
See, what happens in the power sector is in a power shortage situation, the ROE, the return on equity of NTPC doesn't change, right? Most of their assets are regulated return assets.
Correct.
So they really don't get an upswing in the ROE due to a power shortage. The benefit they see is in the incremental capacity addition. which is why the capacity pipeline has expanded, growth has expanded, and the multiples have re-rated. Companies which gain in a power shortage situation immediately are companies which are merchant power capacity, untied thermal capacity. So those are the players which gain more. So NTPC benefits on the long term, not immediately in the near term. So the ROE of NTPC in our forecast continues to stay around 13%, which is their existing ROE, which they report at a company level. So it's not a ROE change which has happened. It's a growth inflection which has happened in NTPC over the last 2 years. And that to a long-term growth inflection, not really a near-term growth inflection, why the stock is related.
Got it. So it's a long-term growth story in terms of how, the capacity adds up. I also want to bring the nuclear power angle in it. We've seen the company kind of show interest in the small modular space. They have kind of exposure via their JV Ashwini. How do you feel this, story playing out, considering that we have a target and India aims to, kind of bump up its nuclear power capacity?
Yeah, so nuclear is the new focus from the government side. Again, the reason for focus on nuclear is the same challenge I highlighted earlier, which is how do we get power in the non-solar hours a day? Other than thermal, one answer is nuclear. That's why the push towards nuclear. So nuclear, we admire the aspiration government has, and without a doubt, NTPC will play a key role. Till now, all the nuclear power plants in India were built by Nuclear Power Corporation. Going forward, apart from NPCIL, NTPC has also formed a joint venture with NPCIL to add nuclear power plants. So there also NTPC will gain, but again, the first nuclear power plant by NTPC will possibly come by 2032 at best, not before that. So it's a long-term story, not something which impacts the near-term earning. It's more a long-term growth inflection, which nuclear would add. And on nuclear also, while it's a right ambition to have by the government, the challenge is execution. To build a nuclear plant in India, it takes 10 years or even higher for a greenfield plant. If you look at the Gorakhpur nuclear power plant we are building, it's a greenfield capacity. Construction started in 2018 and is expected to get commissioned in 2032. That is if we don't see further delays from here. So that's the kind of timeline we're talking about. So again, not a near-term story, but more a long-term growth impact on NTPC per se from nuclear side. And SMRs, again, we have our challenges. We have reservations as well. Globally, companies have taken a long time even China took more than 10 years, and they are still not commissioned their SMR, which they are building. So it's again a long cycle. SMRs are a long-term solution to power beyond 2035 possibly, not before that.
Point taken. Nikhil, I'm going to wrap two questions into one because we're out of time, and I'd request you to be as brief as possible. One, how do you view valuations, therefore, for an NTPC? Of course, it's a PSU. There's some execution risk in any case, as is the case in most other PSUs as well, but more so in the power sector. That's point number one. Point number two, return ratios, should we expect that to be around the early teens or just about double digit? Is that the prolonged expectation as well, or can we expect a bit of a re-rating there as well?
Yeah, sure. So second question, let me answer first. So the ROEs, sure. I don't think will go significantly above 13%.
Okay.
See, renewable, which is again a big part of the growth. In renewable business, you don't make phenomenal returns. The returns are early to mid-teens at best. So ROEs, we expect to stay around 13% in the long term. On the first question on valuation, so the domestic market tends to look at NTPC on a price-to-book basis. Is currently at about 2x price to book, last filed. The private sector peers, if you see, are 3.5, even 4x price to book. So it trades at a discount to private sector players. Globally, utilities on price to book are around 2x. So it's not expensive even from a global standpoint. It's in line with global peers. And earnings multiple or EV/EBITDA is in fact at a discount to global peers. On EV/EBITDA, it is 9.5 times. Globally, utilities are at 10.5 times. So NTPC seems, fairly priced. It's not expensive as per us. And to play the power sector, we prefer an NTPC over the private sector peers it has, due to this low valuation, due to the cost to debt advantage and so on.
All right, Nikhil, it's been comprehensive and it's been interesting. So thank you for coming in and speaking with us. Great getting your views and thoughts on this to try and, unpack this a little bit more. So thanks for that. But, frankly, out of time on this one. From Mihika, myself, everyone who puts the show together, thanks so much for watching. Hope this has been helpful. NTPC is what we've tried to deal with today. Stay tuned to NDTV Profit. More action on the other side.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
The first stock on the list is it's IGL now. If you see the stock that has perked up around 4% in trade, and this is largely on the back of the buzz that is on the street, that the company might announce a price hike of anywhere between 3 to 4 rupees from the 1st of April. Now this might as well happen in phases, so keep an eye out for IGL. Now this stock had to, the company had, in fact had to take a price hike post the Delhi election because the cost of gas had increased for them, and because of that the margins had come down, but they had not taken any price hike so far. So the street is expecting a price hike announcement to come in, which will be effective from the 1st of April, and it could be around 3 to 4 rupees, and it could well be implemented in phases. So keep an eye out for IGL.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Hello and welcome. Good afternoon. This is Markets at 12 and I'm your host Malika Mishra. Let's take a look at how the markets are currently doing. The Nifty 50 and the Sensex are both above 1% high, largely led by gains in the banking space. The Nifty 50, as you can see on your screen, has in fact surpassed the 24,000 mark, while the 30-pack Sensex is hovering around 79,300, 400 levels now. The Nifty Bank is outperforming the benchmark indices with all components in the green. The broader markets seem to be in a better place as well, as the Nifty Mid Cap 150 and the Nifty Small Cap 250 are above 1.5% high as well. Now, speaking of the top contributors to the Nifty 50 basket, you would see Reliance, HDFC Bank, Axis Bank, Infosys and SBI are the top contributors and gaining in trade today. While on the losing side, you'd see ITC, Bharti, HUL, Adani Ports and HDFC Life. So quite a bit of FMCG counters that are dragging the market. Now, HDFC Bank, ICICI Bank and Yes Bank, if we can pull up those counters, you'd see all of them are doing well on the back of strong set of results that came in this weekend, and as a consequence of that, we're seeing a lot of optimism in banking space. If we pull up the Nifty 50 heat map, you would see a fat majority of the stocks trading in the green with, as I mentioned, just a few FMCG counters like Nestle, Title, HUL, ITC all dragging behind. Now, the sectoral heat map represents a similar picture as well, with just the FMCG index down, with all other counters gaining. In fact, PSU Bank, energy, defense, oil and gas, metals are leading the pack. The market breadth currently is highly skewed in favor of advances, with less than a quarter of stocks declining. To give you specific numbers, 1,903 stocks as of now are advancing in trade, with just about 432 stocks declining. Now, moving on with the first story, speaking of markets, in fact, Nomura has come up with an interesting note on its strategy on India. They have set a target close to 25,000 for March 2026. And my colleague Hiral is joining us to tell us what their topics are, what is their view on tariffs, and what are they most cautious on.
So it's an interesting day when Nomura has released their strategy report where you have Nifty 50, which has already hit a 24,100 mark in trade. So if you see in terms of their 2026 target, that's March 2026, they are at 24,970, and this they are factoring a 5% cut in terms of the current consensus estimates, which already are on the downward side. Now, they're expecting the FI flows to be supportive. In fact, last week itself, FIs have been buyers, and that is what is supporting the Indian markets. Overall, in terms of the return, negative 9% to a positive 7% is what they are looking at in the next 1 year. Now, let's look at the impact in terms of trade tariffs that Nomura is looking at. Firstly, what they are indicating is that India is better prepared as compared to rest of the world when you talk about the supply chain reallocation that could be happening. So we are at an advantage position. Secondly, the fall in terms of commodity prices as well as in terms of oil prices. These are the two factors that will that will actually benefit India's macro strategy as well. Now, talking about their strategy in terms of earnings, they're seeing downside risks to the current consensus growth and earnings estimates. However, the valuation will find support, and what will give them support is the drop in bond yields. Moving from there on, what is it in terms of their preference? Where are they positive on? Now, Nomura is preferring domestic sectors versus the export-oriented sectors. They're looking at a bottoms-up approach in terms of their investment thesis, and they're saying that we should be avoiding stocks with a high valuation multiple. So the valuations are absolutely key as well on this front. They're positive on financials, relatively low earnings risk, and the present valuation in terms of financials is what is supportive. Consumer staples, discretionary, oil and gas, telecom, power, internet, real estate, and a few domestic healthcare plays are what Nomura is positive on. Now let's understand what they're cautious on. Export-oriented sectors is their cautious list. Capex themes are a cautious play. IT, industrials, cement and metals is somewhere where Nomura is cautious on. In terms of pharma, what they're saying is that they're expecting the tariff impact that will be passed on, and any correction in terms of pharma names should be used as an opportunity to buy in terms of the sector. Let's look at their picks in the terms of the large cap space. So it's Axis Bank, ICICI, SBI, Bajaj Finance. These are few of the names that they're looking at. Apart from that, GCPL, L&T, CG Power, RIL, Tata Power, you can see the names that are flashing on your screens as well, which are their topics in the large cap space. Talking about small and mid cap, it's Federal Bank, Marico, Dixon, Uno Minda, GE Vernova, TND, MedPlus, Lupin, et al. So a lot of picks that Nomura has picked up. But clear strategy is domestic-oriented sectors, cautious with regards to export-oriented sectors, and a 24,970 being a target price, which also takes into consideration the earnings estimate cuts that we're already seeing.
Right, Hetal. Thank you for wrapping up that so beautifully. Now, Zomato, that goes by the name of Eternal on the stock exchanges, is one counter in focus as well. And there are two reasons behind the buzz that we're seeing in this stock. Let's look at the first one first. In a significant move, the board has approved a FII ownership cap of 49.5%. Now, to tell us what this means for the company, my colleague Mahima is joining us with an analysis.
There are two things here. As you rightly mentioned, the board has approved an FI ownership cap at 49.5% from 100%. And the second thing is that this will also lead to an inventory-led, and this will likely gain focus post the FI overall holding is trimmed. Now, in terms of what has happened so far, where fundraising is concerned for Zomato, Zomato had recently come out with their QIP and raised around 85 billion. Now, in terms of that, 8% was subscribed by leading DII funds, and post the QIP, FI ownership fell to around 47.3%. DI ownership increased to 20.5% versus that of 17.3% earlier. Currently, DI ownership stands at around 23.5% and FI ownership stands at around 44.4%. Now, what does this lead to overall? Increase in domestic ownership will overall aid data localization norms, also see control over inventory and safeguard local consumer data as well. An inventory, heavy-led model will also have better control over product, quality, pricing, improved consumer experience, higher margins through bulk procurement, easier promotion on private labels, as well as enhanced delivery-led time as well. But there are also changes where the overall inventory-led model is concerned. It requires stronger grip over operations, requires higher working capital in order to store the inventory, and the risk of unsold and obsolete inventory will be high and might negatively impact the overall margins as well as profitability. Now, Elara did come out with a note on this. They've maintained buy with a target price of 300. What they're saying is that Nykaa follows a similar model, and because of which they've overall enhanced customer experience. And the entire story that Zomato is now trying to trim FI ownership also indicates that Amazon and Flipkart are preparing for their IPO as well. So this is the overall view as to how and what will happen to FI holding in Zomato, and that is eternal.
Right, Mahima. Well, on the lob side of this cap on FII ownership, the company could also see some of the outflows from FTSE and MSI, and my colleague Somit is here to give us the key figures of that outflow.
Fundamentally, it seems like a strong plan for Eternal going forward. But yes, because of this FI limit cap that the company is looking to put, there could be massive MSCI and FTSE passive selling that we could see. Not today, over a period of quarters, but yes, this is expected to come given the fact that there would be a cap on the FI limit, and there could be outflows of nearly $1.4 billion when it comes to Eternal. Now, why this selling is expected in Eternal, which is earlier known as Zomato, because if you look at the difference between the proposed FI limit cap, that is 49.5%, and the current FI holding in Zomato is around 44.88%, which means that the headroom between the proposed cap and the current holding is less than 10%, and whenever there's the headroom is less than 10%, the weightage of Zomato or Eternal in the MSCI and FTSE index will come down, and because of this we could see this passive selling when it comes to the MSCI and the FTSE index. Now, for MSCI, the current weightage of Zomato is around 1.33%, and this could halve, which could lead to an outflow of close to $600 to $800 million after the review, and this review might happen in May 2025 or in August 2025. So for when it comes to MSCI limited outflow, there is around $600 to $800 million of outflow expected, but when it comes to FTSE, the current weightage stands at around 1.17%, and whenever the headroom comes below 10%, it leads to deletion of a stock from the index, which means that Eternal will move out of the FTSE index, which could lead to an outflow of anywhere between $500 to $600 million after the first review happens, and the first review is expected to happen in June 2025. After that, every quarter, whenever the headroom is less than 10%, there could be outflows. So over a period of 4 or 5 quarters, there could be outflows of anywhere between $70 to $100 million for Zomato. So there would be the overall outflow of close to $1.4 billion when it comes to Zomato, because the headroom of FII limit is coming below 10% post the proposed cap of 49.5%.
Hello and welcome. You're watching NDTV Profit. I'm Harsh Saita, and with me is Prashant Kumar, the Managing Director and CEO at Yes Bank. After their Q4 numbers, it's been a decentish set with regard to Q4, sir. What I want to understand firstly is this NIM improvement of 10 basis points. One, the sustainability of that given the rate cuts which have happened and which are anticipated, right? You have a large floating book. So perspective on that, what we should expect maybe in the next 2 quarters as well as in the next 4. And you've suggested, point number 2, that in the next 4 quarters or so, you're expecting margins to actually improve. So what are the levers which are giving you that feel?
So I think you are rightly saying, actually, in terms of not only 50 basis point cut has happened, there is also more expectation in terms of some more cuts in the current financial year. But I think why we are confident in terms of not only sustainability of these margins, which has gone up by 10 basis points, but improvement in the coming quarter because of a couple of things. And the one part in terms of the deposits which we have kept in the RIDF, which was of a very low yield. Now there has been no shortfall in FY24 and FY25. It means there would not be any demand, and whatever is there in RIDF would start coming back. So we are expecting that currently 8.7% of our assets, which are sitting in RIDF, would come down to below 5% in the next 2 financial years. That is point number 1. The point number 2 is about cost of deposit. Despite headwinds, if you see, like, we have been able to contain our cost of deposit. It means when it was very tough war for the deposits, everybody was increasing. but our cost of deposit has remained intact around 6 to 6.10%. And that is mainly because of higher growth in our CASA. If you see our deposit growth, the published figure is 6.8%, but that's a year-end phenomenon. Actually, average deposits have grown by 16%, and the current account was more than 20%, and savings bank was around 32%. We have already taken a decision to reduce rate of interest on the saving bank as well as on the fixed deposit. If there will be further cuts, we have a lot of room available for reducing our cost of deposit further. That is point number 2. The point number 3, in terms of the high yielding assets on the retail side. So there was a very calibrated call to contain the growth on the retail side in the FY25. But if you see the Q4, we have started growing on the retail side because we have strengthened ourselves both in terms of risk underwriting as well as on the collection. And in the coming financial year, we would be seeing the retail growth of also around 10 to 12%. So I think with these 3 combinations gives us a confidence that we will be in a position to improve our margins quarter after quarter.
Point taken, sir. So on the deposit front, you've reduced interest rates significantly on SA specifically. Is this an indication that we're completely out of the woods in terms of the deposit war which was playing out between banks? That is point number 1 again. Point number 2, are you therefore very, very comfortable that the customers that you've onboarded with the higher interest rates that you were offering are now going to stay back with you? Is that the kind of comfort you have?
So we are quite confident that not only we would be able to maintain those deposits, but we would continue to grow. For a very, very long time, I am saying, ultimately, when you are able to get the deposit, it's not always because of the pricing. It also depends on the quality of service which you provide, and also the convenience you provide to your customer through the digital means. So I think of both in terms of convenience to customers through their personalized apps, and also the quality of service. We are quite confident that we will be able to grow deposits despite reduction in the rate of interest.
Okay. And so therefore, what is the scope for margin expansion? Say 4 quarters down, once everything gets repriced, what's the scope and what's the quantum? Is it going to be 2.7? Is that going to be the new normal? Is 2.9 going to be the new normal? Where should we look at margins?
I think this is a journey. This is a journey for us, but definitely our aim is in terms of going beyond 3% margins in the next 2 financial. But that would be a very progressive journey, and you must have seen we have never made any haste kind of decisions, but continuously it's on an improvement.
No, sir. Credit where credit is due. And the other place where credit is due is the OPEX. You've guided and you've largely been able to control OPEX significantly well. When I'm looking at the sequential number as well, that dip in OPEX from 70 plus to around 67% is surely standing out. What I want to understand therefore, sir, is where does OPEX go from here? And how quickly are you going to be able to bring it down? Because certainly a 4 percentage point absolute number sequentially is slightly unrealistic. So where should we see OPEX, say, end of year FY26 and end of year FY27?
No, I think we would continue to have that control on the OPEX. And our strategy in terms of reducing our cost to income, which has come down to 67% in Q4, to bring down to the lower end of the 60s. And that would be a function of both increasing the income as well as a very tight control of the cost. So the way we are forwarding, the way we are seeing the opportunities, we are very confident that we will be in a position to achieve that.
Well, let us move on to another stock which is buzzing in today's trade. Divi's Lab has announced a long-term manufacturing and supply deal with a global pharmaceutical company, and my colleague Varsha is joining us with more details of this deal.
Thank you for that. So yes, Divi's has announced a long-term supply deal with one of the global pharmaceutical companies, though the name has not mentioned because of the confidentiality. But the company will supply advanced intermediates to the company. Now, please note that advanced intermediate is used to make API, that is the main salt active pharmaceutical ingredient. Now, if I were to talk about the scope and impact of this, this is expected to contribute meaningfully in Divi's custom synthesis segment. Now, partner's name and specific details are not mentioned, and for this Divi has planned in capacity, or rather capex of 650 to 700 crore in capacity expansion, and the expansion will be at existing manufacturing facilities, and the investment will be funded through internal accruals. We all know that Divi's has almost 3,500 rupees crore of cash sitting on their balance sheet. While this agreement ensures assured supply for the customer and allows Divi's Lab to expand its custom synthesis business, which contributes almost 53% to its total revenue. So, a thumbs up on the agreement that Divi's has signed.
Well, thank you so much for that, Varsha. And now another buzzer in focus today is Kansai Nerolac. It is making some smart moves. The company, in fact, has targeted a 9% compound annual growth rate in sales over the next 3 years. It has also announced a target of 14 to 15% EBITDA margin over the next 3 years. And my colleague Mahima is here to join to tell us what's exactly driving Kansai Nerolac at the moment.
Right. So basically what has happened is Kansai Nerolac Japan had hosted an analyst meeting where they discussed strategic moves for India business, where they have guided that for the next 3 years the sales CAGR that they want to achieve is 9%, and the EBITDA margin that they are aiming at is 14 to 15%, and from a longer term perspective they are expecting EBITDA margins to reach around 18% by FY30. Now, growth over the next 3 years will be led by the industrial segment. Focus of course will be on defending the decorative market share as well in the primary and key markets. In terms of decorative segment recovery, they are expecting that to happen in the second half of next financial year. India to be growth engine for Kansai Nerolac Japan, and they target the industrial margin that has already moved closer to decorative margin to be overall margins at 18% by FY30. In terms of acquisitions, they've also said that they will go on and do bolt-on acquisitions with regards to the industrial segment overall. With regards to this, there was a Macquarie note that has come out, and they've maintained a neutral with a target price of 255. What Macquarie believes is that they're liking the overall focus on premiumization and the confidence that the management has showed in terms of margin expansion, but overall they believe that impact on profitability might take place because of Grasim's entry in the paint segment, which makes overall them a little cautious for Kansai Nerolac. So this is the overall view of what has happened with the company and the updates with respect to the call takeaways from the Japan analyst meet.
Right. So overall, a good picture for Kansai Nerolac, Mahima. But stay back. Now, we cannot not speak about Asian Paints if we're talking about this space, right? And although the stock is trading almost flat today and has failed to move in tandem with benchmarks, it in fact has lost over 20% in the last 6 months. What is exactly not working for this paint giant as opposed to Kansai Nerolac that you highlighted just a few moments ago?
Right. So the question really here is that whether Asian Paints charm that it had earlier and the color that it is always had is actually fading away or not. The stock has seen a significant downtick in trade in the past few months. It's down by about 20% in the last 6 months. Now, what's not working? Well, a couple of factors that are not working in favor of the company. Firstly, negative revenue, PAT, as well as value growth is taking place in the past few quarters. There's low single-digit volume growth that the company has witnessed overall. In terms of margins, they are under pressure, and this is on the back of inflationary pressure as well as demand being negligible for now in the past few quarters. Then we also have international profits which are on a declining trend. There is deteriorating cash conversion cycle that is also taking place, and the FI stake overall is seeing a downtick. It's on a downhill. In terms of promoter pledge, that is also increasing. We've seen a promoter pledge increase in the last quarter itself. Let's take a look at each of these factors in a detailed manner. Firstly, negative revenue and PAT PAT growth. FY25 there was a revenue uptick of 35% versus that of 9 months FY25 there was a revenue downtick of 5%, and PAT which was around 36% up in FY23 is down by about 30% in 9 months FY25, and this is again on the back of inflationary pressure as well as no demand, negligible demand for the paint space. Next, we have the volume growth and value growth picture, where FY22 we saw a volume growth of 31% and a value growth of 36%, which has come down to 3% for volume growth in 9 months FY25 and a negative 4.8% in value growth as well. So inflation is rising, but at the same time management is not being able to catch up in terms of price growth as well, because competition is hitting them hard. In terms of the next parameter, well, what's hurting the growth? There is sustained slowness overall in urban centers, and Asian Paints is the counter which has more concentration in the tier 1 and tier 2 cities. That is why it is seeing more pressure as compared to other paint players. In terms of competition, of course, Birla Opus is playing its role in terms of competition, slightly taking away market share from paint players, and Asian Paints also seeing that impact. The next reason is that there is down trading that is affecting the overall value delivery as well, and there is slowdown in government spending which is also impacting the overall industrial paint segment. And lastly, seasonality has played its role. Monsoons were extended, and because of which paint sector overall has seen an impact. Now in terms of the next counter, what's causing the pressure in terms of margin? Price hikes are not matching the inflation, as I mentioned earlier as well, and overall the price hike that was taken in first half of FY25 stood at 12% versus that of inflation of around 3.3%. So margins under pressure because of inflation itself. Now in terms of the margin trend, 9 months FY25 stood at around 17.9%. The management has always said that the guided range of margin will be around 18 to 20%, but 9 months FY25 is at the lower end of what they have guided, which has been around 23% as well in FY24. Next, the international profit business is also declining, and there's declining growth of 19% seen in 9 months FY25 as well. Next factor is deteriorating cash conversion cycle, where we've seen that the cash conversion cycle overall has reduced, and that is also taking a toll on overall Asian Paints balance sheet as well. Now in terms of FI reducing its stake, December 2021 FIs were holding 20.38% stake in the counter, which has come down to 13.6% in December 2024. So FIs are also losing hope for this particular counter. In terms of what's the promoter pledge? Well, promoter pledge has gone up to 9.2% in December 24, and this has happened in the December 24 quarter itself, which was around 6.58% in December 23 and around 7.64% in December 21. Overall, in terms of valuation, well, despite all the challenges, are valuations still attractive is the question. FY21, the valuation stood at 77 times, which went to around 97 times. It's come down to 43 times. But so far, the management commentary coming in also does not look very promising. So the question really here is, if the valuations have come down to 43 times, despite the stock seeing a significant pressure, is this the right time to enter Asian Paints or not? In terms of how the stock performance has been, we've talked about it, 20% down 6 months, and its stock is also trading below its 200 daily moving average. Brokerages are also cutting their target prices in terms of what analyst recommendations suggest. Right now there are 9 buys, 11 sells and 19 holds for the counter. So this is the overall view as to what is happening with Asian Paints and whether one should invest in it or not.
Thank you for putting that into great perspective. Well, viewers, that's all the time we have on the show, but do stay tuned to NDTV Profit for more news and updates.
That's huge. That is a biggie. It's on the
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
The first stock on the list is it's IGL now. If you see the stock that has perked up around 4% in trade, and this is largely on the back of the buzz that is on the street, that the company might announce a price hike of anywhere between 3 to 4 rupees from the 1st of April. Now this might as well happen in phases, so keep an eye out for IGL. Now this stock had to, the company had, in fact had to take a price hike post the Delhi election because the cost of gas had increased for them, and because of that the margins had come down, but they had not taken any price hike so far. So the street is expecting a price hike announcement to come in, which will be effective from the 1st of April, and it could be around 3 to 4 rupees, and it could well be implemented in phases. So keep an eye out for IGL.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
A stellar start for the week as Nifty tops 24,000 mark for the first time since the 6th of January. Trades above 1% along with the Sensex. Infosys, HDFC Bank top contributors to today's gains.
Nifty Bank hits a record high, crosses 55,000 mark, fueled by HDFC Bank as well as ICICI Bank's rally post quarter 4 earnings.
And GAIL shares surge 5% as CLSA expects tariff hike by June. This comes after the Petroleum Regulatory Authority released a consultation paper proposing a review of natural gas pipeline tariffs.
Zomato in focus today after its board approves a FII ownership cap of 49.5%. Inventory-led model likely to gain focus.
And IT Minister Ashwini Vaishnaw welcomes US Vice President JD Vance as he arrives in Delhi with his family for a 4-day visit to India. A trade agreement and bilateral relations between both the countries remain on the agenda. Hello and welcome to NDTV Profit. You're watching Profit Buzzers. A very good morning to all the viewers. I'm Hiral Dadia, and with me is Puneet Javeri. Puneet, good afternoon and a good day of trade is what we are seeing after the extended weekend. And interesting moves, a lot of factors that are working in our favor as well. Let's quickly look at what's happening. Clearly, the 24,000 mark is what Nifty 50 has reclaimed. Sensex has crossed that 79,000 mark as well. In fact, 24,000 is what we've achieved for the first time since the 6th of January, I beg your pardon, 2025, and we're trading at the day's highest levels. Overall, now it's the banking stocks which are leading the rally in today's session. So if you pull up Bank Nifty, the PSU Bank Index, as well as the financials, you'll see the kind of gains that are coming in on all of these three sectors as well. Apart from that, if you see in terms of FIs, they have been on a buying spree. FIs have pumped nearly close to 8,500 odd crores last week, and this is week ended 18th of April. So that's the number that has come in. Though one of the sessions there was selling worth almost 2,500 odd crores as well. Other factors which are working out is the India-US trade pact, which is a positive. Outcomes are expected soon from there as well. A lot of sectors that could be beneficiaries out of that. And you have the rupee, which is gaining against the dollar. So these are the few factors which are supporting the Indian markets. But let's quickly look at the sectoral heat map as well and see which are the sectors which are bucking the trend and which are the ones which are losing. So you have IT, PSU banks, real estate, as well as the private bank index, which are on the front footing. FMCG, however, is under pressure with cuts of around 0.7 to 0.8% coming in there. So that's the only sector which has been lagging so far. Let's look at the Nifty 50 heat map as well as the contribution heat map after that. If you can get us the stocks, Tech Mahindra, Indocent, Bajaj Finserv, Trent, HCL Tech, Infosys. These are a few of the top gainers in today's session. Adani Ports under pressure, HDFC Life reacting to numbers. ITC HUL also under pressure, Bharti Airtel, Sun Pharma. Asian Paints also under pressure in today's session. Let's look at the contribution chart as well to understand which are the stocks which are aiding the gain. So Infosys, the top gainer. What's interesting about Infosys is the commentary has been slightly weak. Analysts are not really positive. Yes, there are a couple of brokerages which are positive on Infosys, but that stock is seeing some smart moves. HDFC Bank also reacting to numbers. Reliance Industries will be reporting numbers this week, so that stock is in focus. Axis Bank is another one. What's on the losing end is ITC, Bharti Airtel and HUL. These are the top three contributors in terms of the downtake. So clearly, I mean, good picture in terms of where the large caps are concerned. The key is whether the broader markets are falling through or not.
Well, definitely. And, it's slightly different from the session that we had on Thursday specifically, because on Thursday, we had the Nifty Bank, a 1,000-point move. And we've seen that continued move on the Nifty Bank today as well. But the mid cap and the small cap did not participate in the rally on Thursday. Today, however, mid cap 150 index almost up 2%. The small cap is also up almost 1.75%. And let's also look at the, the BSE 500 contributors as well, because we're seeing some very smart moves across stocks today. Banking as well as IT is definitely in focus. So, and some stocks like Just Dial on the back of its Q4 earnings largely in line with what was estimated, but the street has taken positive on numbers that have come out. The other one's Tata Elxsi, another one where numbers weren't as great. 5% constant currency fall in revenue in this particular quarter on a quarter-on-quarter basis. Stocks up 8% though. That's another one, which is the IT pack as a whole, slightly puzzling in a sense that we've seen the commentary come out. Estimates were weak, but we've seen a positive move across these stocks, and essentially maybe that the stocks have fallen so much. Tata Elxsi is down 46% from its 52-week highs. 52-week highs of over 9,000 rupees for the stock. Some other ones under pressure: Avanti Feeds, Marico. While some pressure on Home First as well, but largely today, Hiral, we've seen a day of small caps as well as mid cap movers, specifically in the IT pack, but also ones which are reacting on Q4 earnings. We've also seen some other stocks, in the banking and Utkarsh Small Finance Bank, all those stocks which are reacting positively as well.
So interesting moves, a lot of stock-specific action is what you're witnessing in the markets today. Let's also welcome in our guest, Sharmila Joshi. Sharmila, good afternoon and welcome to the show. Stay with us. Before we come across to you with what's your view in terms of the banking names, let me get my colleague in Harsh. Today, starting off with ICICI Bank, HDFC and the Yes Bank, three of them that have come out with their quarterly numbers. Harsh, firstly, ICICI, a stellar show. What's your update?
Well, ICICI Bank's numbers were a solid set. When you're looking at the net interest income number, it's come in a shade below 22,000 crore. The expectation was that it will be below 21,000 crore. So a solid beat on that count, 11% growth on a YOY basis, 4% uptick on a sequential basis on the NII number. When you're looking at operating profit, also very solid, 5% sequential uptick. That NII growth flowing very well into the operating profit. The OPEX has largely remained in line with the guidance that the management has given, and that gives very, very good comfort to the analyst community as well. It's a positive surprise across the board, as has been the case over the last 3 to 4 to 5 quarters that ICICI Bank delivers. Provisions down 27% YOY, QOQ. Now that number itself kind of reflects that asset quality is no concern at all. A 27% downtick on a QOQ basis. It's come in at 891 crore. The average analyst anticipation for this was sub 2,000 crore. So it's sharply below what the analyst community was penciling in with regard to provisions. Profit after tax, therefore, has surged versus expectations. Expectations were something around 11,600 kind of number. It's come in at 12,600 crore. So that differential really showing the outperformance that ICICI Bank has been starting to clip on a regular basis. 2.36% was the ROA number last quarter. It's coming at 2.52%, the largest among private sector banks in terms of ROA. The growth, though, was a slight disappointment. The loan growth has come in a shade below 14% YOY and just about 2% sequential. So if I had to pick out one thing that maybe was a miss to a certain extent, it would probably be the loan growth for ICICI.
Well, thanks for that, Harsh, but stay with us because, give us some key highlights from HDFC Bank's Q4 results as well.
Well, let's talk about HDFC Bank's numbers. Now, versus expectations, the numbers were largely in line. Nothing to complain about. Maybe a slight positive bias, if at all, on the numbers. Let's talk about net interest income first. Around 3% above expectations is the NII number. And you saw that in the margin number as well. From 3.43%, the margins came in at 3.46%. Of course, there was an IT refund involved as well. So outside of that, if I include the IT refund, it came in at 3.54%, which is slightly elevated of sorts. Not the right number to look at. In terms of core NIM, it was at 3.46%. Let's talk about provisions. Largely in line, absolutely in line with expectations. No surprises on the provisions number, which to me is a very key positive that through this cycle as well, HDFC's provisions and asset quality has largely remained unaffected. When you're looking at the ROA inch up though, which is another key positive, because of that slight inch up in NII, you're seeing that translate to decentish uptick in operating profit as well as ROA, and therefore ROAs, which are expected to be around the 1.8% number, have come in at 1.92%. So that's something to look out for. We've already had a lowdown with regard to how the growth has been both on the loans as well as on the deposit side of things, so won't touch upon that. Largely in line set from HDFC Bank.
Harsh, I think it's a day where it's Harsh and Mahima on 12:30. They are the key stars today. Harsh, Yes Bank, what are we focusing on? Because that stock has been buzzing. In fact, more than getting a Harsh on that, we did speak to the management as well. First, let's just quickly listen into that conversation. And thank you, Harsh, for ICICI and HDFC as well.
So we are quite confident that not only we would be able to maintain those deposits, but we would continue to grow. For a very, very long time, I am saying, ultimately, when you are able to get the deposit, it's not always because of the pricing. It also depends on the quality of service which you provide and also the convenience you provide to your customer through the digital means. So I think of both in terms of convenience to customers through their personalized apps and also the quality of service we are quite confident that we would be able to grow deposits despite reduction in the rate of interest.
Right. So that's with regards to the three banks. Sharmila, coming to you. I mean, in terms of the loan growth, you had a HDFC Bank which actually stood out. There was some bit of softness from an ICICI Bank. Deposit growth for both these banks was absolutely strong. Margins for all the three banks have improved. Provisions, Yes Bank has been elevated though. And profitability, all of them are good. Now, yes, the scale for all the three banks is very different. What would your view be and any recommendations? Do you think these are buy on dip candidates now?
Yeah, so I think very simply I would rate them as HDFC Bank, ICICI Bank and Yes Bank. Yes, the scale is different, but I think the numbers and the expectations are very different for all three. For the longest time, ever since HDFC became, the larger entity sort of after merging the two companies, we've had this debate ongoing in the market for the longest time, where people have been either very positive about the new entity, or the numbers haven't delivered, so there have been a lot of negative voices as well. So I've always been positive, and I think now we are beginning to see at least the first bit of it getting delivered in the numbers. I think that the bank still has a long way to go. So from a longer term perspective, this would be the stock that I would be most positive on. ICICI Bank, again, we are seeing a sort of a re-rating underway, and I think typically 2 or 3 things have worked both in favor of HDFC Bank as well as ICICI Bank. When you get these numbers and you sort of flip over to next year earnings estimates, then, and especially in the case of ICICI Bank, when you're expected to, when you think that this will be the sort of growth that they will continue to deliver in the coming year, then a sort of a re-rating happens in the stock, which is what we are seeing in ICICI Bank. So I think both HDFC Bank and ICICI Bank look, based on their number, going ahead, look very good to me. Yes Bank, I'm not so positive. Yes, it's a great thing that the numbers that they have delivered, but this is sort of coming from a slightly shakier background, in the sense that people were very positive when the stock was bailed out, then they didn't deliver numbers, especially at a time when all banks were doing well. You had this bank not doing well. But the good news is now that provisions are down and now things look to be improving. And valuations are again, because the stock has corrected so much, fairly reasonable. But I think you need to give it another quarter to see whether this sort of trend continues. That said, I think these numbers were good, and this stock price is also good. But as I said, clearly my order would be HDFC, ICICI, and Yes.
So that's the pick specifically for Sharmila as well. Another stock in focus is HDFC Life. Post its Q4 earnings, let's get in Harsh back again to give us some of the key highlights from the company's Q4 earnings. Harsh.
Well, HDFC Life's numbers, you saw APE growth of around 10% YOY, largely in line with expectations. Value of new business though grew 12% YOY. It was expected to grow faster than APE, but the VNB margins have come in better than expected. The VNB margins have come in at 26.53%, which is a solid 43 bips uptick on a sequential basis. So you're seeing a recovery in VNB margins, so marginal positive, if at all, on this, but otherwise a largely in-line set of numbers overall from an HDFC Life. What really stood out is on the persistency side of things. The 13-month persistency has moved around quite a bit. From 86.2%, it's come down to 82.7%. But on the 61st month persistency, huge improvement. From 52%, it's come in at 61.9%. So couple of positives on that count.
Thanks for that, Harsh. Sharmila, coming back to you, how are you viewing the HDFC Life's Q4 earning numbers? Is there any positive that you take out? Do you see that, despite the good results, is this a good time to enter the stock?
Yeah, I think the only positive that I'm taking is the fact that I'm overall positive on life insurance as a business. But yes, as we've been hearing, perhaps this quarter numbers were not that great. That said, I think valuations look reasonable. So I think if you're a longer term investor,
yeah, I think just some network issue with Sharmila there, but essentially, we've seen HDFC Life report really stellar numbers in this particular quarter. It's almost up 16% on a net profit basis as well. And while we wait for Sharmila to connect back, let's also pull up the IT pack as a whole, because we were expecting a downward day essentially for IT based on Infosys numbers, based on what has been the commentary from Wipro over the last week, but you've seen almost a 3.5% move today on the Nifty IT. And if you can pull up all the three stocks, specifically, of course, in the large cap as well, while the outlook was grim, specifically in terms of earnings growth, if you can see for something like, TCS, it was a negative for TCS as well as Wipro. Revenue fell by roughly 0.8% in this particular quarter. For Infosys, it was almost 3.5% on a constant currency basis compared to the previous quarter. EBIT margin growth was flat for Wipro, but it's fallen 20 to 30 basis points for both, something like a TCS as well as Wipro and Infosys as well. The only positive which we can take out from all of these results was specifically, of course, the TCV, which is the total contract value of the companies. It was a 19% growth on a quarter-on-quarter basis for something like a TCS, while a 4.2% growth for Infosys. And for Infosys, the company only reports its large deal contribution. So that has been slightly slowing down for the sector as a whole. So 4.2% growth for Infosys, but for Wipro, again, it was a 13% growth on a quarter-on-quarter basis. Attrition, largely, it's within a 20 to 30 basis point increase compared to previous quarter, but on a year-on-year basis, we've seen an 80 basis point increase for TCS, a 150 basis point increase for Infosys, and roughly around another 80 basis point increase for something like a Wipro. And finally, in terms of guidance, and that was one of the key aspects, while TCS does not report any guidance, we've seen Infosys report a 0 to 3% kind of a number for growth for next year. And analysts were penciling in a 2 to 5% growth. But a very interesting note from Citi this morning that what they had anticipated compared to 3 weeks ago, that they were anticipating a much deteriorating guidance or a very smaller growth. It's not as bad, and maybe the street is looking at those numbers. Stock has also seen a 24 to 30% correction. So that also is one of the key aspects as well.
What's interesting, Puneet, over here is Infosys, the numbers in terms of the guidance is bad. The stock is up. Tata Elxsi as well, if you see, it's absolutely a flat result in a way. The stock is up nearly 7 to 8% right now as we speak. Now, Sharmila, one question that I would have for you on this front is it that the markets are giving you an indication that this is becoming a buy on dips market? Because in spite of that slight bit of weakness, you're seeing that buying activity that's coming in? Or do you think there is some bit of short covering that's happening as well? Because it's the monthly derivatives expiry, which is on Thursday as well, right? So two aspects that we need to consider. So if you have to look at the fundamental side as well as on the technical aspect as well, merging both of these, what would your view be in terms of IT? And then we'll quickly listen into Mastech as well after your view.
Well, I think it's more a question of buy on dips, really, because I think that not just IT, but we saw it spread across a lot of large cap companies, where when markets corrected due to all the tariff wars that we had, we've seen since then a lot of buying coming into all the large cap names. So good quality names have been bought into, and valuations, I think, for a lot of these, especially like an Infosys, they do look good at this point in time. Tata Elxsi, I think you all were talking of it a little while earlier. You've seen a 40% correction in the stock, and a lot of mid caps are in that sort of space where the recovery really hasn't happened over there. So I think if this kind of market were to continue, you could expect to see an acceleration of a little more buying coming into good quality mid cap names. So I'm in fact concerned how market reacts to expiry in the next couple of days. But I think this buying has been really on the back of good valuations and feeling that you're getting an opportunity to get into good quality names.
Right, and in fact, what's interesting over here as well, I mean, 20 to 25% is the kind of drop that you've seen in terms of the IT index in 2025 itself. If you see the 1 year chart, I mean, it's the worst year-to-date performance the index has seen since inception. I mean, I don't think so there has been ever any year where this is the kind of fall that has happened. And if you talk about the previous lows that the IT index saw, that was back then in 2022. That's when the index had declined almost around 18 to 19% in the first 4 months of the calendar year. So yes, I mean, there has been a sharp sell-off in IT stocks, which has been disappointing in terms of FY25. Now, the outlook in terms of FY26 is what the street is watching out for. Let's also listen into the management of Mastech, what they had to say.
The other expenses that you see are largely, like I said, the kind of work that we are getting in UK is a lot on data and AI and front-ending capabilities. These are capabilities that we are still building and expanding into. So some of these capabilities we had to partner and get subcontractors in our business. These were also locally required security cleared resources in UK. And therefore that subcontracting / partner expenses for the quarter has gone up. So that portion of work comes from them. We had almost around 80 on-site resources that we have to add or ramp up in the quarter. The second is the difference between the operating profit and the PAT. That is largely due to a one-time cost that we saw prior period as we changed the method. It's not that these receivables are not collectible. It's just that the accounting method change allows us to put up a higher provision than what we were putting up earlier, and therefore it's a one-time charge for the prior period.
Well, that was the management of Mastech. Looking at some interesting deals from the UK as well as India FT as well. That's what the management told us. But let's shift focus from the IT pack to the consumer pack now. Kansai Nerolac is in focus on the back of India's strategy call, which they held last week, where the company is targeting a growth of 9% CAGR over the next 3 years in terms of sales. Let me get my colleague Mahima to tell us more about this. Mahima.
Right, so as you rightly mentioned, Kansai Nerolac Japan did host an analyst meet, and there they've discussed India's strategic business. Now, in terms of the growth that they're penciling in, they've said that a 9% CAGR is what they're expecting in the next 3 years. In terms of margins, they're expecting a 14 to 15% margin that they want to achieve in the next 3 years, and by FY30, they plan to achieve around 18% of margins. Growth in the next 3 years will be led by the industrial segment. Focus will be on defending decorative market share in the key markets as well. Decorative recovery will take place in second half of next financial year is what the management has said. India to be a growth engine for Kansai Japan is something that the management has guided, and industrial margins are now moving closer to the decorative margin as well. And they've also said that they do plan to do bolt-on acquisitions that will be explored in the industrial segment. Now, Macquarie did come out with a note on Kansai Nerolac. They've maintained neutral with a target price of 255. They are saying that they like the focus on premiumization and the confidence that the management has shown overall in terms of margin expansion, but the impact of profit growth might take place because of Grasim's entry, that is Birla Opus, and that is what makes them cautious on the counter. So this is the overall view of the key takeaways from the call as well as what's happening with Kansai Nerolac.
Right, so that's with regards to where Kansai Nerolac goes, and a lot of factors that you need to consider in terms of the paint industry now, because you have a Birla Opus which has entered the segment as well. So, I mean, a lot of competition which is building up. Kansai Nerolac, they were seeing gains of nearly 2%, but one of the giants and a key competitor, which is Asian Paints. Now, the key question over here is the color of Asian Paints fading? Though the valuations are seeming absolutely attractive. Mahima is standing by to get us more in terms of what she decodes as a deep dive that she's done on her Asian Paints. Mahima, over to you. What is Asian Paints telling you in terms of the story?
Right, so as you rightly mentioned, the right question for Asian Paints right now is that is the color for Asian Paints actually fading or not, because the stock has tanked over 20% in the past 6 months. Now, what's not working? Well, a couple of reasons that are not working in the favor of the company. The first one is negative revenue, PAT, as well as value growth. In terms of where past few quarters are concerned, there's low single-digit volume growth, which is not working in the favor. There's demand constraints. Margins are under pressure due to inflation. Plus, there is international profit which is declining. There is deteriorating cash conversion cycle as well. The FIs are reducing or trimming their stake in Asian Paints, and there is promoter pledge which is also increasing for the counter. Now, let's look at each of these parameters one by one in detail. In terms of negative revenue as well as PAT growth, there was a time when in FY22 the revenue growth was 35% for Asian Paints, which has come to a negative 5% in 9 months FY25. In FY23 there was a 36% positive growth for Asian Paints in terms of its PAT, which has come to negative 30% in 9 months FY25. So competition, inflation hitting their overall top line as well as bottom line. In terms of volume growth and value growth in FY22, where the volume growth stood at 31%, it has now come down to 3%, and value growth, which was around 36%, is negative 4.8% where 9 months FY25 is concerned. So inflation is rising, but management is not able to catch up to that price hikes because of competition playing its role. Now, in terms of the overall outlook as to what's hurting the growth, there's sustained slowness in the urban centers. Asian Paints is largely there in tier 1 and tier 2 cities, which is why it's been impacted the most. There's competition from Birla Opus, which is playing its role in eating away some of its market share so far. There is downtrading, which is affecting the overall value delivery as well. In terms of government spending, that is slowing down, that is impacting their industrial growth, and seasonality playing its role because monsoons were extended in the past 1 year. Now, in terms of what's causing the margin pressure, well, price hikes not matching the inflation. Overall price hikes taken were around 12%, whereas inflation overall at an average was around 3% for all of its material. So that is not matching, and that is putting a pressure on their margins. In terms of margin trends, FY22 stood at around 18%. The management has guided a range of 18 to 20% for the margin, but 9 months FY25 came at around 17.9%, which is the lower end of what the management has guided. FY24 worth noting because the margin stood at 23% almost. In terms of cash conversion cycle, that has been on an increasing trend. What was 59 days overall in March 21 has gone to 93 days in March 24. In terms of the FI reducing its stake, where overall December 21 FI stake was around 20.38%, which has gone down to 13.6% in December 24. So FIs are also losing their confidence in this particular counter. In terms of promoter pledge, in the last quarter, the promoter pledge overall has gone up to 9.21, which was earlier 6.58 and has been in the range of around 7% odd. Lastly, in terms of the valuations, valuations have come down quite significantly because the company has not been doing well, plus the stock is also under pressure. There was a time when it was trading at 97 times, it has come to 43 times now, but the question really is that if the valuations are looking a tad bit attractive, is this the right time to enter the counter or not? Analysts recommend that there are, as per Bloomberg consensus, there are around 9 buys, 11 sells and 19 hold, but analysts at the same time are trimming their target prices as well. So this is the overall view as to what's happening with Asian Paints.
Thank you so much, Mahima, for getting us all the details. Sharmila, how would you look at a Asian Paints, a heavyweight, versus a Kansai Nerolac, where we got you the details, and you have a Birla Opus, which is already entering the race?
So I think precisely the troubles for Asian Paints has started, I think, somewhere in FY22 when we heard of the announcement of all these new players entering the market. Birla, I think even JSW said that they are going to have a paint unit, etc. And Asian Paints had, to my mind, over the last couple of years, there's been a double whammy. You've seen numbers not being that great. And also, you sort of, you are like the most admired stock within that space. You get the best valuation. And then you have the fear of competition. You have numbers not being that great. And then you see a slow trimming from by FIs and general investors. And, that pain on PE was very evident. So I think now going forward, I would be on the block that says hold. Because I think it's a great company. You just need to see whether they're able to rise to the challenge. And now we've had 2 years of this competition that we've been talking of, and how well they are able to sort of position, the new players are able to position themselves and really attract market share, etc. remains to be seen. I mean, we'll get the answers very soon. So from that perspective, I think I belong to the whole category, and nothing still that makes you think that yes, sort of you bang the table and say you buy it at this price, or you never see it here, sort of. But at the same time, I would think that now valuations are at a level where you should hold and wait for a bit.
Right, so that's with regards to paint companies. Thank you, Sharmila, for getting us the details. But let's quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
The first stock on the list is it's IGL now. If you see the stock that has perked up around 4% in trade, and this is largely on the back of the buzz that is on the street, that the company might announce a price hike of anywhere between 3 to 4 rupees from the 1st of April. Now this might as well happen in phases, so keep an eye out for IGL. Now this stock had to, the company had in fact had to take a price hike post the Delhi election because the cost of gas had increased for them, and because of that the margins had come down, but they had not taken any price hike so far. So the street is expecting a price hike announcement to come in, which will be effective from the 1st of April, and it could be around 3 to 4 rupees, and it could well be implemented in phases. So keep an eye out for IGL.
Do you really know the company?
Welcome back to Profit Buzzers. On to an NDTV Profit exclusive now. Maharashtra's Joint Transport Commissioner tells RTOs to shut Ola Electric stores operating without a trade certificate. Let's go across to my colleague Tushar for more on this. Tushar.
Good afternoon, Puneet. So what we have learned is that Maharashtra's Joint Transport Commissioner sent a letter, actually a show cause notice to RTOs in the state on 16th April that all the Ola Electric stores which were found to be operating without trade certificates have to be closed on 1 day's notice. Now, Maharashtra's Transport Department actually inspected 131 Ola Electric stores in the state out of 400 odd and found that about 107 were operating without trade certificates. 43 of them have been shut so far. 64 have to be shut in a 1 day's notice as per the 16th April email that was sent. A total of 214 Ola Electric scooters have been seized from these Ola Electric stores so far. This actually indicates that the Maharashtra government is stepping up its action against Ola Electric over the lack of trade certificates. That's what we know at this point of time. Puneet.
Thanks for that, Tushar. A stock that's been under pressure across, since its listing. It's listing at around 76 rupees per share, but yes, definitely under pressure. Let's also welcome Amit Bhuptani, the derivatives and technical research analyst at Nirmal Bang. We also have Sharmila Joshi with us as well. But Amit, let me come to you first on Ola Electric. Are the charts suggesting any kind of up move from these levels? Stock has been beaten down, since its highs of almost about 157 rupees per share.
Good afternoon. So overall, if you look at the structure, it still seems to be in the negative front. There are no signs currently of any reversal right now. Till the time counter is not getting stable above 60 level, till that point of time, we should not take any entry in this counter. Once the support for this counter is at 46, once the 46 level gets broken out, then we will see more selling pressure while going ahead. So we should avoid this counter at this point of time.
Got the view, Amit. Sharmila, we have spoken actually about Ola Electric before. Now the company has actually mentioned they're looking to be EBITDA profitable for the automotive division in Q1 of FY26. If that's to happen, do you see any kind of positive reversal on the stock?
It seems difficult because I think, the sort of sentiment is more against the stock, and you have something or the other that doesn't work in their favor. So it's a little unfortunate because I'm actually very positive on the two-wheeler electric vehicle space. But my advice would be really to play a hero moto in that regard, or even a currently, I think from a valuation perspective, I prefer Hero Motor the most. But that said, Ola Electric seems to have run into one set of problems after the other, and this just seems to be another issue that they'll have to address and face. So I think for me, it's an avoid as of now.
And avoid with regards to Ola Electric. What's interesting that is going to be with regards to Ola is what's the booking impact that could come in now. That is the key number that we need to get, and I think Tushar will be trying to get that information as well, that on the back of the store shutdowns, number of bookings that could get impacted as well. But moving on, GAIL, that's a stock that is in focus as well, and that stock is gaining after the government has initiated company's integrated tariff review. What does this mean and how does this impact the company? Somit is with us. Somit, over to you.
Well, yes, GAIL remains in focus given the fact that PNGRB has initiated the process where they will be reviewing the integrated tariff prices of GAIL. Now, what GAIL has sorted in their consultation was a fare of around 77.43 rupees as against the current fare of 58.61 rupees per MMBTU, which is a jump of nearly 32%, is what GAIL is asking from PNGRB. Now, PNGRB has sought comments from stakeholders from the 1st of May, and this will be followed by GAIL's response to this, which will be submitted by around May 16. Now, analysts are expecting the entire procedure to complete over the next 3 months, and then is what the final tariff will be decided by PNGRB. Now, GAIL is asking for a 32% tariff increase, but the street is expecting that the final tariff hike could be anywhere between 15 to 20%, and every 10% hike in the pipeline prices could increase GAIL's EPS estimates by around 10%, and that's the reason why we are seeing such kind of a move when it comes to GAIL. It's up around 4.5% in trade, but do remember it's just the consultation paper which has been floated. The final tariff announcement will still take time around it will come out in the next 3 months, and every 10% hike could lead to an EPS upgrade of nearly 10% for GAIL.
So a 10% hike in terms of tariffs could actually lift your EPS by 10% for a GAIL. Sharmila, what would this mean? Do you think GAIL becomes a buying candidate right now? If you can just quickly pull up a 1-year chart or even a YTD chart of GAIL to understand the kind of performance that GAIL has given, taking into consideration the way oil prices have moved, what would your view be?
Can I say cautiously optimistic, because the news sounds good, but it's not my favorite sector. But I was just looking at the valuations; they seem reasonable. So if this news were to play out in their favor, then yes, I think there is an upside from this level.
Okay, so again, cautiously optimistic. Amit, what are charts indicating for a GAIL? Because 1 year you've seen the kind of downtick that's come in from the highest levels. Do you think this is a recovery candidate?
Overall setup is positive. Currently, the resistance zone for this counter on the weekly and the monthly basis is at 200 level, and also 200 DMA comes at 200 level. So currently, once if a stock gets a clearance about 200 level, then we will see the momentum to be picked up towards the 215 to 220 levels. As per the current scenario, there has been a rounding formation which is getting created on the weekly chart. So I can expect more buying can be approached while going ahead. Once the 200 level gets a clearance, then there will be a confirmation for the buy side.
So that's with regards to GAIL. But let's quickly pull up a few of the fertilizer counters. And if you see the news that is coming in at the bottom of your screens, that's ammonium nitrate manufacturer's license can now be given for a period of 10 years. So there has been an amendment, which is called the Ammonium Nitrate Amendment Rules of 2025. They shall come into force on the date of the publication in the official gazette, is what they've said. So Deepak Fertilizers is one of the stocks that is in focus on the back of the license that could be coming in. Chambal Fertilizers is another one which is seeing gains of around 2%. Earlier, I think the number of years that it could be given was 5 years, and now it has been increased to 10 years. So probably this could be a positive with regards to where fertilizer stocks are concerned. I think my colleague Varsha is actually going to join us for a DV slab, but let me ask her this question. Varsha, I know I'm putting you on the spot with regards to the fertilizer stocks right now. The Ammonium Nitrate Act, which has been amended where the licenses can be given for 10 years. Firstly, which are the companies that gain to benefit out of this? And secondly, does this actually benefit or not?
Yes, it does benefit, and Deepak Fertilizers will actually benefit the most, considering they are expanding their capacity when it comes to ammonium nitrate, and also on the technical ammonium nitrate as well. So they have got good growth prospects when it comes to ammonium nitrate. Second stock that you mentioned, yes, Chambal Fertilizers will also gain from this news, and so basically, here all the fertilizers will actually gain from this announcement, because every other fertilizer does deal when it comes to ammonium nitrate as a product.
Interesting. So it's the fertilizer pack that will be in focus in terms of quantification as to how much who will gain is going to be crucial. Very quickly, Sharmila, let me come to you on all these names. Fertilizer companies are seeing a spike right now.
They look expensive, but having said that, as we get into monsoons, this will be a sector that will be on trader lists, and we will be looking at it a lot more closely. But at this point, honestly, the valuations look expensive.
Okay, so valuations are expensive from a fundamental perspective. Amit, anything that looks attractive on the charts?
Currently, Chambal Fertilizer looks positive. Counter is continuously trading in the uptrend levels, and I am expecting more momentum will be continued till the time its stop loss are not getting triggered out. Currently, the support for this counter is at 660 levels. So till the time 660 levels is not getting broken out, till that point of time, we should create new long position, and we can hold the new long position. The upside next supply zone for this counter is at 720 level. One counter comes near 720 level. At that point of time, we can expect some supply in this counter.
Got the view, Amit, but let's also, stay with Varsha and move on to another stock which is in focus, is Divi's Lab. Now, the company has announced a long-term manufacturing and supplying deal with a global pharmaceutical company. Varsha, what are some of the key highlights about this particular pact?
Yes, so as the company has signed, a long-term supply deal when it comes with global pharmaceutical company, although the name has not been mentioned because of the confidentiality, but a company will supply advanced intermediate. Now, please know that advanced intermediate is a raw material used to make API, that is active pharmaceutical ingredient, which is the main salt in the drug. So DVs will supply advanced intermediate to this global pharmaceutical company. Now this is a key area, the key focus, because this agreement comes under DV's custom synthesis segment, which forms almost 54% to the total revenue. Now if I want to talk about the scope and impact, this agreement is expected to contribute meaningfully to DV's revenue, and also DV's is planning almost 650 to 700 crores of capacity of capex when it comes to capacity expansion. When it comes to this agreement, the expansion will be from at existing manufacturing facilities, and investment will be funded through internal accrual. As we all know, the DV's has almost 3,500 crores of cash sitting on its balance sheet, so they need not take the debt for completing this agreement. And lastly, if you see, this agreement ensures assured supply for the customer and allows DV's lab to expand its custom synthesis business, which contributes almost 50% to the total revenue.
Thanks for that, Varsha. But Sharmila, let me come to you first, because we've seen the pharmaceutical pact getting impacted because of the tariff tantrum, and seen some correction in the mid-cap stocks, but we've seen stocks like Sun Pharma, Cipla doing well, and Divi's is also one of them. How are you viewing Divi's on the back of this particular announcement, and also currently any estimates or something that you're waiting for in terms of Q4 also?
No, I don't have any estimates, but the news sounded good. And overall, I think pharma within the various sectors, especially the export-facing sectors, I think it's very difficult to imagine that overnight you could see some manufacturing set up in the US, because, as I think we've discussed this earlier in terms of manpower, you don't have the necessary people to set up the kind of factories that you require to be able to manufacture drugs there. So to that extent, I think this sector will sort of be relatively unscathed. So I would expect recovery overall in the sector, and this news did sound good. It's a strong player within the pharma space in terms of valuation, plus all the various positives that this agreement will give them. So this certainly looks very nicely placed.
And Amit, the charts also, like currently 3.6% up Divi's right now. Any view that you have on Divi's currently based on charts? Do you see any more upside from these levels as well?
Definitely, chart setup looks positive. On the daily chart, we are seeing that the inverse head and shoulder pattern has been created and the breakout also took place in this counter. As per the targets on the upside, as per the pattern, it seems to be near 6200 to 6300 levels. And the support for this counter is at 5650 level. Till the time 5650 level is holding strongly, till that point of time, we can expect buy and dip strategy and also new long positions can be created at this point of time.
Right, so that's with regards to Divi's Laboratories, but let's shift focus to a list of companies, wherein the lock-in with regards to the IPO, that is expiring. Few of them is in the next 30 days, few in the next 60 days as well. Varsha standing by with the list because almost $40 billion worth of equity will be coming into the market. I'm sure it's not the entire list because some portion will be promoter driven as well.
Yes, so actually, Hiral, we are looking at almost we are looking at 63 companies wherein we'll be having this lock-in expiry, and this could release a total of almost $40 billion worth of shares into the market. Now, not all these shares will be sold immediately because a lot of a portion remains with the promoter and the promoter-related group. But if I were to talk about the 1 month share lock-in in opening, so currently there are no 1 month lock-in shares. But if you look at the shares becoming free in the very near future, you have Stallion India Fluorochemicals, wherein 3.3 million shares will unlock, which represents almost 4% to the outstanding shares, followed by Denta Water and Infra, where almost 1.1 million shares will be available, again 4% to their total shares. Dr. Agrawal's Health, a large release of almost 10.9 million shares will be released, which is 3% of their total outstanding shares. This is followed by Ajax Engineering and Hexaware. Also Quality Power Electrical, wherein 5 million shares will be unlocked, significant, that is 6% to the overall outstanding shares. And moving to the significant lock-in events beyond next month, we see some notable releases. You have Worry Energies has substantial, almost 153 million shares unlocking very soon on April 25th. In early May, you have Blue Jet and Afcon, which have lock-ins lifted. Later in May, if you see, you have large unlocks in Sagility, Swiggy and Niva Bupa Healthcare. Alongside, you have Aadhar Housing Finance and Ask Automotive. And this larger percentage, if you see, particularly in Worry, Afcon, Sagility, Swiggy and Niva could be important to monitor.
Right, so a lot of stocks that will be in focus as well. Thank you, Varsha, for getting us the details. I think one clarification we'll need is whether the lock-in was in terms of the amount that could be potentially released, or it's the number of shares. So we'll get a clarification on that front. But I'm sure we will not be able to go through the entire list, but few of the bigger names, Sharmila, from there, if you have to look at the likes of a Swiggy or for that matter, Avari Engineers, Afcons, anything that comes to your, radar?
No, not really. I think we'll have to take the news as it comes, really. It'll be interesting, but I don't have anything really or not as of now.
Right, so that's with regards to a lock-in of 6 months and beyond. That's the kind of shares that we are watching out for. Amit, any stocks that you like from this list?
From this list, I like Sagility. As per the overall setup, the counter is still trading on the positive front. If you look at the chart setup on the weekly and the monthly front also, it is looking on a positive front. There is not much of the downside which we are expecting right now. Currently, the risk reward is on the favorable front. The resistance for this counter is at 44.50 level. Once the 44.50 closing comes in this counter, then we can expect 55 to 60 level in this counter.
Got the view, Amit. Now, we spoke about this particular stock at the start of the trading session, Just Dial, and it has shot over 9% after the now up almost 11% now after the company's Q4 earnings. Mahima joins us with some key details about the Q4 earnings of Just Dial. Mahima.
Right, so in terms of the margin expansion, that has come in as a surprise for Just Dial, and this is on the back of top line growth as well as cost efficiencies that have been achieved by the management. Other income is another factor that has led to this growth because that is up 40% QOQ, and this is on the back of declining bond yields as well as higher treasury income. In terms of profit before tax, that has been up around 22%, and this is due to lower effective tax rate as well. Now in terms of numbers, revenue is up around 7%, EBITDA up almost 22%, margins at 29.8% versus that of 26.1%, and net profit has shown a significant improvement of 36%. In terms of the key operational metrics, total traffic was up 11.8% for the counter, total active listings were up almost 12% for the counter, and total paid campaigns increased by 5%, and lastly total app downloads also came in as a positive number at around 9.4 times. So all this together has led to this kind of growth in the top line, and that is why the stock is seeing significant gains in trade today.
Got the view, Mahima, and thanks for that. Sharmila, let me come to you first. Just Dial quarter four earnings, as well as, we've seen something like an India Mart also be under pressure. Anything that you like in this particular space?
Just Dial looks interesting. I was just looking at the valuations as well as the numbers over the last couple of quarters. So I think this kind of a number with what it, with the metrics on which it has improved is very interesting. Probably I think also because of the correction, the valuations look interesting at this point in time. So I think there is, though it seems to be up 11%, I think you can see a further upside in this stock.
Amit, do the charts suggest any kind of further upside, on something like a Just Dial? Stock was depressed around the 700 to 800 rupee mark, and we've seen a very wild moves over the last 1 year. Does it warrant getting into the stock right now?
Currently, counter is approaching near resistance zone of 200 DM around 1060 level. So once if 1060 level gets a clearance, then only we might expect next leg of buying. At this point of time, risk reward is not at all approachable and not at all worthy at this point of time. So we should wait for new long position. Whomsoever is holding a long position should place a dwelling stop loss at 1000.
Right, so that's with regards to where Just Dial goes. One stock that is in focus on the back of earnings today is a IGI as well. Let's quickly pull up that one on the screens. Stock trading at the day's highest levels with gains of around 2.5%. There is some 4% right now. It was locked in upper circuit. What's interesting is because it's a growth of around 9 to 10% if you see in terms of where the top line is concerned, where the other income is up around 53% with regards to the company. Profits have seen a growth of around 11 to 12%. There has been a reduction in terms of the stock in trade by 83%. Margins have also seen some bit of an improvement. Amit, what are charts indicating with the IGI?
This counter, the downward trend line breakout is at 385 level. Till that time, 385 level is not getting broken out. Till that point of time, we will not get confirmation in this counter. So we will wait for the 385 breakout. After that, only we can create new long position.
Okay, so we'll wait for a breakout to happen. Very quickly, Sharmila, with regards to IGI, would you recommend this one or would you go with any of the jewelers?
I would actually stay away from the city gas distribution space entirely. We spoke of GAIL also earlier. So here again, valuations look interesting, but this is not a sector that I'm currently in favor of.
I was asking about IGI, not IGL.
Oh, I'm so sorry.
Yeah.
I don't have on IGI.
Okay, so no coverage with regards to IGI, but completely out of time. Thank you, Sharmila. Thank you, Amit, for joining us on the show and sharing the views. Thank you from, Puneet, the team that put the show together, and myself. Lots more lineup on the other side. Please stay tuned to NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
To India specifically, I really think India has a fascinating opportunity Because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
The first stock on the list is it's IGL now. If you see the stock that has perked up around 4% in trade, and this is largely on the back of the buzz that is on the street, that the company might announce a price hike of anywhere between 3 to 4 rupees from the 1st of April. Now this might as well happen in phases, so keep an eye out for IGL. Now this stock had to, the company had, in fact had to take a price hike post the Delhi election because the cost of gas had increased for them, and because of that the margins had come down, but they had not taken any price hike so far. So the street is expecting a price hike announcement to come in, which will be effective from the 1st of April, and it could be around 3 to 4 rupees, and it could well be implemented in phases. So keep an eye out for IGL.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome. You're watching Top Trades on NDTV Profit with me, Somit Sarkar, and my co-anchor Varsha. Well, Varsha, we are gaining for the 5th straight trading sessions. We have gained nearly 300 points so far in the day.
Absolutely, and let's look at the gainers. Who are the gainers when it comes to benchmark index? You have Tech Mahindra, you have IndusInd Bank, you have Bajaj Finserv, Axis Bank, and also Trent. Which are gainers when it comes to Nifty 50. But on the loser side, you have Adani Ports, you have HDFC Life, came out with its Q4 FY25 numbers. ITC is also on the losing trend. ITC acquires 24 Mantra Organic considerations of rupees 472 crore paid in cash, while you have HUL and Bharti Airtel also, when it comes to loser side. But let's look at the sectorial heat map. Let's see which are the sectors. But I think barring FMCG, yes, all the sectors are in green. You have, Nifty IT, which is actually up almost 1.2%. Nifty IT is up almost 2.7%. Sorry, Nifty Bank is up almost 2%. Realty is up 1.8%. But Nifty FMCG, it's down almost 0.7%. But let's see what is actually happening when it comes to broader markets. Interesting things in broader markets. If you see Nifty Midcap 150 is up almost 2%. When I talk about the gainers, you have Tata Elxsi came out with its Q4 numbers, though it missed street estimates, but management has given a good outlook, and that's the reason we are seeing the Tata Elxsi buzzing at 9%. You have Suzlon also, which is buzzing now because the Ministry of New and Renewable Energy released a new draft notification for revised list of models and manufacturers for wind turbine models. You have Nippon Life, Coforge, and Vodafone, which are in the gainers list when it comes to Nifty Midcap 150. On the loser side, though, you have Marico, you have GSK Pharma, Bayers Corp, and Fortis health. But if I were to talk about small cap 250, Nifty small cap 250, on the gainer side you have Just Dial, again strong Q4 FY25 numbers. You have Avas, Finserv, Alcargo Logistics and KFintech. Whilst on the loser side, you have Avanti Feeds, RK Forgings, Kaplan Point and Home First Summit, which are actually losing when it comes to small cap 250.
Right, Varsha. But then what's happening with DVs? I heard they won a big contract, big beneficiary or big financial benefit coming in for DVs on the back of this contract win that we have seen. I guess they will be doing a capital expenditure, right?
Yes, actually, Soumit, so DVs is known for, custom synthesis business, and they have announced an agreement, a long-term manufacturing and supply deal with a global pharmaceutical company. Now, company will supply advanced intermediates. Now, please note that what is advanced intermediates? It's a raw material used for making API, active pharmaceutical ingredient, which is the main salt in the drug that you use. So, DVs will be making intermediates for manufacturing of APIs. Now, this is a key area when it comes to DV's custom synthesis business, and this contract or agreement is expected to contribute meaningfully to DV's revenue, though partners' name and specific details are confidential and they've not mentioned the specific details when it comes to this agreement. But they are planning to do a capex of 650 to 700 crore, and which the expansion will be at existing manufacturing facility, and investment will be funded through internal accruals. We all know that DVs has more than almost 3,000 crores of cash sitting on their balance sheet. If I were to talk about the benefits, so this agreement ensures assured supply for the customer, and this will allow DV's lab to expand its custom synthesis presence. Soumit, so custom synthesis now, if you see, contributes almost 50% to their total revenue. So this agreement will actually enhance the custom synthesis segment for them.
Right. Well, let's also welcome in Gaurang Shah, the head investment strategist with Geo Financial Services. Gaurang, coming to you first on DV's lab. This new contract win plus the capital expenditure that they have announced, overall the street also believes that the impact of Trump tariff, even if it's applied, will be less on DV's lab. How are you looking at this counter?
Well, thank you so much for having me on the show. Good afternoon to all of you all. So, as a brokerage house, we at Geojit Investments Limited remain positive on the entire pharma play, whether it is to do with the generics or the APIs or the CDMOs. And along with pharma, we are positive on diagnostics as well as healthcare, that is hospitals. And the reason for being optimistic about all these three combined universe together is purely with the kind of dominance that India has had in the past, present, and will have in the future with respect to its capability, capacity, R&D, and production capabilities. Yes, short to medium term, there are going to be a little bit of concern or overhang. But if you are going to bring pharma under the tariff regime, then it is eventually you are going to put a lot of hardship to the citizens of your country, that is the American citizens. The cost of healthcare will spiral up to no extent. And in the present scenario, I don't think any wise leader of a country would want to venture or risk that. So news flows are there, maybe positive, negative, but we remain positive on DV's laboratories from a long-term point of view.
Right. Another stock that has been buzzing in trade is GAIL. Now, this is after the government initiated the review process of its integrated network. Now, do remember GAIL has sought for a tariff of nearly 77.43 rupees per MMBTU as against the current tariff of 58.61 rupees. So, they are asking for a 32% hike. So, what is the timeline here that one can see? Now, PNGRB has sought stakeholder comments by May 1st. This will be followed by GAIL's responses, which should be submitted by around May 16, post which there would be an open house. So, analysts are expecting the entire process to get completed over the next 3 months, and that's when we'll get a final tariff. Now, GAIL has sought for a tariff of nearly 77.43 rupees per MMBTU, which is a hike of nearly 32%. However, the street is estimating that the actual tariff hike would be anywhere between 15 to 20%, and this tariff decision will take around 3 months of time. And as per analyst, every 10% hike that comes in for the pipeline tariff, the overall EPS of GAIL also gets increased by around 10%. So that is one stock that we need to watch out for. Also, CLSA had upgraded its rating on GAIL post this announcement to outperform from hold and also hike the target price to 220 rupees. And that's the reason why the stock has been gaining in trade. Gaurang, have you tracked GAIL as a stock? Lower gas prices could benefit the company as well, plus the pipeline tariff hike that has come in. Multiple triggers we are seeing when it comes to GAIL.
So we have been maintaining as a disclosure prudent to give that on GAIL, that is Gas Authority of India, for a pretty long time. We continue to have a positive view on gas exploration, gas utilities. The final confirmation will come through after the inputs from the stakeholders of this hike of gas price. But I think the more positivity we at Jujit Investments that we have is purely the capability of making India self-reliant and exploring the natural reserves as far as onshore, offshore and ultra deep sea reserves are concerned. And the government is moving in the right direction as far as the exploration NELP policy is concerned. So we have been positive on gas for a pretty long time. Now, whether this will finally come out in some kind of a price hike, only time will tell, but we remain positive.
Right, so positive. Now, moving on, Just Dial. So Just Dial has shot up by over 9% today. Now, this is on the back of its fourth quarter earnings. Mahima has all the details.
Right, so in terms of the margin expansion, that has come in as a surprise for Just Dial, and this is on the back of top line growth as well as cost efficiencies that have been achieved by the management. Other income is another factor that has led to this growth because that is up 40% QOQ, and this is on the back of declining bond yields as well as higher treasury income. In terms of profit before tax, that has been up around 22%, and this is due to lower effective tax rate as well. Now, in terms of numbers, revenue is up around 7%. EBITDA up almost 22%, margins at 29.8% versus that of 26.1%, and net profit has shown a significant improvement of 36%. In terms of the key operational metrics, total traffic was up 11.8% for the counter, total active listings were up almost 12% for the counter, and total paid campaigns increased by 5%, and lastly total app downloads also came in as a positive number at around 9.4 times. So all this together has led to this kind of growth in the top line, and that is why the stock is seeing significant gains in trade today.
Well, thank you, Mahima, for all the details. Gaurang, for Just Dial, there is a margin expansion, of course, cost efficiencies was taken care by the company, but also the profitability that you are seeing is boosted up by other income as well. So your view when it comes to Just Dial, how are you seeing the operational metrics? Are they working for them?
So again, firstly, we don't have coverage on Just Dial, so I won't give specifics. But what my understanding, Vasha, is that there is immense amount of competition that is coming in to this sector, both from established players as well as not so established players. Survival is going to be of crucial importance in terms of bringing in efficiencies and controlling your cost. Won't be able to comment more specific on buy, sell and hold since we don't have coverage.
Right. Another stock that has been buzzing, or in fact there is a lot of news flow, is Zomato, which goes by the name Eternal now on the stock exchanges. Now, there are multiple reasons to focus. Firstly, on the fundamental side, what would be the impact of capping this FI limit to 49.5%? Let's get in Mahima to explain those details.
There are two things here. As you rightly mentioned, the board has approved an FI ownership cap at 49.5% from 100%. And the second thing is that this will also lead to an inventory-led and this will likely gain focus post the FI overall holding is trimmed. Now, in terms of what has happened so far where fundraising is concerned for Zomato, Zomato had recently come out with their QIP and raised around 85 billion. Now, in terms of that, 8% was subscribed by leading DI funds, and post the QIP, FI ownership fell to around 47.3%. DI ownership increased to 20.5% versus that of 17.3% 3% earlier. Currently, DI ownership stands at around 23.5 and FI ownership stands at around 44.4%. Now, what does this lead to overall? Increase in domestic ownership will overall aid data localization norms, also see control over inventory and safeguard local consumer data as well. An inventory, heavy-led model will also have better control over product, quality, pricing, improved consumer experience, higher margins through bulk procurement, easier promotion on private labels, as well as enhanced delivery-led time as well. But there are also changes where the overall inventory-led model is concerned. It requires stronger grip over operations, requires higher working capital in order to store the inventory, and the risk of unsold and obsolete inventory will be high and might negatively impact the overall margins as well as profitability. Now, Elara did come out with a note on this. They've maintained buy with a target price of 300. What they're saying is that Nykaa follows a similar model, and because of which they've overall enhanced customer experience. And the entire story that Zomato is now trying to trim FI ownership also indicates that Amazon and Flipkart are preparing for their IPO as well. So this is the overall view as to how and what will happen to FI holding in Zomato, and that is eternal.
Well, now the other part to this is the fact that because of capping this FI limit at around 49.5%, there could be massive passive selling that we can see because of Zomato being included or being part of the MSCI and the FTSE index. Now there could be outflows of anywhere around $1.4 billion on Zomato. Now why this selling? Because the company has capped the FI limit at 49.5%, while the current FPI ownership stands at close to 44.88%. Now, given the fact that the headroom between the current ownership and the limit is less than 10%, this could lead to either deletion of the stock from the index or at least lower weightage. Now, when it comes to MSCI, Zomato holds a weightage of around 1.33%. So this weightage could become half, and there could be an outflow in one shot of around 600 to 800 million $. Now, when can it happen? It can happen in the May 2025 review or in the August 2025 review. Now, when it comes to the FTSE, now the current weightage stands at around 1.17%, and whenever the FI headroom comes down or comes below 10% limit, then the stock gets deleted. However, the outflows when it comes to FTSE will be in a staggered manner. It will happen over the next 4 to 5 quarters. Every quarter we could see an outflow of anywhere between 70 to 100 million, depending if the headroom continues to remain below the 10% mark, and the overall outflow could be anywhere between 500 to 600 million $. When it comes to FTSE passive selling, and from MSCI we're expecting around 600 to 800. So total $1.4 billion of outflow is expected on the back of this move that Zomato or Eternal has taken.
Thank you so much for that. Gaurang, will Zomato have an upper hand, compared to Swiggy?
No. Well, honestly, I look at fundamentals, and as per my understanding, and please correct me if I'm wrong, entry, exit, inflows, outflows only matters for that particular day for not then more than a half a minute or a minute. This does not impact the working of the company. That is what my understanding is. We have been, as a disclosure, prudent to give that on Eternal, erstwhile Zomato. We were positive during the IPO. We had an IPO note on the subscribe side for Zomato at that point of time. And as we speak, we have a standalone buy report on Eternal Limited from a long-term point of view. Like I mentioned, news flows about entry, exit, inflow, outflows would only matter for that particular day, and that too maybe for half a minute or a minute, not more than that.
Right, Gaurang. Another consumer-focused stock, ITC, it is in focus on the back of the acquisitions that it has announced. It is acquiring not only the organic packaged food company 24 Mantra, but will also be increasing its stake in Ayurvedic company Madhusparsh. Let's get in Mahima with more details on the same.
ITC is definitely on an acquisition spree. It is set to acquire 24 Mantra Organic for consideration of 472 odd crores, and this will be completely in cash and through internal accruals. Just a brief about what 24 Mantra Organic does. It's a brand of organic packaging food comprised of 100 plus organic products across grocery staples, so that includes your rice, wheat, pulses, etc. The international sales for this particular counter is more than almost 50% of company's overall sales, and primarily USA based. based. In the last 3 years, the company's turnover in FY24 stood at 306 crore, followed by 327 in FY23 and 327 again in FY22. So revenues have slightly stagnated and declined as well. Now, what does this acquisition exactly mean for ITC? Well, acquisitions is overall 1.5% roughly of ITC's FMCG sales, but ITC believes that this network is ready for a 3x scale growth in terms of operation. Valuations at FY24 sales multiple stands at 1.5 times for the particular acquisition, and valuations are lower as compared to what recent acquisitions that ITC has already made in Ample Foods, which was valued at around 2.3 times. Lastly, in terms of acquisition of Mother Sparsh, well, ITC already holds 26.5% stake in Mother Sparsh, and it's set to acquire balance 73.5% stake. Mother Sparsh is basically a D2C brand in premium Ayurvedic as well as natural baby products. Over the next 2 to 3 years, the valuation stand at around 2.5 billion. This is what the company expects, and sales multiple of 2.5 times based on annual revenue run rate of around 1.1 billion rupees. So this is the overall view of what is happening in ITC with respect to the acquisitions it has made.
Right. Gaurang, how are you looking at ITC? A clear focus coming in from the management side of being less dependent on the cigarette business. But when do you see, or do you see there could be a value add with this more focus coming in on the FMCG business?
So my understanding is that 24 Mantra is going to be more of a value-added product, especially with the kind of 100 plus products that they have under their belt in form of organic food. It has a very strong brand. It has got a very strong presence, and it has got relatively strong product recall as far as consumers are concerned. This is one step towards bringing in an organic portfolio by ITC rather than making a beginning from the scratch, acquire a company which is well established. So I think it's a good business strategy. The other acquisition, I don't know much into it, but I'm sure 24 Mantra will augur extremely well for the product offering that ITC already has.
Right. Thank you for that. Moving on, let's shift our focus to banks, wherein banks are leading the market today after ICICI Bank, HDFC Bank and Yes Bank came out with their fourth quarter results over the weekend. All three banks witnessed strong growth, but first let's look at ICICI Bank. Harsh joins us with more details.
Well, ICICI Bank's numbers were a solid set. When you're looking at the net interest income number, it's come in a shade below 22,000 crore. The expectation was that it will be below 21,000 crore. So a solid beat on that count, 11% growth on a YOY basis, 4% uptick on a sequential basis on the NII number. When you're looking at operating profit, also very solid, 5% sequential uptick. That NII growth flowing very well into the operating profit. The OPEX has largely remained in line with the guidance that the management has given, and that gives very, very good comfort to the analyst community as well. It's a positive surprise across the board, as has been the case over the last 3 to 4 to 5 quarters that ICICI Bank delivers. Provisions down 27% YOY, QOQ. Now that number itself kind of reflects that asset quality is no concern at all. A 27% downtick on a QOQ basis. It's come in at 891 crore. The average analyst anticipation for this was sub 2,000 crore. So it's sharply below what the analyst community was penciling in with regard to provisions. Profit after tax, therefore, has surged versus expectations. Expectations were something around 11,600 kind of number. It's come in at 12,600 crore. So that differential really showing the outperformance that ICICI Bank has been starting to clip on a regular basis. 2.36% was the ROA number last quarter. It's coming at 2.52%, the largest among private sector banks in terms of ROA. The growth, though, was a slight disappointment. The loan growth has come in a shade below 14% YOY and just about 2% sequential. So if I had to pick out one thing that maybe was a miss to a certain extent, it would probably be the loan growth for ICICI.
Right. Thank you so much, Harsh, for all the details. Gaurang, ICICI outperformed HDFC Bank, but there's been concerns over the slowing, the slow AUM growth that the bank has seen. Just wanted to have your view.
Well, so I don't see it as a big concern, to be very honest. And my sense is that you also have to look at the backdrop of events under which there was a little bit of constraint as far as the loan book growth is concerned. Our understanding at Geojit Investment is that the loan book growth, not only for ICICI Bank, but almost all the strong banks, whether it is public, private, or strong NBFCs, is going to grow much faster than what is anticipated. And that is purely because of credit demand that is going to come through. So again, I'm prudent to give a disclosure. We have coverage on both ICICI Bank and HDFC Bank. Our rough approximate targets, though we have not done a detailed homework on it, but an approximate target of 1650 cannot be ruled out on ICICI Bank from a long-term point of view.
Right, thank you Gaurav for joining us. Thank you Gaurav for joining us and giving us all those details and your perspective about the markets and the stocks that we discussed. Moving on, Delhi Airport runway is set to reopen in the first week of May, bringing relief to passengers who have faced significant delays in the recent time. My colleague Aishwarya gives us more details on the same.
One of the busiest airports in the country, in the capital, Delhi's Indira Gandhi International Airport faced many snags, in fact diversions and delays of multiple flights, over 800 of them, of which about 68% of the total number of flights of the 1300 flights faced delays on Sunday, and it did catch the ire of a whole lot of passengers as well. One of them, a notable one, being the former Chief Minister of Jammu and Kashmir, Omar Abdullah, as well, who tweeted about a delay and diversion of the flight from Jammu Kashmir to Jaipur, which was supposed to land in Delhi but was diverted to Jaipur. Now, authorities have said that many reasons and pointed fingers at poor planning of the airlines and ignored warnings as well. There was a runway 1028 which was scheduled to be under works for its repair as well, which airlines have ignored time and again, is what they have said. Apart from that, a change in the direction of winds from westerly winds to easterly winds is also one of the reasons why there have been delays across the board of multiple flights at the Delhi airport as well. So for now, the authorities, Delhi airport will be reopening the runway after these massive delays in the first week of May, is what they're saying. They have also said that airlines have failed to adjust flight schedules and notify passengers about delays, reschedules, as well as cancellations. And this non-action has led to a lot of operational delays and a lot of inconvenience for passengers as well. A lot of chaos we can see at the airports, inside the airports as well, and efforts are being made to restore these kind of snags, and in order to reduce the delay time, also efforts are being made not only at the airports end but also at the airlines end as of now.
Well, thank you Aishwarya for all the details. Viewers, this is all the time that we have got on this edition of Profit Top Trade. Stay tuned to NDTV Profit.
That's huge. That is a biggie. It's out of there.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
The first stock on the list is it's IGL now. If you see the stock that has perked up around 4% in trade, and this is largely on the back of the buzz that is on the street, that the company might announce a price hike of anywhere between 3 to 4 rupees from the 1st of April. Now this might as well happen in phases, so keep an eye out for IGL. Now this stock had to, the company had, in fact had to take a price hike post the Delhi election because the cost of gas had increased for them, and because of that the margins had come down, but they had not taken any price hike so far. So the street is expecting a price hike announcement to come in, which will be effective from the 1st of April, and it could be around 3 to 4 rupees, and it could well be implemented in phases. So keep an eye out for IGL.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind Hello and welcome. Good afternoon. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita. With me is Neeraj Shah. And let's quickly look at the markets. Plenty to talk about today. In fact, 1.25% higher on the Nifty. We've built on those gains. Let's look at it intraday as well. It's a very solid day of trade. We're close to the day's high. In that sense, 24,189 is the high we've made. We're just about 40 points away from there. So just off the day's highs. And when you're looking at the heat map as well, there are plenty of big movers. IT, banks dominating the pack, but then you have a Trent as well, a Power Grid as well contributing. Within the financials, you have a Bajaj Finserv also doing well, and within the auto pack, you'll see Bajaj Auto and M&M. So it's a couple of pockets which are showing zing, but some of these stocks also contributing healthily to the Nifty. But it's largely in terms of contributors, if you can pull those up, it's the heavyweights which are pulling the index at least higher in trade today. look at those. Infi, Reliance, HDFC Bank. Those are three stocks which are really pulling the index in trade today. So heavyweight, dominant, but nonetheless, we're seeing very good traction across the board. Let's look at it sector-wise as well. Let's pull up the sectoral heat map and thereafter the advanced decline before I take it to Neeraj for broader markets. Look at the top gainers in terms of sectors: IT, energy and banks. These are the three top gainers. Along with it, metals also doing fairly well in trade, 2% higher on the Nifty metal index as well. But PSU banks really ruling the roost today. Let's pull up those PSU banking stocks and within that as well, you're seeing good traction even among the heavyweights. Something like an SBI is doing okay-ish today, but look at a PNB, a Can Bank, a Bank of Maharashtra flying away in trade, a Bank of India, UCO Bank, all of those doing fairly well for themselves. So that's the kind of texture. Let's look at the advanced decline, and it's a good sectoral trend playing out. All sectors in green except FMCG, but even when you're looking at the advanced decline, very healthy in terms of the breadth. There you go, and it has been so since early morning. So good trend with the advanced decline gap widening a wee bit, if at all, definitely not contracting, Neeraj. So positive across the board at this point.
Positive across the board for sure, Harsh, and it's showing in the way the small cap index is doing as well. 1.7% higher for that index is also very, very solid. The breadth, as Harsh said, is looking very positive. Let's pull up the BSE 500 winners and losers just to get a sense of which are the stocks which are really moving up in trade, and then the positives really make up the bigger list, if you will. Look at that, the disparity. Avanti Feeds is the top loser, down only 4%. The gainer list, Just Dial, results impact 11%. Tata Elxsi, you could argue a bit of short covering and a bit of what's happened in IT per se. That stock is doing well. Vodafone Idea is up in trade. And then some of the financial names, the likes of Aavas, some of the smaller banking names are all out there. Last but not the least, both Suzlon and Inox Wind, and if you can pull up those stocks individually, I think they have had a decent move in the session today. So keep them at the back of your mind as well. Norms have been changed for indigenous procurement in the wind equipment space, as a result of which this is happening. Now, Harsh, are you going to do some factors or should I go to Meghna?
Yeah,
okay,
let's
Harsh.
look at what are the 5 trends that are playing out in markets. And you know, the first one there is that the Nifty is up 1+%. 5th straight session that the Nifty is up, and up 1+% in 5 of the last 7 sessions. So the traction in April has been fantastic and continues to be that way. At least over the last 10 odd days, we've seen some very good traction on the Nifty 50. Heavyweights are contributing to the Nifty gains. We did see that. IT, banks, heavy, both of those contributing 2% plus. And let's pull up the sectors exactly there. Banks, metals, IT. All 3 of those are 2% up in trade, and which is spilling over onto the Nifty. Bulls in charge, the breadth is clearly strong, it's positive. And last off, FMCG index, probably the only spot in terms of sectors which is trading in the red. Outside of that, across indices, broader markets and sectoral indices, we're in the green. Neeraj.
Let's take it to Meghna Malkan, wealth mindset coach and author, joins in right now on the show. And I presume for the first time on the channel, Meghna, it's been a while, but good talking to you. Neeraj here, thanks for taking the time out. Is everything as well as the Nifty is making it out to be?
Good afternoon, Neeraj. Thanks for having me. Yes, it's been a while. Nifty is making out a completely different picture. Yes, things are way better than what we experienced last month. But though I feel this is a frenzied move, and though the trends have been changed, but Nifty, the way it is, it's painting a picture which is a little different that's playing out in stocks. I would agree banking stocks, financial sector stocks are definitely that I would bet on the longer side. But I believe it's a long-term game. I believe we could be out into an uptrend, then get back into a consolidation. So if you ask me, yes, the downside is something that we wouldn't see for a while right now, but then it would take for broader indices as well as stocks across major indexes to settle down, to consolidate, to get convinced that this is the time to buy. That's what I would say.
Got it. So Meghna, so many people talking about the bank Nifty, a bit of a FOMO effect coming in, right? That we missed out the rally. So if you're talking about the need or probably the probability of consolidation, would that hold true for bank Nifty as well?
I guess so. See, Bank Nifty is in a completely new zone. Seems to be super outperforming everything and all the major indices as well. So, but I do see a very strong support at 54,700. But everything goes on in circles, right? Everything goes on in cycles. So I would not be in a hurry to get into a frenzy to buy because I know my risk is way too far behind. I would wait for a retracement at a decent support, and 54,700 seems to be a good support to me on Bank Nifty.
And Meghna, therefore, your picks for this afternoon.
PFC looks good to me considering that we've had a nice consolidation. Its momentum is moving above the 60 zone RSI. If you see, it's had multiple attempts to move out of 60 and now it's finally moving over 60 zone. It's breaking out of the consolidation. Volume seems to be supporting the price move as well. So I would go with PFC. 430 is a good level where I could place my support on this current trend, and 470 is the first target that I would look at.
Okay. Thank you, Meghna, for all of those views. Quick view, Meghna, one more on a trend, because that one's standing out among the others. The others, in terms of sectors, there's plenty of tailwind on some of the other counters within the Nifty pack, which are doing well in trade. What about a trend, and what are you seeing on charts with regard to that one?
If I see the chart, weekly charts look a little icy. Even in daily, I see a huge gap there. If you see, it's kind of filling up the gap, and there is a resistance that I see here at around 55.50 level. So I think there is, right now, I wouldn't buy into the resistance, but I do see a very strong support where it took support in the previous time as well, which is 4,700 level. So if I do get a dip at around 4,900 to 5,000 levels, I would definitely buy at that point of time, considering there's volume support as well at that point of time.
Got it. Meghna, tempted to ask you, this morning we got all got a bit surprised by looking at the strength in ID. Fundamentally, it didn't seem like it would, but it gave a big gap up, right? Now, it's an index that has really been beaten down. Do the charts suggest whether it's a dead cat bounce or is this a sustainable one? Would you trade any of the IT names?
Well, for me to call it a sustainable one, I would like for it to sustain the price that it is for at least a week to come. I would neither put it as dead cat bound because there is volume support, but I would rather have the price sustain here for a week. If you see the chart, at least from the beginning at the daily chart, the momentum still looks very weak to me. There are no major divergences at the bottom for me to really get interested into this as of now. So I would just wait and watch for one more week to see how the price settles at this zone.
Okay. And Meghna, just final question. I mean, within this pack, IT as well, because large caps are making one kind of a move, but a lot of broader market stocks are kind of chalk and cheese. We have an emphasis which is doing very well, maybe not as much in a KPIT. Tata Elxsi doing very well, maybe not as much in some others. Is there a set of or a couple of standout names that you would particularly watch out for, even if you don't initiate trades right now, within the wide IT bucket?
Wipro was something that I was looking at because I do see some kind of divergences forming at the bottom. Volume seems to be drying up on its way down. So Wipro is something that I'm just kind of watching it from the daily to the weekly chart, seeing how the prices are playing out, and the volume is reacting based on like how the prices are playing out at the bottom.
Got it. Meghna, fantastic talking to you. Like I said, been a while, but maybe look forward to talking to you more often.
Thank you. Thank you, Neeraj.
That's Meghna Malkan and some things. So keep Wipro at the back of your mind. And from among stocks, I think PFC was something that she recommended. But we brought up IT with her because it's a great lead into the next conversation that we are having with Abhishek Kumar. He tracks IT services at JM Financial Institutional Equities and joins us right now on the show to talk about, well, what's really happened. Abhishek, good having you. Thanks for joining in. And, it took me by surprise, but in the morning when I saw the kind of reactions that we did to most of the IT names, and then when we are just trying to dig a little bit further into it, one of the, our understanding was that, that the index had been beaten down so badly, and Infosys did not speak about projects getting pushed the way TCS and Wipro might have. And maybe that could have been one trigger. But I'm just trying to understand from you, what explains this frenzied move in IT today?
Yeah, hi, good afternoon. Thanks for having me here. So yes, Infosys did not talk about cancellations or pauses. See, there is one thing. We have three results so far: TCS, Wipro, and Infosys. There is one common theme, that I am sensing. That is that while near term, maybe a quarter or so, the visibility is uncertain, but none of the players sounded any alarm when it comes to full year or medium term. Right? None of them have seen cancellations. It is mere pauses. One such example is Wipro, when they said that one large SAP program has paused. Now, SAP implementation can only be paused. It can't be, it's unlikely to be cancelled because the end client might have already paid for the license. So these are, classic example of pauses which can go away, once some uncertainty lifts in the environment. And Infosys was the first one to give a full year guidance, and their guidance, in my view, is actually encouraging. That's what we wrote in our note also. Encouraging yet realistic. Encouraging because if Infosys had met its 4Q expectations, the guidance for the same CQGR that their guidance is implying now could have taken the guidance up to close to 3 to 5%. Which is what our expectations were. So that means, there is no material deterioration from the pre-tariff view that we had, which is built into at least the quarterly, growth cadence that they are building in their guidance. So that's encouraging. And we think it is realistic because, if you look at their last year deal wins on a net new basis, it was $6.5 billion of net new deals which they won. They also indicated on the call that the deal tenures have come down. That means, the conversion would be faster. And at 0 to 3%, the incremental revenue they are building in their guidance is just $0 to $600 million against a net new deal wins of $6.5 billion. So I think it is realistic, achievable, and it kind of puts a floor to the expectation, given this is the first one which has come out with the full year guidance. So looks like everyone is building in, things to stabilize or improve as we move through the year.
Point taken, Abhishek. Harsh also joining in. When I'm looking at valuations, Abhishek, when I'm looking at past averages, stocks don't seem to be trading at a deep discount to past averages. So correct me if I'm wrong, that the move that we're seeing today is largely just on the back of some bit of positivity that's starting to get built in versus what was earlier anticipated.
Yes, you're right. So in terms of valuation, let me first tackle that. Companies like Infosys, TCS are trading close to their 10-year average multiple. Yes, not at a discount. If we take last 5-year average PE ratio, then they are trading almost at one standard deviation below the 5-year average. So may not be at discount to long-term averages, but not expensive also. I would say they are reasonable. And if the kind of guidance which Infosys gave, if that kind of gives some visibility in terms of where the earnings could land up, that should give confidence to the investor that earning downgrades from here probably would be limited. And with valuations at 10-year average, etc., the risk reward seems then favorable.
And what do you make of the downside risk to this, Abhishek? Because oftentimes in the last year or so, we've seen some bit of positivity with regard to commentary, which has been recognized by the street. But thereafter, the factors that follow in terms of a rate cut, it has tended to get pushed. In terms of demand recovery, that too has been weak and fleeting. Do you believe that some of those factors still are elusive to a large extent?
See, I look at it this way. If we look at the deal wins by some of these players, whether it is TCS, Infosys, and Wipro, because that's the only tangible data points that we have to build our revenue forecast for future. And all three of them have done very well in terms of deal wins last year. One can argue that Infosys deal wins in FY25 was weaker than FY24. But FY24 was a record year. But on a standalone basis, all three of them have done very well. So their order backlog, in my view, is very strong. Getting into this uncertainty compared to when they went into COVID. So that should give some visibility into revenue. Yes, discretionary spend might get pushed out, but with where the valuations are and expectations are, I don't think Street is building any uptick in discretionary spend anyway. If that were to come, that will be an added upside.
Okay. Abhishek, now the one thing that came out in the commentaries was that I think at least in Infosys, I distinctly remember having seen that they mentioned that the European auto sector is looking weak. I'm changing tracks here a bit, but they said that the European auto sector has looked weak. We know, there is telltale evidence to suggest that there might be issues there. What happens to ER&D? And I don't just mean KPIT, which is only automotive, but some of the others also have a large automotive presence, right? And Europe forms a bulwark there, if I'm not wrong. So what happens to ER&D earnings and possible commentary? How would you, as somebody who tracks this space closely, think of the ER&D stocks for the near term?
Yeah, so look, across the board, ER&D stocks have taken a beating over the last, 4-6 months, ever since, European auto OEMs started flagging off some challenge. So that is not new. A lot of it is in the price. KPIT has come down from its high of 1,900 to now less than 1,200. There are two ways to look at this challenge. There is no denying that auto OEMs in Europe and maybe in US also are under a lot of pressure, more European OEMs. One is the direct impact is, they cut down their R&D expenses, which they have talked about. Their R&D expenditure probably peaked in calendar 24. But on the flip side, these kind of crises, and as for us who track outsourcing companies, the wave of outsourcing always have been triggered by some or the other challenges at the end client's market, whether it was Y2K, whether it was GFC in 2008. And I think auto ER&D, where the outsourcing penetration is still single digit, there is a huge scope of more outsourcing and more offshoring. Whatever outsourcing has also happened in this space so far has gone to a lot of nearshore players who are in and around Germany and France, etc. A lot less share comes to India compared to IT services. I think that can change because they have no other choice but to reduce cost and still do R&D, which is good quality at scale and lower cost. So India provides a very good alternative. So I see this as not as a threat, but as an opportunity. It might play out maybe over the medium term. But I think clearly the outlook from a medium to long-term perspective is very good for the ER&D plays.
Okay. Are you making? We were. Somebody in the morning was in an editorial discussion was making a point about maybe large caps per se, ER&D plus IT services, large caps. The near-term bottom may have been formed. Can't say the same for mid caps, small caps. Do you do a bifurcation like that, or is it very bottom-up, earning specific?
Yes, I think the better way to do it is bottom-up right now, because especially mid caps, they have their own nuances. They are not as diversified as large cap. So we need to see what's happening with their verticals, who's exposed to tariff risks, etc., who has the momentum of deal wins behind them, execution, where the valuations are. So yeah, I would be more bottom up when it comes to mid caps.
So what within bottom up, Abhishek, if you can give us views and names?
Yeah, so in mid cap space, we like Hexaware. Hexaware, I think, has corrected below its IPO price. They in their first earnings call, they indicated 2 large consolidation deals that they have won in their top 3 accounts. And I think they're confident of double-digit growth this year. So I think from a valuation perspective, also Exaware makes sense. So we like that in Exaware. As we discussed, I like KPIT. That's more on the ER&D side. And Coforge also after correction looks good. They also have deal momentum behind them. So I think these are some of the mid-cap names that I would prefer right now.
Abhishek, last question with regard to how AI or your views with regard to how AI is going to disrupt the space in some fashion, in a large fashion. Will the AI winners be different? And how do you identify them? A difficult one, but if you have a view.
Yeah, so it's an evolving discussion, as you can imagine. I think there are two aspects to AI. One is the volume compression that we are seeing now, probably when everyone talks about productivity pass back to clients. Essentially, they are doing more with less, and therefore they are billing for less people. That is playing out now. But the other equally large, if not bigger, aspect is new use cases, new areas that can open up for IT services players. I think that has not taken any shape, or we cannot say with any degree of confidence that when that will start, if at all that will start. But my sense is that with AI getting into everything, it's a matter of time before the end clients of IT services players will find more use cases. There could be, some of the identified opportunities are something like legacy modernization, very old applications that have not been modernized because nobody knows what they do. And that can open up a large opportunity because AI makes it possible. So net, I think it would still be positive. But the way it is evolving looks like all the negatives are hitting the players first, and then the positives will follow. So that would be my view. I would still be optimistic about the scope of AI. I mean, just imagine when every single industry in the world is getting impacted by AI or becoming, more tech focused. The only industry I would worry about is IT services, actually. There are other, like creative content creation or so many other industries, creative writing, that can be cannibalized by IT services players. So IT is something I'll not worry about just because of AI.
Okay, not as worried with regard to AI, especially from an IT perspective. Thanks so much for joining us this afternoon, Abhishek. Good having your views on a day like this when IT has been a real mover. In fact, pulled off a bit of a blinder, if I can call it that. But what we'll do, we'll slip into a very short break. But before that, we'll leave you with our conversation with Mastech. Weak set of Q4 numbers. But we spoke with Umang Nahata, the CEO of the company, about the quarter gone by. Given that an IT discussion was at play, listen into a slice of that.
The other expenses that you see are largely, like I said, the kind of work that we are getting in UK is a lot on data and AI and front-ending capabilities. These are capabilities that we are still building and expanding into. So some of these capabilities we have to partner and get subcontractors in our business. These are also locally required security cleared resources in UK. And therefore that subcontracting / partner expenses for the quarter has gone up. So that portion of work comes from them. We are almost around 80 on-site resources that we have to add or ramp up in the quarter. The second is the difference between the operating profit and the PAT. That is largely due to a one-time cost that we saw prior period as we changed the method. It's not that these receivables are not collectible. It's just that the accounting method change allows us to put up a higher provision than what we were putting up earlier, and therefore it's a one-time charge for the prior period.
India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
All right, back with India market close right here on NDTV Profit. Now, here's some global opinion that has come our way, which you could argue could be constructive India. So HSBC in the strategy note have spoken about India as a safe harbor, and they say that stocks have gained slightly since the Liberation Day, which makes it an exceptional case because not too many markets are above Liberation Day numbers. Liberation Day, of course, is the 2nd of the month. Still exhibiting world-leading GDP and earnings growth, and valuations having corrected over the last 6 months makes the case for equities in the face of global challenges quite compelling. So this is the HSBC view. Goldman Sachs, asset management again. By the way, both of these are asset management. So it's not the sell side, but the AMC, which has given this note. And in their strategy note, Goldman Sachs AMC says that they are increasing allocation to India within the emerging markets portfolio. And they say that India can be there could be potential enhancements to information ratio. India can achieve higher utilized excess returns without increasing volatility. So bear that in mind. In the latest note from Jefferies Greed and Fear, penciled by Chris Wood, he says that US stocks are still trading at 19.2 times forward earnings, and he advises global investors to continue to reduce positions in the US. No, I think we've gotten this line wrong. He's advised global, just remove this line, let's remove this line. He's advising investors to reduce position in the US and continue building positions in Europe, China, and India. I think that's the message given by Chris Wood. So this is a fair degree of global opinion that has come our way in the last few days. Now, let's try and figure out what is it that we're gleaning from the dealing rooms. Soumit Sarkar brings us the Herd on the Street segment every day at this time, and today is no different. Well, interesting day to get the segment. Are people at large fairly bullish, Soumit?
Well, yes, there is a bullish tone that we are seeing in the market, 5th straight day of gains that we are picking up, and it's a broad-based gain basically. Stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating. Second stock on the list is Godfrey Phillip. Dealers indicate that smart investors have now started to accumulate this counter at lower levels on anticipation of a potential positive announcement that could come in, or a positive development that could happen when it comes to Godfrey Phillip. Third stock on the list is HUDCO. Now, a large influential HNI has started to accumulate this counter, and that's the reason at one point of time the stock was up more than 2.5% in trade. Large block deals have happened. A large influential HNI is the buyer in trade, that is what I'm picking up. And lastly, CG Power, that stock was up more than 4% in trade. Buzz on the street is that there could be a potential large capital expenditure announcement or our acquisition related to semiconductor which could be announced from CG Power side. So keep an eye out for CG Power as well in trade.
So those are some stocks for you. Thank you, Soumit, for all of those views coming in, as always.
No, just that I think on CG Power there is this whole conversation around Tesla being in the thick of things as well, right?
Could be that as well, but yeah.
Yeah. Okay. Interesting, Soumit. Thanks for that. Okay, let's get in Akshay Bhagwat, Senior VP JM Financial on the show. Akshay, good having you. Thanks for joining in. We're talking about a clutch of stocks, Akshay, before we talk about the larger indices. Let's say a CG Power. Or if you don't track that, then I'll add on a couple of other power ancillaries, maybe a Suzlon, Inox Wind. Any thoughts on these?
Good afternoon. Well, it's more of a momentum-driven rally right now, and as I see the price structure, firstly of CG Power, it's been a one-way rally from the levels of 540, and possibly the stopover for the stock right now seems at around 675. So 675 is the point where you can consider taking some profits off the table in case you're holding from a short-term perspective. And moving over to stocks like Suzlon, if you were to look at Suzlon, there's a very strong momentum pickup today. Most of the moving averages have been surpassed, and the way the stock is setting up is it's mostly moving for targets of 65 to 67 on the short-term time frame. So continue to be positive on the short-term time frame in both the names which you suggested.
Interesting. And Akshay, while we're at it, call on the index and the Bank Nifty very quickly before I take your picks.
So, see, Nifty today has broken out of the 23,850 range. It's come in form of a gap up. So there is a temporary stopper resistance at the levels of 24,200 to 250 zone. This is valid for the next couple of days. You might see a temporary sideways action with the Nifty confined in the range of 24,000 to 24,250. This is valid for the next 2-3 days. But broadly, the setup is hinting for an upside till 24,700 to 24,800 zone. View will be positive till we hold the 23,800 breakout level. And as far as the calls go for today's show, two recommendations from my side. One is Oberoi Reality from the reality space. Today, a strong pickup in this space. And Oberoi Reality is the chart structure which we like the best among the stocks in this pack. The target is 1705 and 1724 with a stop loss of 1584. Second trade is pharma, where there is good liquidity and good momentum picking up slowly in most of the names. Sun Pharma is one name which catches the on the technical price parameters. This setup is promising for 1786 and 1798 from a short-term trading perspective, and 1702 will be the stop loss you need to maintain on this buy trade.
Okay, interesting. Akshay, quick view on the Bank Nifty as well.
Look, the Bank Nifty all-time high level surpassed, very strong momentum, one-way rally. At least what I see from an expiry perspective, somewhere 55,500 is where some call writing is slowly picking up traction for the monthly expiry for Bank Nifty. Highly overbought on the price chart, so there might be a temporary cool-off. And I'm saying a cool-off, it's not a correction. It is just a sideways movement which you can anticipate. Probably 55,000, 55,500 is the sideways range you can anticipate for the next couple of trading sessions. Just a cool off, but broadly a very strong index to be placed in. Today, the small and the mid cap names in banking are doing very well, and PSUs have also joined the party. So overall, positive on the Bank Nifty. But if you were to you're thinking of buying Bank Nifty fresh, then wait for slight dips near 5,500. That would do well from a risk reward perspective.
What about stocks? Akshay, so the ideas that you've given, the one set of names that a lot of people want to know if they can buy as a bucket at a higher level now, at these levels now. So one is a call on the Bank Nifty, the index entirely. Two is for all the small banking names, I mean, which one is the best place? So there is a Yes which is gained, there is I think Federal, which is doing a clutch of NBFC names, microfinance names, especially the smaller ones. Is there something that is standing out on the charts?
Absolutely. I will be very positive on Federal Bank. Now, the reason will be that if you look at a slightly medium to longer term perspective, this chart has been in a sideways consolidation from the last 5-6 months. Time and again, this stock has seen a bounce back scenario from 180 and it heads all the way till 210. So the way this setup is last 8-10 days, today is a breakout of a range consolidation here. Long additions are picking up in derivatives in the May series as well, and strong volumes accompanied by the breakout at 195 just gives a very strong momentum to Federal Bank, where you can look forward for targets of 215 to 220 from a short-term momentum chasing perspective.
I wonder what the view is on an eternal, which is Zomato, because that one also has been in the news for a bit, right, Akshay?
Absolutely. So for Eternal or Zomato, I think if you look at the price structure, it's been 3 months where a broad range is clearly being seen on the charts. 200 is where the consensus support is. Time and again, strong volume based buying is emerging at the levels of 200, and there is some resistance faced at levels of 240. But the way the setup is hinting, there is a good chance that you might see a breakout in the making, accumulation being under right now as we see in the levels of 220, 240. So I'm playing positively on this stock. I'm anticipating a breakout about 250. This may happen very soon. And whenever you see this happening, you should be rest assured that 270 is in the making post the breakout in Eternal Limited.
Okay. Now we've spoken IT, but it also happens to be our stock of the day, stroke sector of the day. And Infosys, of course, in focus on the back of its numbers. And the kind of move that we've seen today, largely leading the IT index higher. Puneet joins us to help us understand what's pulling the stock higher. Puneet, we've spoken a bit about the fact that assumptions were subdued, and therefore this move that has followed. But give us perspective.
Well, thanks for that. So definitely, assumptions subdued, estimates subdued, results subdued. Attrition is higher, 3.5% decline in terms of constant currency revenue. You are looking for bad news, you will find it, but stock is still up 3% today. And while I might be, throwing darts in the dark, just looking at some of the key aspects, what might be working for Infosys. We are looking at short covering currently, in trade today, but, we have seen currently based on fundamentals specifically, Infosys now delivers a 4.5% free cash flow yield. Despite a cut in EPS for FY26 and 27 across the clutch of brokerages that we've seen today. The third key aspect, that EBIT margin came in better than feared due to lower third-party cost, and that is expected to help margins in FY26. Despite we saw a salary hike in this particular quarter, but only a 30 basis point reduction in margins to come in at 21.3%. Now, what was interesting to me, across brokerages, we've seen target price cuts with Citi leading the way. But on the other hand, Investec has actually come out and upgraded the stock today, in the session today to a buy from a hold rating earlier. They have, although cut target prices to 1,575 from 1,590 earlier, but they are mentioning that the growing tech debt could push these companies to invest in AI adoption going forward. And whenever things stabilize, that will be a big boost to something like Infosys. They are also anticipating growth to rebound once, as I mentioned, things will stabilize. And they are anticipating something like Infosys as well as, the large cap players to perform better. And we had a fundamental view in the morning as well from Sandeep Agarwal. His view was that mid-cap IT is more niche and the growth will be more affected there and might take longer to come back. So essentially, while Infosys results were out and we've spoken a whole host about the guidance of 0 to 3% lower than what analysts had estimated, but very interesting in terms of valuation after a 24% correction on a year-to-date basis.
Indeed, very interesting. Joining us also to give us a perspective. Thank you so much firstly for that, Puneet. But joining us also to give us better perspective is Siddharth Khemka, Head of Research, Wealth Management at Motilal Oswal Financial Services. Good afternoon, Siddharth. What do you make of the IT move today? And I want to underline a couple of specific names here. You have something like a Tech Mahindra up 5%. So do you believe move is a little bit exaggerated? Is it a knee jerk today? Or do you believe in any case valuations were providing enough comfort? What's the sense?
Yeah, hi, good afternoon. So I think definitely a lot of the negative results have already been priced in the stock prices, and that led to some short covering and knee-jerk reaction today. Of all the things, what we are seeing is that what came out as a positive surprise was the commentary from Infosys and the guidance that they have given at the higher end of the revenue growth guidance, which is 0 to 3%. We see that that assumes a stable to marginal improving environment, and this we found notably positive, especially looks like that could lead to a 0.5 to 1.5% on a sequential basis CQGR growth over the next 4 quarters, which looks interesting. What was other thing that was interesting is that the margin guidance has been kept pretty positive and strong. So both these put together, I think some of the other stocks have reacted positively in reaction to that, expecting a positive read through, especially for the ones like the Tech Mahindra with the earnings which will come later during the week.
And Akshay, if I can quickly take a technical view on this one as well, a Tech Mahindra up 5% and Infosys up 2.5%. What are the levels you look out for, and what would you do at this point?
Well, see, as I look at Infosys, it's been a one-way fall or weak pattern in Infosys for the last 3 months. 2,000 to 1,300 is the journey which Infosys has seen in the last 3 months. So it was a case which was building more for a pullback rally. So there has been some buying intent. It's more of a pullback rally, as I understand right now. And really, is this a bottom or not for Infosys? It's still, as it concludes, is more of a pullback, which may conclude around 1550. That's the best case scenario I see as of now. So it's more of a trading pullback in Infosys, but Tech Mahindra here has more legs to this momentum, 4 or 5% plus up in the trading session today. And the broader charts are also seeing this recovery from a trend line support of around 1200 to 1250 on the monthly chart. So this has a lot of gains or legs to take it all the way till 1550 on the upside. So if I were to choose among the two, I think Tech Mahindra is better placed from a buy and hold perspective. Time horizon will be 1.5 to 2 months. So Tech Mahindra is the stock I like over Infosys going by the price structure.
Okay. Siddharth, good afternoon. Broadly, because this move has been so swift, right? How many people penciled in a 4.5-5% move in a 3-day truncated week? Not too many. And even before that and post that, we are actually seeing a follow-up. So maybe there is a bit of a FOMO effect out there too. I'm trying to understand. What's the mood out there in the dealing room and within clients? Are people really feeling missing, like they've missed out on buying the dip? And are people rushing in? Are volumes picking up or nothing like that?
So Neeraj, hi, good afternoon. Yes, I think so. It's a mix of a lot of things. So there was definitely a lot of participation in the market in the last few weeks. Yes, the run-up has been sharp, and I think a lot of that has to do with the FIs coming back in hordes. B, a lot of short coverings in the index. I think that has also helped. And if you put around what is supporting, especially the Nifty, if you look at almost 38-40%. Comes from financials, where we are seeing the earnings being pretty strong. The interest rate cut scenario is also supportive, and also the fact that this is one sector which is immune to what is happening globally. So 40% of the index is being taken care of. Another 10% comes from Reliance, which has been again pretty steady and stable out there, already corrected, seeing again some recovery on back of the lower crude oil prices, I think. So 50% of the index is being taken care of. IT was 1 week back, pharma here and there. But I think overall what we are seeing is that selectively participation is there. There have been mixed sentiments out there, not that kind of a feeling of a purely missed out, or you can say a FOMO, because people are waiting for results and the stock to react and maybe then take a position. But selectively within the large cap, some sectors, but from the broader markets, some themes have definitely picked up in the last few weeks. For example, after the monsoon update, a lot of agri fertilizers, two-wheeler stocks that were being bought on hope that this year there will be a better monsoon. So agri-related stocks participation was there. Defense again has been in limelight because of the order inflows, because of what is happening in the global geopolitical environment. India trying to do a trade negotiation with US, where the expectation is again a big bulk of buying that India can do can be on two major fronts: A, energy; B, defense. So again, with the US Vice President visiting India, I think the focus would be to some of these defense names where there can be some deals happening in that space.
Okay. Well, gentlemen, just stay on, because while our markets are doing what they are doing, there is a frenzy out there in a couple of metal names. One is precious and one is, well, in Harsh's words, more precious than gold. That's copper. Let's get in Peter Maguire, CEO at XM Australia, who joins in right now pretty late in the day for him, but he's kind enough to be us on our show to try and understand what to do with gold as well as maybe copper. But I'll start off, Peter. Good evening to you, of course. And I want to start off with the frenzied buying that we're seeing in gold. Now, is this a de-dollarization piece? Is it the DXY weakness? Is it temporary? Or do you believe there is a structural up move here?
Well, good afternoon, Niraj. Lovely to see you, and greetings from Sydney. You know, it's been extraordinary, and I've seen today, it's just showtime, up 2% $3,405. And I don't think anyone could have really thought earlier in the year that you would have seen this dramatic move in this short period of time. Many analysts, Niraj, were saying possibly 3,000, maybe a 32.50 handle by end of year. And here we are, 8 and a bit months out, and you're at 3,400, and you've got an absolute cratered US dollar index sitting now below 98, and a euro, what is it, nearly 116. You can't believe the volatility.
Okay, Peter, Harsh also joining in.
Thank you.
Hi. So Peter, therefore, just two scenarios playing out. One, the likelihood of the US in some form or shape reaching a resolution with various countries with regard to tariffs, and the other not. Do you believe that the run-up in gold outweighs both of these scenarios likely playing out, and the upside now is capped versus the downside?
Well, Hirsch, I think, you know, this is the unknown that we face. We've got 70 or 80 countries, they're saying, that have had some form of negotiation with the Trump administration. That's what we do know. We know that China is very much a work in progress. We also understand that it's the art of the deal. This is typical Trump. High balls and then comes in and cuts a deal. That's what he's done all his life. So that's not unusual. When you listen to the likes of Treasury Secretary Scott Bessent, Commerce Secretary Howard Lutnick, that is very much a part of their finance administration. And I feel as though that, yes, you've got some form of de-dollarization, and you've also got, which is going to be very good for their exports, but you've got the other side is going to be, how does that play in to the likes of gold, and whether we see, I think, a hyperdrive to the attraction of the precious metal.
And how should one view silver in this context? When I'm looking at gold is to silver, the delta has gone up substantially, probably standing close to the highs of the decade. Is silver therefore the better pick?
I think so, very much so. And I'll tell you why. That gold to silver ratio, as you just highlighted for all the viewers, it's totally out of kilter. It is not making sense. We've seen a massive investment in the silver market for the best part of 2, if not 3 decades. And this is going to come home to roost. And when it does come home, they're saying that silver is going to take off. And I feel as though that's what you're seeing. Many people are stacking positions in silver and buying physical. And I think that the precious metal for the rest of 25 is going to be a very dynamic market to be a part of, Hirsch.
Okay, interesting. Peter, though, I mean, you know, I've been hearing this story for such a long time now, right? Somehow doesn't quite play out. So when it comes home to roost, yes, but who knows when?
Well, Niraj, look, I think you can't take your mind away from what we were at October 2023, and remember Israel. I think I even spoke to you about that, and we had a low of $1,807. We're now nearly double that in that 16-month, 18-month window. There is no doubt that the dollar side of things, what happens as far as the new administration, do we see a 95 handle for the US dollar index? I truly did not think we would hit a 97 handle for the US dollar index this early. I thought you might get there maybe sometime in May, maybe in June, but the way it's going, and if you were to see cuts by the Fed, I tell you what, you'd be looking at a 95 or 94 handle for that US dollar index. So all of these factors need to be very much considered.
Okay. Peter, one last thing, actually, one very quick question from mine. Copper. I wonder if all this chatter around the not resurgence really, but a surging demand for copper likely to continue in a meaningful way. You second that, and do you believe that there will be gains to the base metal?
Yes, first off, I do second it, Niraj. Secondly, it's cheap buying compared to where we were in the last month or so at 10,000. Now you're at 9,000 a metric tonne. And I feel as though that there's going to be an increase in demand picture for the copper market very much for the rest of this decade and then leading into 2030 to 2040. It's going to be huge demand. So that's where the industrial metals and, of course, precious is going to be, I think, the place to be. And yeah, all I'll say is this. There is going to be considerable upside for many of these markets.
Peter, my last question is with regard to the take on China. Now, there's plenty of moving factors geopolitically. And therefore, how does China line up and possibly impact metal prices in general? Not speaking about gold, silver or copper in particular, just metal prices in general. How do you see a move on that count? What's your perspective at this point, given all the moving parts?
Well, when you're thinking about from a manufacturing standpoint, Hirsch, there has been the demand coming out of China over the last decades has just been one way, and that has been a magnificent climb as far as consumption. I don't expect that to, in the short run, to disintegrate, but I do know that the global demand or global utilization is going to probably increase. The second part is, how does China play? One is the unknown as far as tariffs with the Trump administration, and where does it play in the sense of manufacturing? Do we see all of those goods still being manufactured in China, or does it go offshore to somewhere like America or Vietnam or other countries? This is going to be I think how that plays out is going to be a typical case study. But the known is, I don't think it impacts demand.
Okay. Peter, we'll leave it at that. Thanks much for taking the time out and being with us. Really appreciate your time.
Good to see you, Niraj. Thank you.
Likewise. Akshay, can you come in on this? And let's say the copper-linked players, right? In the metal index has done well today. The copper-linked players, Hindustan Copper or maybe Hindalco, having some access to the commodity, how do they look on the charts for a trade?
Well, as of now, they look like more of pullback rally candidates going by the price structure. So too early to conclude whether a bottom is in place. But if I were to look at Hind Copper, the trend is still down, but the pullback rally can extend all the way till 237. Right now, we're trading at 220. So still small gains to cover up in this counter. As far as Hindalco goes, I think the price structure is better placed here, because if you were to look slightly from a weekly perspective, 550 is a support which has been cemented, and the stock is now setting up for an upside till around 682. So time is what the essence is. You have to give this trade some more time. It is not more of a momentum trade. Buy and hold, and I think Hindalco is more preferable. 685 is in the making from a 10 to 15 day trading scenario.
Okay. Well, watch out for them. I'm presuming, Siddharth, you're not too constructive on metals, or are you?
So yeah, Neeraj, I think based on these news flows, you can definitely have a positive view on some of them. While I think as a whole, there is definitely, if you look at from a global construct point of view, the dollar index coming below 100, that is definitely a big positive for metals in the sense. And if the global trade war comes down and there are settlements, I think demand will kind of go up. So it's a mixed view out there, but selectively certain pockets definitely are doing well. For example, you spoke about how silver as a commodity is now looking good. So you have companies like Vedanta where you have a silver play, you have copper, which is doing very well. So you have Hindalco, which is doing very well, and selectively JSW Steel within the metal space. I think these three stocks would be preferred picks within the overall metal space. Within the aluminium copper, we like Hindalco. We have a positive view there and a target price of 770. JSW Steel has been consistently delivering strong numbers, and within the ferrous side, that's our preferred pick. We have a target price of 1220. Almost you can say 20% upside. And then Vedanta, where you have both a lot of metals, plus you have the oil and gas business, and the restructuring corporate action also pending, where the value unlocking story is also likely to play out over the next couple of quarters. So that's the third stock within the metals pack. We have a positive view on Vedanta, target price of 500.
Right. Thank you for those views. Impossible to take IT out of the discussion today. And bull versus bear segment that we put together daily. Today the spotlight is on Tata Elxsi. The stock has hit, it is up 8.5% after reporting what was sort of a soft set of numbers. What's working in its favor today and what's not? Puneet joins us with both perspectives, the bull and the bear. Puneet.
Well, thanks for that. Definitely, very somber results for quarter 4 for Tata Elxsi. 3 bull and bear cases we're trying to pull across. The first one's, of course, the bear case, 5.3% constant currency degrowth in terms of revenue in this particular quarter, and this is based on constant currency, and that was one of the key negatives. Revenue growth was impacted. We also saw margins getting impacted in this particular quarter by 340 basis points. None of that has taken the sting out of the stock today. It had 2 huge deal wins in this particular quarter, one of a 50 million euro deal win, especially in the auto space, and a $100 million deal win in the media space. But that was one of the key aspects. Now, the ramp up of this will be something to watch out for going forward in the next couple of quarters. On a second bull and bear case, the media segment has been appearing soft despite a strong deal win in this particular quarter of $100 million. And that's one of the other key things. But the auto segment, which is a mainstay for these ER&D companies, that may see some deal ramp up. That's what most brokerages are penciling in over FY26. And finally, in terms of valuation, as well as, the bull case specifically aiming for a better FY26, as most companies are, and most brokerages also. But in terms of valuations, at 40 times price to earning for FY26, that's going to be one of the tricky ones, because we're seeing Infosys as well as TCS trading around the 20 to 21 times, and the market's still not rewarding them for any kind of deal wins. So, that's one of the tricky aspects for mid-cap IT players, where, in this particular quarter, while we might see a larger revenue growth compared to the large-cap IT players, the key aspect will be the ramp up of any kind of deal wins potentially, as well as on the cost side, because we are seeing margin impacts across these players. So that's the bull and bear case. Essentially, while the stock is up 8 to 10% today, before today's open, it was down 46% from its highs of over 9,000 rupees. So some things to consider before venturing into the stock, but definitely today the bulls have it.
Well, thank you so much for that perspective, Puneet. Siddharth, which way would you bet on in terms of this particular stock? Would you buy? Would you sell?
Unfortunately, Harsh, we don't have Tata Elxsi under coverage, so unable to do on that.
Okay. Point taken. What about you, Akshay, from a charts perspective?
Yeah, so I would trade this more on a momentum chasing or a BTST perspective. So right now, strong gains of 8% plus, but really if you were to look at the trend from a medium to longer term perspective, it is day one where you are registering such significant gains. This happens at the bottom of around 4,800 to 5,000. So still no confirmation that a long-term bottom is in place, but if you are chasing momentum, the stock is setting up for an upside till around 5,600 to 5,650. If this target works with you, that is what you should be aiming for.
So those are some levels to look out for where Tata Elxsi is concerned. Let's take a quick break. On the other side, we'll talk about a few stocks which are buzzing in trade, something like a Just Dial, a Suzlon, an Interarch, and a JSW Energy. So stay tuned, some interesting conversations on the other side of this very short break.
India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
The first stock on the list is it's IGL now. If you see the stock that has perked up around 4% in trade, and this is largely on the back of the buzz that is on the street, that the company might announce a price hike of anywhere between 3 to 4 rupees from the 1st of April. Now this might as well happen in phases, so keep an eye out for IGL. Now this stock had to, the company had, in fact had to take a price hike post the Delhi election because the cost of gas had increased for them, and because of that the margins had come down, but they had not taken any price hike so far. So the street is expecting a price hike announcement to come in, which will be effective from the 1st of April, and it could be around 3 to 4 rupees, and it could well be implemented in phases. So keep an eye out for IGL.
All right, back with India market close right here on NDTV Profit, and it's not looking bad even now. So if one would have thought that there will be a severe tapering off as the close of the day comes in, that isn't happening. We are standing strong above 24,000, in fact 24,100, well above that too. So bear that in mind. And as Siddharth Khemka said, that buying activity is not looking all that wobbly either. Siddharth, before we thank you, from amongst the mid-sized names in which you have either seen the quarterly updates or the results within your coverage universe, is there something that you would recommend people keep on the shopping list, or maybe even go out and buy at the current valuations?
Yeah, Neeraj, you are asking from the results that are already out, or even from the companies which can come out with results?
Anything is fine, Siddharth, but ideally the broader end of the spectrum.
Yeah. So definitely. So there are two segments I think we discussed last time as well. A is the hotel sector. Both Indian Hotels and Lemon Tree look good in terms of the earnings expectation. Indian Hotels is a fairly large cap. Lemon Tree is the other one, which is in the broader spectrum. The other one is Indigo, big beneficiary of the lower crude oil prices and the expansion that they have done in the tier 2, tier 3 towns in India, plus the international market expansion. I think these are the two spectrums where we believe one can definitely look at from the broader market perspective. Apart from that, two other sub-segments. A is the EMS, electronic manufacturing. We believe that with this global tariff for Indian electronic manufacturing will be a big beneficiary. So companies like Keynes, Dixon, I think these are stocks that one should look at. And finally, the capital market theme, with the market seeing the kind of recovery, volumes coming back, I think a lot of these stocks had fallen just on back of the PE contraction, and now interest is coming back in stocks like CDSL, CAMS, some of the mutual fund companies. I think that's another interesting space from the broader market that one should look at and keep in the shopping list in the current market.
Certainly you keep an eye out for. Okay, Siddharth Khemka, take a moment to thank you for joining in today and giving us your thoughts. To talk about the technicals for the last half an hour or 25 minutes, Nagaraj Shetty from HDFC Securities with us, and Aditya Shah, founder of Hercules Advisors, in our studios to talk about the fundamentals. Gentlemen, both of you, thanks so much for joining in. Really appreciate your time. And can't not talk about banks, right, Aditya, because just the kind of surge that we've seen and the commentary that has come in, particularly from ICICI Bank, if not maybe HDFC Bank too, but ICICI Bank in particular. Now, with we being back to all-time highs, some people might have a FOMO fear, and some people might have a fear that abhi to badh gaya, ab kaise invest kare? Are banks worth looking at right now?
Neeraj, first of all, good afternoon. We've been all through this year. We've been positive on the larger private sector banks all through this year, and I believe both the results were really fantastic. Of course, the NIM expansion on HDFC is a long-term game. Will take about 1.5 2 years for the expansion to really happen. But aside of it, the banks are going really strong, and I'm not surprised that the lifetime high for Nifty will be breached. And these large private sector banks and SBI, these 4-5 guys will continue to do well and lead the markets higher. So from my perspective, if you are a growth investor, you could look at likes of ICICI Bank, you could look at likes of Axis Bank. If you are looking for a little bit of value in the market, then HDFC Bank is the stock to go to, with the understanding that it will take about 1.5 2 years for the stock to give a real delta from a NIM perspective. So I am happy with what is happening in the market. Markets will move on from here and make lifetime high because Nifty Bank is firing on all cylinders.
Very interesting. The other pocket within lenders, Aditya, which is doing very, very well, is this entire theme around microfinance and unsecured. These are the two pockets which are really flying in trade. I'll just quickly mark out some stocks for viewer reference. Within the NBFCs, you look at a Spandana Spurti, it's locked in upper circuit, 20% higher. You have Avas Financiers up 7, Chola up 5, and L&T Finance is up 4.5. Piramal is also up. And within the banks, Utkar Small Finance Bank up 7, Suryoday up 6.5, IDFC First up 5.5, and AU Small up 5.5, Ujjivan up 5, and an Equitas also up 5. So there's absolutely no dearths. I can keep going on about this. You believe from a valuation standpoint and from a cycle standpoint, have we hit bottom, and now is it 1 to 2 clean years that we'll get to see, and will valuations be dramatically different by the time we hit the next cycle?
You know, Harsh, I had pointed out that this is a year of returns for larger private sector banks, and this is a year of accumulation for smaller private sector banks, in the sense that they will get beaten up very, very badly. And we've seen Ujjivan come up from 33 to about 44 now. The micro lending cycle has not peaked out as of now with respect to NPAs. Over the period of next 2 to 4 quarters, still there will be NPAs. From a valuation perspective, market is always forward looking. Market has already seen that over the period of 1 or 2 quarters, next 1 or 2 quarters, peak NPAs will come from all of these lenders, right? So from my perspective, this is the time to start slow accumulation of micro lenders. Today's move is because HDFC and ICICI posted very good results, and the entire bank Nifty is really moving up. But in my perspective, micro lenders will face tough times over a period of 2 to 4 quarters. Slow accumulation is something that you need to really have, and after, let's say 26, 27, those will be the ones who will give massive returns. So that's where you need to concentrate on. High risk investors should concentrate on the micro cycle.
Okay, and before we get to Nagaraj on this, so with the standard disclaimers that people should do their own diligence, etc., what are the 3 or 4 names that you are looking at? You may choose to buy them now or 6 months later, that's separate.
Yeah, so we have initiated positions on IDFC First Bank. We believe even though they are diluting every year, the franchise that Mr. Vaidyanathan is building is fantastic and will do really well from here on. You could also look at something like an Ujjivan, where it was available at a very low valuation, about 1.2 times price to book, and there the micro lending book is starting to shrink, and the secured side of the book is also coming about. That is something that you can really look at. And then finally you could look at, for very high risk individuals, something like an IndusInd Bank, where IndusInd Bank, I expect the entire top management to clean out. This quarter results will be pretty bad, in the sense 2,000 crore of loss they will take, and nearly about 200 or 300 crores of profit would come in. But the valuation is extremely lucrative in IndusInd Bank, below price to book at about 0.7, 0.8 times. But a standard disclaimer, only high risk investors should invest. A stock will see a volatility of at least 6 to 12 months minimum before things start to stabilize. And IndusInd Bank is a high quality franchise. It will recover from the problems that it is really facing. It is just a matter of time, and RBI will make sure that the bank moves on from here. So high risk investors, big asterisk mark, high risk investors should invest there.
And what about life insurers? The other one was HDFC Life's numbers. What do you make of that?
So very stable numbers per se. I don't have anything to complain about there. I believe amongst all the life insurer, HDFC Life is the most aggressive one in terms of growth, in terms of pushing on term plan. So within the life insurer pack, I will continue to stay with HDFC Life. Even though the stock has underperformed over the last 2 years, it will continue to do well from here on as well. If you compare ICICI Pru Life's result and HDFC Life's result, the growth that HDFC Life is starting to give is something that I'm really happy about. So the top pick there will continue to remain HDFC Life, and an eye on LIC should always be there because from a valuation perspective, it looks really very interesting.
Viewers, keep in mind though, the returns for some of the insurance firms, I mean, not just in the last 1 year, but the last 4 or 5 years, it's so struggling. Maybe at some point of time this will come in. But yes, credit where it's due. You're speaking about banks and chemicals for the last 6 months. Large private banks have come to the fore. Maybe towards the end of the year, around Diwali, we might talk the same way about chemicals, so let's wait and watch. But Nagaraj Shetty is with us as well, and before we hear out what maybe a banking management or two has said, since we're in the topic of banks, okay, I think I'm seeing Nagaraj in a small window, maybe we should try and get that going, but it's pertinent to hear out what about banks, and which is why this whole segment on banking. So while we wait for Nagaraj's frame to get done, hear out what Yes Bank MD and CEO believes, because they believe, I think that they are confident about deposit growth despite reduction in the rates. The stock is really abuzz in trade today.
So we are quite confident that not only we would be able to maintain those deposits, but we would continue to grow. For a very, very long time, I am saying, ultimately, when you are able to get the deposit, it's not always because of the pricing. It also depends on the quality of service which you provide, and also the convenience you provide to your customer through the digital means. So I think of both in terms of convenience to customers through their personalized apps, and also the quality of service. We are quite confident that we would be able to grow deposits despite reduction in the rate of interest.
Aditya, Yes Bank?
So Harsh, as we interacted on Saturday, it's a decent set of numbers. The asset quality is the major strong point for Yes Bank. This quarter slippages were controlled and asset quality is coming into control for Yes Bank. So Yes Bank is in the middle of a multi-year reconstruction mode after all the problems that it had, and I'm very happy with the results per se. Next year the management has guided for a 12% growth on the loans. So I believe on a multi-year cycle, Yes Bank is doing all the right things per se, and I'm not surprised that the stock price is moving up. So good results, not a problem per se, but within the pecking order, the larger banks will continue to remain the top priority.
Point taken. Nagaraj, what about your pecking order with both regard to banks as well as some lenders from within the microfinance come unsecured space? What are your top picks and bets?
Hi, good afternoon. If you look at Nifty first, we have seen some excellent upside bounces from the lower levels, and now the resistance one after another has started to broke out on the higher side. Currently, Nifty placed at the hurdle of around 24,200 levels. The way it has moved up, the overall chart pattern as per the smaller and larger time frame is indicating that we are likely to see the next upside target for the Nifty around 24,550, 600 odd levels. At the same time, banking was the one which was in a sharp uptrend, firing on the all cylinders. You can say that the recent upside momentum indicates a decisive upside breakout of the hurdle and moving into a new all-time high. The next upside target to be watched for the bank Nifty is around 57,000. I have two stocks from mid cap and small cap. In fact, mid cap, because if you look at the charts, mid caps and small caps were lagging compared to the benchmark and the bank Nifty, and now they have started to move up and started to show some upside breakouts from the important resistances. So first one, I have a MRPL from the long side. MRPL was moving in a larger consolidation band. Now today it has broken above the hurdle and placed at the higher levels. Overall chart pattern is looking positive. Volume has broken out during the upside breakout. Currently trading around 141. One can look to buy at this point of time. 150 would be the target, and one can place a stop loss at 136. Second one is a little large cap one, that is CDSL. CDSL has been moving in a larger consolidation pace. We have seen a sharp decline over the last 3-4 months, and this stock has made an upside bounces from the lower level after forming an important bottom reversal. Currently placed around 1,305, 1,306. One can look to buy at this point of time. The upside target would be around 100 rupees from here onwards, around 1,400 odd levels. One can place a stop loss at 1,260 levels.
Those are some names for you. What about stocks like Angel One, KFin, BSE? Would those at all feature on your list at this point? Some real buzzers even within that space?
Yeah, I think they are all declined sharply and formed an important bottom reversal at the lower levels. And I think Angel is looking very attractive, placed at the upside breakout of 200-day EMA. And I think next resistance would be around 2,800 for the Angel in the near term.
Also, Just Dial, that's one counter which has really moved today, Neeraj. And let's pull that one up. Not sure where we are sitting at as we speak. There you go, 12% higher. We'll get perspective because numbers came out. Okay, we can get perspective in fact right away. It's up 12% today on the back of fourth quarter numbers. Mahima joins us with a perspective on those numbers. Mahima.
Right. So in terms of the margin expansion, that has come in as a surprise for Just Dial, and this is on the back of top line growth as well as cost efficiencies that have been achieved by the management. Other income is another factor that has led to this growth because that is up 40% QOQ, and this is on the back of declining bond yields as well as higher treasury income. In terms of profit before tax, that has been up around 22%, and this is due to lower effective tax rate as well. Now in terms of numbers, revenue is up around 7%. EBITDA up almost 22%, margins at 29.8% versus that of 26.1%, and net profit has shown a significant improvement of 36%. In terms of the key operational metrics, total traffic was up 11.8% for the counter, total active listings were up almost 12% for the counter, and total paid campaigns increased by 5%, and lastly total app downloads also came in as a positive number at around 9.4 times. So all this together has led to this kind of growth in the top line, and that is why the stock is seeing significant gains in trade today.
Nagaraj, Just Dial, would that be on your list?
Yes, Just Dial, we have seen some tremendous move recently, and the overall chart pattern is looking still positive. We have seen some sharp declines in the last 4-5 months, and the chart pattern of the recent times is indicating important bottom reversal and double bottom kind of a formation at the low of around 750. I think this upside breakout of 100-day EMA in today's session is likely to have a more impact on the positive side in the near to come. And the 1150 is the next hurdle for the stocks to be watched in the next 1 month.
What about you, Aditya? Just Dial, would that be on your radar?
So Harsh, we don't have coverage on this stock, so not be able to comment on it.
Fair point. Okay, so Just Dial, and that's how we leave it on that one. Nagaraj, your BTST trade for this afternoon.
Yes, we have seen some good amount of upside momentum in the financial stocks. L&T Finance is the one we can say it has broken out of the consolidation band. The chart pattern is indicating bullish higher tops and bottoms, which signals a strong momentum is in force. Currently trading around 171. I think this upside momentum is likely to continue at least for some more period, at least for a short term. And the next resistance to be watched for the stock is around 180, 185 levels.
And what about an IndusInd, Nagaraj? Curious to know.
Yeah, IndusInd was in a sharp decline due to that news and due to that event. And recently, after that, it has bounced back very well from the lower levels. I think worst seems to be over for this IndusInd Bank right now. Currently, there is a resistance around 900 levels, 900, 890, 900 levels. Once it breaks above that 900, the next upside upside hurdles to be watched is around 970.
Aditya, if I can come to you with regard to the Realty pack, because that's one pack which has really seen a sharp correction from the highs. Now, Oberoi Realty came out with numbers as well, but not just Oberoi. How would you play Realty? Would you firstly play? And if so, how would you play it?
So the realty cycle, according to me, would be the positive beneficiary of this interest rate cut cycle that we are going on right now. And we've already seen a major consolidation play out across the industry where developers who are not strong have been taken over by developers who are really very strong. So from my perspective, as I've been continuing to say, my topic here will be Godrej Properties. As their expansion in Delhi and Bangalore continues to play out, they will do exceptionally well, and they have also raised certain amount of money which will help them in debt as well as future expansion per se. So within the entire pack, my one and only pick now will be Godrej Properties, where the company is on a multi-year expansion per se within 2 new geographies, and they are starting to do pretty well there.
And would you therefore be not so constructive on HFCs? Or so housing finance companies can do well independent of the real estate cycle?
So from my perspective, if you wanted to play housing finance company, I would straight away play an HDFC Bank or an ICICI Bank right now.
Large ones.
From large ones, from the perspective that there's a lot of NPAs in the system that are getting developed, and I want to hedge against those. And I said within the lending space, rather than going to the HFCs, for Delta, I would move to the microfinance side of it. So within that space, if you want to really play right now, at least for this year and next year, would be the larger banks per se.
Interesting. Now, the other one which is buzzing and within the Nifty basket, and an interesting one as well, is Divi's Laboratories. They've announced an agreement long term for manufacturing and supply. Partner is a global pharma company. They've not disclosed the name. The supply is for advanced intermediaries. So guess would be largely more CDMO. The company, the key area for Divi's is the custom synthesis business at this point, and this obviously adds to that. And it's expected to contribute meaningfully to Divi's revenue. There's going to be, in fact, a 650 to 700 crore investment in capacity expansion as a result of this. So long term plus capacity expansion likely to add to top line, not clear with regard to margins and not clear with regard to quantification as to how much will it contribute to top line. Aditya, how large is this, you reckon?
So, as they say, form is temporary and class is permanent. Divi's has gone a severe turbulence from 21-22 and now is back. So the custom synthesis business per se over the next 2 to 3 years for Divi's is going to do exceptionally well. This combined with the fact that CDMO business also within US will do exceptionally well. So from my perspective, Divi's business is doing fantastically well. But then when we come to the valuation perspective, Divi's is one of the most expensive stocks out there. But for a reason, there are molecules that Divi's has within the API space and the custom synthesis space that very few players across the world really have. So from my perspective, this is a long-term compounding stock which you need to keep into your portfolio for multi-decades per se. And this news about the expansion and the long-term manufacturing deal that Divi's has done is just an ingredient into the long-term stock that Divi's really is. We've always been positive on this stock. We've been always positive on Murli Divi per se. The promoter is fantastic in that company per se. So it's a long-term Sachin Tendulkar type of a stock which will continue to play for investors for the next 30-40 years as well.
Well, 2 weeks to Sachin Tendulkar's, frankly, Neeraj. Last week, CLSA came out with a note on Bajaj Finance being a Sachin Tendulkar, and now Aditya has likened Sachin Tendulkar to a Divi's Labs. Kohli not yet featuring, so
3 days before his birthday.
That's true. Absolutely, yes.
Okay, some stocks which are flying around and interesting to note. So Ingersoll Rand is up, has shot up in the last few minutes of trade, I presume. It's fallen from the highs actually, but still up 4%. Let's put it that way. There is strength in JNK Axel, if I'm not wrong. So should pull that stock up as well. Look at that, 14% higher. Okay, on the results, as Aditya saying. So we'll talk about that in just moments. But Inox Wind Energy is now at 10,050, so has gained quite significantly and should pull that one up also for you. So following Inox Wind Energy should pull that one. Inox Wind Energy, IWEL. So that's the other one. Yep, at the highs of the day. So 3 or 4 names which are standing out. Sorry, did you say results augur well for JNK Axel? What stood out for you?
JNK Axel's results are supposed to come in today, and the JNK Axel's export to the US is something that has to be monitored. It gets about 60% of their revenues from the US. and the stock had been beaten down based on the tariffs that Trump had put in, and now they have been postponed by Trump per se. So I have not looked at the results, but that could be a major trigger for the stock.
Got it. Okay. Okay. Well, sharp up move there. Rohit, before we Nagaraj, before we let you go, any thoughts on GNA Axle? I mean, pulling it out of the blue at you. So I don't know if you track it, but still.
Yes, GNA has shot up in today's session. The trend is positive, currently placed at the hurdle of 280 EMA around the 380 levels. Once it breaks above 380, then more upside could be there around 410 towards the 410, which is the next set of resistance for the stocks in the near term.
Okay, running out of time on this show, so thank you so much, Nagaraj, Aditya, for joining us this afternoon, and thanks so much, Aditya, for being physically here in the studio with us. But let's quickly look at where the Nifty 50 is settling in at close today. We're 1.2 odd % higher, 24,100 breached, and off the day's highs for sure. Let's look at the intraday chart as well. Bank Nifty leading the gains on a day like this. So around 1.2%, 1.9% on the Bank Nifty. In terms of the breadth, and let's look at the Nifty 50 heat map first off. And what we'll see is lots of pockets buzzing. IT is one space, Tech Mahindra and HCL Tech are two of the big ones within IT which are in that top row. M&M within Auto and Bajaj Auto and Hero, all three of those have featured. And then you have IndusInd as well as some financial names which are heavyweights and are also contributing significantly to the Nifty, even though not exactly at the top of that chart. But look at an Axis, look at a Kotak, look at how an HDFC has done today. So some heavyweights pulling their weight as well. Along with it, some of the smaller names, a Trent, a Power Grid, standing out, a JSW Steel as well. What's not done well? Well, it's more tilted towards an FMCG. Look at a Nestle, an Asian Paints, HUL, ITC. That pocket maybe not as well, but maybe some of those names adding a color of red on that screen. Let's look at the sectoral heat map as well. And there you go. So, of course, you've got PSU banks leading the pack today, doing very well. But Nifty Realty has surged in trade, especially over the last maybe couple of hours. Seen 1% or 2% higher on the Nifty Realty Index, something to watch out for. IT metals doing well along with the Bank Nifty. And the Bank Nifty is also cooled off from the highs, and the Nifty Auto is also up 2%. So plenty of movers within each of those pockets. Let's look at the advanced decline. And the advanced decline, of course, the breadth strongly in favor of the advances. And in fact has gotten better. So it's a 5th straight day in the green and 5 out of 7 days where the Nifty has closed 1% plus higher. And the breadth also looking significantly strong to start this week off. It's a welcome move across the board. Broader markets outperformed the Nifty and 2% plus on the Nifty mid cap. We've closed very close to the day's highs. The Nifty small cap as well doing very well for itself, closing at the day's high, 2% higher. Let's pull out some names within the BSE 500 basket which have done well. I'll quickly mark some names out, and we've spoken quite a few about some of these. Just Dial did very well, 11% higher on the back of numbers. Kalpataru Projects was the other one. Vodafone was up 11% as well. You had a Suzlon, a Tata Elxsi, again Tata Elxsi on the back of numbers. And Avas and an AU as well, which have done fairly well. In terms of losers, not too many. But an Avanti Feeds was the one that really stood out, nearly 5% lower. Now, in terms of what to watch out for, far and few outside of earnings, but let's put that out of the way. One, you have some meetings from the IMF, so maybe some cues coming out from there. Then you have Stallion India Fluorochemicals, 4% of their shares to exit lock-in. And then you have a whole host of earnings which are in focus, from an M&M Financial to an HCL Tech, to a Vari, AU Small, Tata Communications, Delta, Huhtamaki, Havells and Cyan DLM. All of those will be in focus as well. So that kind of rounds up what all to look out for tomorrow as well, at least from a trade setup perspective. But we'll obviously catch you tomorrow for live action again For now, from Neeraj, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. We will get you more on the other side of this break.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
The first stock on the list is it's IGL now. If you see the stock that has perked up around 4% in trade, and this is largely on the back of the buzz that is on the street, that the company might announce a price hike of anywhere between 3 to 4 rupees from the 1st of April. Now this might as well happen in phases, so keep an eye out for IGL. Now this stock had to, the company had, in fact, had to take a price hike post the Delhi election because the cost of gas had increased for them, and because of that the margins had come down, but they had not taken any price hike so far. So the street is expecting a price hike announcement to come in, which will be effective from the 1st of April, and it could be around 3 to 4 rupees, and it could well be implemented in phases. So keep an eye out for IGL.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? No.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight to the show. Viewers, Monday blues remain away from the markets as both Nifty and Sensex end 1% higher. 42 out of 50 Nifty stocks end in green. Broader markets outperform benchmarks with Nifty 50 trading above the 200-day moving average today. HDFC, RIL and Infosys push the rally. Broader markets outperform benchmarks. All sectors except FMCG end in the green, with Nifty PSU Bank, Energy, Oil and Gas, Realty and IT leading the sectoral pack. Market breadth ended heavily skewed in favor of the bulls. Rupee closes stronger against dollar, strengthens by 24 paise to close at 85.14. Nifty Bank hits all-time high, gains 1,000 points on Monday. This strong growth is due to a combination of factors including strong quarter earnings from major banks along with consecutive rate cuts by Reserve Bank of India. ITC is in the news as it has acquired organic food company 24 Mantra and another Ayurvedic company called Mother Sparsh. Now the company believes that the network is ready for a 3x expansion of the current sales of operations, helping ITC grow its FMCG sales much faster. Kansai Nerolac targets 9% CAGR growth in sales over the next 3 years. Now, they also have an EBITDA margin target of 14 to 15% for the same time frame. Now, the main area of growth for the company will be largely led by industrials. Now, they will also focus on decorative markets. They believe India to be growth engine for Kansai Japan. BofA has now come up with a bearish note on Siemens. Now, they have maintained underperformance and have cut the target by a significant amount of 2,450 from 4,530. Now, the reason behind the cut remains the company's demerger from a high-growth energy business. BofA expects that the energy business will capture 50% market share of large orders. This energy segment contributes to 41 to 43% of the company's total earnings. Zomato's board approved a FII ownership cap of 49.5%. Now, this is to help the company concentrate on inventory-led model, which will result in better control over products' quality and price. Along with that, although this module will require higher requirement of working capital, Zomato vouches for improved consumer experience. ICICI Bank, HDFC Bank and Yes Bank came up with a fourth quarter result over the weekend, with all three banks witnessing strong growth and heading into FY26. HDFC Bank's quarter four results saw a slight downtick in profits, whereas Yes Bank reported a strong growth. ICICI Bank boasted a better NIM and stronger credit growth. Asian Paints, mostly trading flat today, has failed to move in tandem with the benchmarks. In fact, it has lost over 20% in the last 6 months. Now, there are multiple factors which are leading to this. The price hike of the products do not sink in with the current trade inflation. Apart from that, Asian Paints have also been witnessing a tough competition from Birla Opus. Divi's Lab has announced long-term manufacturing and supply deal with a global pharmaceutical company. It plans for a capacity expansion of 650 to 700 crore rupees. Now, the expansion will be seen in existing manufacturing facilities, and the investments are to be funded throughout internal accruals. Now, this will allow Divi's Labs to actually expand its custom synthesis presence, which has contributed 53% to its total revenue. Wind energy solutions provider Inox Wind has begun executing a 990 megawatt turnkey order. Now, this is a part of a 1500 megawatt framework agreement it signed with Purva Green, a subsidiary of the CESC Limited. Now, the projects are currently underway across multiple sites in Gujarat, Rajasthan and Madhya Pradesh. According to a company statement, Inox Wind has received all advances related to the order. Premier Energies has incorporated a new arm to focus on the I beg your pardon. So, Premier Energies has incorporated a new arm to focus on the manufacturing and processing of high-quality silicon ingots and wafers. Now, these are crucial components in the production of solar cells and other semiconductor applications. Now, the Ministry of Corporate Affairs issued the certificate of incorporation for the new entity on 20th April. Premier Energies will hold a 100% equity stake in Premier Energies GWC, making it a wholly owned subsidiary and related party under regulatory norms. Now, moving on with another news which is related to Ola Tech Solution. It has received a 45 crore purchase order for a turnkey project involving the supply, installation, testing and commissioning of IT infrastructure. Now, this project will likely leverage the company's technical expertise to deliver comprehensive IT solutions. The International Gemological Institute reported strong Q4 FY25 net profit increased to 11.6% to 141 crore rupees from 126 crore rupees. Revenue grew 9.6% to 305 crore rupees from 278 crore rupees. EBITDA rose 12.7% to 196 crore rupees from 173. IGI improved profitability and efficiency with a higher margin indicating better cost management. Overall, Q4 FY25 results show solid growth in profit, revenue and operational efficiency driven by strong demand for GEM certification services and improved margins. Now, shares of Jio Financial Services were trading in the green and early trade on Monday after the company posted a rise in profit in the final quarter for fiscal 2025. The company's consolidated net profit for the fourth quarter of financial year 2025 rose by 1.8% to 316.1 crore rupees. In comparison, the company's consolidated net profit stood at 310.6 crore rupees during the same quarter of the previous fiscal. Its total income for the quarter under review rose by 24% to 518 crore rupees against 418 crore reported for the same period last fiscal. One MobiKwik system has partnered with Poonawalla FinCorp to offer instant personal loans, enhancing its financial services and providing users with easier access to credit. The collaboration is aimed at expanding access to instant personal loans for consumers and MSMEs across India via MobiKwik's ZIP EMI platform. Now, as part of the partnership, users of the MobiKwik app will be able to avail personal loans ranging from 50,000 rupees to 15 lakh rupees with flexible repayment tenures between 6 to 36 months. Collab platform has launched a 25 crore rupees accelerator program aimed at fostering sports tech innovation in India. The initiative is designed to support startups and entrepreneurs in developing cutting-edge sports technology solutions. Now, this initiative aims to boost the growth of businesses in this rapidly expanding market. The program will likely focus on fostering innovation and entrepreneurs within the sports and fitness industry. Now, the board has also declared interim dividend of 2 per share. Intellect Design Arena has secured a multi-million deal with a UK-based global bank to accelerate the bank's international wholesale banking expansion. The engagement is rooted in Intellect's unique approach that combines first principles thinking and design thinking to reimagine banking from the ground up. By leveraging its cutting-edge wholesale banking platform, Intellect will empower the bank to accelerate its global expansion strategy, deliver contextual customer experiences, and achieve transformational outcomes with speed and agility. Dynacon Systems and Solutions has secured a 138 crore rupees contract from Life Insurance Corporation for digital workplace solutions, which will likely involve implementing digital transformation projects to enhance LIC's operational efficiency and productivity. Now, Dynacons will be responsible for providing the entire IT lifecycle management, including delivering high-performance desktop systems and all-in-one computers, along with comprehensive on-site installation and long-term maintenance services. Delhi Airport's runway 10 and runway 28 is set to reopen in the first week of May, bringing relief to passengers who have faced significant delays in recent times. The decision comes after airport authorities decided to suspend the runway upgrade work, which had been causing operational disruptions. According to airport authorities, airlines failed to adjust their flight schedules, leading to massive delays. In fact, on Sunday alone, a staggering 68% of flights, 885 out of 1,300 faced delays. In another blow to Ola Electric, Maharashtra tells RTOs to shut Ola Electric stores without trade certificates. 43 out of 107 Ola Electric stores without trade certificates have shut down. The rest 64 Ola Electric stores have to be shut on a day's notice. A total of 214 Ola Electric scooters have been seized from 131 stores inspected. IFGL Refractories has received approval from the Odisha Industrial Infrastructure Development Corporation to set up a manufacturing plant, marking a significant step forward in expanding its production capacity. Now, this expansion is expected to enhance the company's production capabilities and strengthen its market position in the refractories industry. In a stark reversal of trends, foreign institutional investors have pulled the plug on Indian IT stocks with staggering intensity. Between April 1st to 15, FIIs offloaded $1,614 million worth of its equities. Now, the worst sectoral outflow since June 2024, when $2,559 million was dumped. The exodus occurred over just 9 trading sessions, highlighting a sharp pivot in foreign sentiment. Interarc Building Products has received its largest single order from pre-engineered buildings worth 300 crore rupees. The order is up for setting up a plant for a major tyre manufacturing company based in Gujarat, marking a significant milestone for Interarc. The upcoming tyre facility is poised to be one of the largest and most technologically advanced in the country. Now, Interarc has been entrusted with the end-to-end execution of the project, covering design, manufacturing and on-site installation of the pre-engineered structures. Lloyd's Engineering Works Board has approved a plan to raise approximately 987 crore through rights issue. Now, the rights equity shares are priced at 32 rupees each, with 16 rupees payable on application and the balance to be paid in one or more calls or before March 31st of 2026. Now, this will increase the paid-up share capital of the company by 20.93%. This move is exactly aimed at strengthening the company's financial position and supporting its growth plans. The shares of Yes Bank rose to over 2-month high after its fourth quarter profit rose 63% year-on-year basis to 738 crore rupees. Now, on a sequential basis, the bottom line rose 20.55%. The bank earned more from lending, but growth was slower compared to HDFC and ICICI, reflecting its smaller scale. HDFC Bank's Q4 numbers came in largely in line with expectations. Net interest income rose 3% above expectations. Provision stood in line and profit after tax emerged slightly better than expected. Margins inched up slightly while return on assets stood above 1.9%. ICICI Bank in its strong Q4 earnings reported an 18% rise in net profit at 12,630 crore rupees. Now, this was largely driven by healthy lending and better asset quality. Now, the bank improved its profitability from lending, which is a positive sign despite competitive pressures. Its focus on reducing bad loans and maintaining a high PCR shows prudent risk management. HDFC Life Insurance reported a 15.8% rise in Q4 of FY25. Net profit to 477 crore rupees, up from 412 crore rupees last year. Aligning with the analyst estimates, the net premium income grew 16% to 23,766 crore rupees, driven by strong demand. An annualized premium equivalent increased 10% to 5,186 crore rupees, slightly below expectations. Value of new business rose 11.5% to 1,376 crore rupees with a VNB margin of 26.5%. Now, the board proposed a 2.1 rupee per share dividend. Nomura predicts the Nifty index will reach 24,970 by March 2026. Now, they suggest investing in domestic-focused businesses like financials, consumer goods, oil and gas, telecom, power, internet, real estate, and select healthcare due to their lower earnings risk and better valuations. However, they are cautious about export-driven sectors like IT, industrial, cement, metals, and capital expenditure themes. They recommend a selective bottom-up approach, avoiding stocks with very high valuations. A whole host of companies are in focus as they are heading towards lock-in expiry in the next 30 days. Shares worth $40 billion are all set to enter the market. Some of these companies are Stallion India, Denta Water, Dr. Agarwal's, Ajax Engineering, and Quality Power. Not all the shares will be open for sale, as a sizable portion will be held by promoters in respective groups. Oberoi Realty reported a 31% year-on-year increase in booking value for FY25, reaching 5,266 crore rupees compared to 4,007 crore rupees in FY24. For FY25, the company's total carpet area sold stood at 12.8 lakh square feet. Now, the Mumbai-based real estate developer sold 928 units during the fiscal year, marking a 31.63% jump from the 705 units booked in the previous year. In a first for South India, Chennai has got its first swanky air-conditioned electric local train, or the EMU, connecting the Chennai Beach Station and adjoining Chengalpet, built by the Integral Coach Factory in the city. The train comes closer to a metro coach. The train is built with Vande Bharat's look and feel and having automatic doors, CCTV cameras, and 1,100 seat capacity. The Apex Court of India said that there should be no hurry to file petition on the Murshidabad violence case. Petitioner Vishal Tiwari demanded for a court-monitored SIT into the incident, claiming for an explanation for the West Bengal government's negligence over the incident. Supreme Court also said that one should not file petition without thinking and just to be in the news. As per data from the Telecom Regulatory Authority of India, Bharti Airtel saw a net addition of 16.5 lakh mobile users during the month of January, and while Reliance Jio added 6.9 lakh mobile users in the same period. Another controversy over language goes viral. A non-Kannadiga man sparked outrage online after a video showed him demanding an auto driver to speak in Hindi. The video has reignited the ongoing debate around regional identity in Karnataka's capital. The man is known to have issued an apology in Kannada, saying he respects the city that has given him a livelihood. Traffic on the Jammu-Srinagar National Highway NH44 remained suspended for the second consecutive day on Monday after floods washed away several portions of the road. Authorities now estimate that it may take 5 to 6 more days to fully restore the crucial highway. NH44 serves as Kashmir's primary road link with the rest of the country. US Vice President J.D. Vance is on a 4-day visit to India, marking his first official trip to the country. Vance is also accompanied by his wife Usha and 3 children. On their arrival, they first visited Akshardham Temple. Vance will soon meet Prime Minister Narendra Modi to discuss trade, tariffs and strategic ties, focusing on finalizing a bilateral trade agreement. He will also interact with India's National Security Advisor and External Affairs Minister. He then plans to visit Taj Mahal and Jaipur with his family. In what looks like an intensifying trade war between the US and China, both sides are turning only more aggressive. China now has warned other countries against making a broader trade deal with the United States at Beijing's expense. Now, this comes amid reports suggesting Trump's plan to pressure nations to curb trade with China. Now, while China faces levies of up to 145% on many products, Beijing has also responded with duties of 125% on US goods. And to ensure the world stays put while tariffs wait for a comeback, Trump announces an 8-pointer rule. Now, this is a non-tariff cheating list, warning countries of non-tariff related offenses that could further spoil relations with America. Currency manipulation, value-added taxes, dumping below cost, protective agricultural standards, counterfeiting, piracy, and IP theft have all made it to that list. Pope Francis dies at the age of 88. He was recovering from double pneumonia. Even as the doctors advised rest to Pope Francis, he made a surprise appearance on Easter Sunday. Leaders from the worldwide expressed condolences on Pope's death. Waking up, Kiev from Easter, Russia launched missiles and drones targeting Ukraine. The attack from Russia comes only after 1-day ceasefire declared by the Russian President Vladimir Putin on account of Easter. As per the regional Ukrainian officials, there were no immediate reports of injuries or major damages found from the attacks. After losing the game to Punjab Kings in the first half of the season, Royal Challengers Bengaluru came back strong and defeated the Punjab Kings at their home yesterday. Batting first, Punjab put a target of 157 runs in 20 overs, while in the second innings, Virat Kohli scored an impressive 73 runs in 54 balls, helping his team to win the match by 7 wickets. In the second match yesterday, Mumbai Indians, who were playing at home, defeated visitors Chennai Super Kings by 9 wickets, chasing a target of 177 runs put by Chennai. Mumbai achieved the score in just 16 overs. Rohit Sharma was the player of the match as he scored 76 runs in just 45 balls, helping his team register a 9-wicket victory and improving their net run rate. Board of Control for Cricket in India has announced central contracts for the 24-25 season. Now, only 4 players have made it to the A+ grade list, which includes Virat Kohli, Rohit Sharma, Jasprit Bumrah and Ravindra Jadeja. Along with this, a lot of young cricketers have been given their maiden contracts, which includes Rajat Patidar, Nitish Reddy and Harshit Rana. Along with that, Ishan Kishan and Shreyas Iyer regained their BCCI central contracts. Well, with that, viewers, it's a wrap on Market Express. Stay tuned to NDTV Profit as there's more lined up ahead.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
The first stock on the list is it's IGL now. If you see the stock that has perked up around 4% in trade, and this is largely on the back of the buzz that is on the street, that the company might announce a price hike of anywhere between 3 to 4 rupees from the 1st of April. Now this might as well happen in phases, so keep an eye out for IGL. Now this stock had to, the company had, in fact had to take a price hike post the Delhi election because the cost of gas had increased for them, and because of that the margins had come down, but they had not taken any price hike so far. So the street is expecting a price hike announcement to come in, which will be effective from the 1st of April, and it could be around 3 to 4 rupees, and it could well be implemented in phases. So keep an eye out for IGL.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
A fabulous Monday for Dalal Street as the Nifty scales the 24,100 mark, whereas the Sensex ends above 79,400. All major indices close higher for the 5th consecutive session, with the broader market outperforming benchmark indices. The Nifty Bank Index marches past the 55,000 mark. Tariff wars, economic uncertainty cast a shadow on Q4 IT earnings. TCS, Infosys, Wipro report revenue loss and forecast weakness in coming quarters. US Vice President J.D. Vance begins a 4-day visit to India as India and America seek to unlock economic opportunities and negotiate a bilateral trade deal. Maharashtra's Joint Transport Commissioner tells RTOs to shut Ola electric stores operating without a trade certificate. Pope Francis, the religious head of 1.4 billion Catholics across the world, has died. He was 88. He suffered from various age-related ailments and was hospitalized for over a month. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. For the next half an hour, we're going to bring you the latest on markets as well as national and international news. But first up, let's take a look at all of the action that took place in the markets today. It was a fabulous Monday with benchmark indices opening the week with stellar gains, making it the 5th consecutive session of gains. The broader market outperformed the benchmark indices, signaling bullish sentiment. The only sector lagging was FMCG, possibly due to profit booking or sector-specific headwinds, while all other sectors participated in this rally. Let me go across now to my colleague Harsh, who will give us all of the details.
Well, interesting day in markets. You know, we've gained now for a 5th straight trading session, at least on the Nifty. We closed nearly 1.5% higher on the Nifty 50, and you know, led by banks, but huge contributions from the IT stocks as well in trade today, surprisingly, given the kind of tepid numbers that Infi came out with. But nonetheless, IT is surely taking the lead in trade outside of the banking pack today. The Nifty Bank, in fact, clocked an all-time high, breached its all-time high, and therefore clocked a new high in trade today. And some of the heavyweights really chipping in before cooling off as the day went by. So the banking stocks as well as IT stocks were clearly in focus. Outside of that, metals and auto also did very, very well. They chipped in well, 2% plus on both metals as well as auto. You had an M&M, a Bajaj Auto, some stocks which are really doing well in trade. So some names to look out for. What didn't do well was some FMCG names, and Nestle and HUL. Some of those stocks were the laggards of the day, and Nifty FMCG also only sectoral index to close in the red. In terms of the breadth of the market was also quite strong. You saw nearly 500 losers, that's about it, versus the 1700 gainers that we saw. So favorable breadth led by a good performance by both small and mid-cap indices. Both closed at or near the day's high. The mid-cap index was up 2.25%, the small-cap index also up 2% plus, and both of those did fairly well for themselves. The breadth of the market was also strong. Lastly, some names which were really flying in trade, especially on the back of an earnings, was something like a Just Dial, a Tata Elxsi from within the broader market pack. You saw some real buzzers in trade. But outside of that, it was a fairly good day because not too many large losers that we saw. And Avanti Feeds was down 5%. But outside of that, within the BSE 500 basket, not too many down by 3% plus. And therefore, a good day of trade overall.
And with most IT majors posting bleak Q4 results, it's time to address the road ahead. Let's bring in my colleague Puneet for a summary of the key highlights reported so far in terms of Q4 earnings.
The large cap IT players, TCS, Infosys, as well as Wipro, we just look at the 5 key metrics for these companies. They've reported results over the last week. Specifically, they were weak numbers. Let's pull up the first table. Constant currency revenue growth, it fell by 0.8% for TCS, down 3.5% on a constant currency basis, quarter on quarter for something like Infosys as visible on your screen, and similar for Wipro, not the greatest quarter essentially. While this was baked in estimates for quarter 4, it's still a very weak number, ending FY25 on a somber note as well. EBIT margin growth was down 30 basis points for TCS, 20 basis points for something like Infosys. They did have a salary hike impact as well on EBIT this quarter, while for Wipro, it's largely remained flat at 17.3%. It's the lowest amongst the 3 in terms of the absolute EBIT margin numbers. When you also look at, the TCV growth, and that was, I think, the only silver lining essentially. The deal wins was very strong in this particular quarter, 19% quarter-on-quarter growth for something like a TCS, while Infosys only reports the large deal wins, which have been slower for most companies, 4.2% growth for something like an Infosys, while for Wipro, it's been 13% quarter-on-quarter. But most brokerages have come out and mentioned that the deal wins is not translating into revenue as well as profit growth, and that's visible because of longer lead time for ramp up of these particular deals. When you also look at the attrition rate, and that's something, while it is not alarming levels, it's still starting to inch up on a quarter-on-quarter as well as on a YOY basis. So for TCS, Specifically, you've seen a 30 basis point increase in attrition on a quarter-on-quarter basis, 80 basis point on a year-on-year basis, while for something like Infosys, it's much starker. 40 basis point on a quarter-on-quarter basis, 150 basis points on a year-on-year basis, and similar feat for Wipro as well, an 80 basis point growth on a year-on-year basis, while quarter-on-quarter it's actually fallen by 30 basis points, so that's the only one. And finally, in terms of guidance, and we've spoken a lot about this, TCS does not report any kind of guidance for FY26. On the other hand, Infosys has come out with a 0 to 3% growth for FY26 in terms of revenue, constant currency. That was expected to be between 2 to 5%, so another lower. And for Wipro, they only report guidance for Q1 of FY26. Essentially, it's expecting a 3.5% to a negative 1.5% fall in revenue in Q1. So essentially, large cap peers, we'll see HCL Tech report results tomorrow. On 24th, we are having 5 mid-cap IT earnings. It's expected to be somber, but growth commentary for mid-cap IT is expected to be better than large cap. But overall, lots more to discuss with our next conversation going into IT as well as the earnings this week.
Thanks, Puneet, for that. And while India's $280 billion IT sector is bracing for a challenging FY26 following 2 years of subdued growth, confronted with global uncertainties, tariff war, the rapid evolution of AI and the expansion of footprint of global capability centers, the hurdles, like we have been mentioning, are only mounting. Haripriya now joining us to delve deeper into these pressing issues and shed light on the road ahead for the industry.
India's IT sector, after 2 years of muted growth, is again set to see one more challenging year in FY26. The hope for revival, which was to be seen towards the end of last year, is again now set on a back foot. The global uncertainty amid tariff wars, the AI disruption, and the rise of global capability centers face as the major headwinds for the sector right now. We saw the reflection of this in the fourth quarter commentary given by the management of the top IT companies. TCS called out that they are seeing project deferrals. Wipro is skeptical of the deal conversion, even if they have a large deal pipeline. All the three IT majors reported weak results and are expecting a soft start to FY26, which could be seen in the guidance given by Wipro and Infosys. Analysts we spoke to say that the IT services spending growth will reduce from the expected rate of 4 to 5%. The CLSA projections for IT companies are also in low single digits for FY26. For TCS, it is 0.2%, Infosys 3.3%, and Wipro 1.6%. IT sector is also at a point where it is looking at pivoting its business model while there is a rise of AI disruption and competition in the industry.
Absolutely, facing these new hurdles in FY26. Meanwhile, let's move on to an important developing national story. US Vice President J.D. Vance has begun his 4-day visit to India as India and America seek to unlock economic opportunities and negotiate a bilateral trade deal. Now, Vance will meet Prime Minister Narendra Modi in New Delhi for talks on the economy, trade and geopolitical ties. Vance's visit is seen as an important diplomatic mission by President Donald Trump's administration, and it coincides, as we all are aware, with a rapidly intensifying trade war between Washington and Beijing, which is New Delhi's main rival in the region. To bring us more on the same, let me quickly go across to my colleague Gauri from NDTV to give us a sense of what Vance's agenda looks like. Gauri, if you could give us a sense of what VP Vance has planned out. We understand it's a pretty packed schedule mixing not just business but also a personal agenda.
Indeed, there is, in fact, it's being termed as a semi-private visit simply because there are diplomatic engagements that's lined up today. But the next 2 days, that is tomorrow and day after, is essentially going to be private visits of the Vice President and his family, the second family of the US, first in Jaipur and then in Agra. As for today, when he landed in India, there was a ceremonial welcome that was accorded to him, a red carpet welcome. There was a senior minister of Prime Minister Modi's cabinet, Ashwini Vaishnav, who is the IT minister. He welcomed the Vice President. Later in the evening, there will be discussion with Prime Minister Modi, who will also be hosting the second family for dinner at his residence. And I think this is the most important leg of the meeting from a diplomatic point of view, because one needs to understand that this is not just a regular vice presidential visit, because VP Vance is unlike some of the other VPs in the past that America has seen and the world has been prepared for. He's someone who speaks his mind. His worldview is very aligned to that of the Trump administration. And when he speaks, one can see that it's actually the Trump administration's official view on particular things that is really coming out. So any statement, any discussion likely to go forward in terms of either being forward-looking or essentially providing some sort of a breakthrough in difficult discussions likely to happen around trade, technology, and even people-to-people ties. The whole immigration issue, which has caused a lot of concern amongst Indian-American community, is another issue which is thorny on both sides because of the position that Donald Trump and his administration have taken, both going into the election and since then. But those conversations get a lot... they get broken, there's a thaw in those thorny relations, given the fact that both the Vice President and the Trump administration and Prime Minister Modi share a warm, cordial relationship. And that, of course, could probably be the X factor in the discussions that will take place later this evening.
Gauri, I'd like to scratch that and go a little bit deeper, if we may. I'm trying to understand the significance, like you rightly pointed out, of Vance's visit, right? We spoke about trade negotiations. But I'd like to understand a little more when it comes to strategic partnerships, when it comes to personal diplomacy, and also looking at symbolically, given Usha Vance's presence, what does this meeting, what kind of significance does it actually hold?
Three things. On the Second Lady's presence, it indicates a softer diplomacy, a softer edge to what could be hard discussions around immigration, around trade, around technology. So the presence of the family, the presence of Second Lady who has Indian origin, her parents went to the US in the 1970s, chasing that perfect American dream, all that adds into the softer touch that the American administration would like to bring in these discussions, and also present optics that are favorable. Remember, at the end of the day, India is one of those partners, those countries that US has said that they want to cut an early trade deal with. Both sides have been on record saying that $500 billion is the kind of aspiration they have for the trade volume, which is at sub $200 billion. So to see that growth in just about 5 years, there has to be a give and take. And in fact, the Trump administration has said that India is one of those countries that they want to now negotiate with for an early trade deal. So to get there, to get those hard negotiations going, to get some of that give and take going, the optics around the second family's presence, the optics around Usha Vance does present, and as I said, it softens the edges around hard conversations. And that, I think, could be an extremely important aspect because, when we're talking about trade, let's not forget that there's been some breakthrough. Both sides are positive that there could be an early deal which may come as early as around September, October. But prior to that, there have to be some hard calls that have to be taken from both sides. Both ends need to give that give and take. What will that be? How will all interests be protected? Where will that fine line be? Is really the key question. But again, the optics present a positioning that allows some of the difficult discussions to actually take place in a manner that doesn't affect the bilateral relationship in its totality.
Gauri, thanks for that and breaking that perspective and that insight so simply. But thank you so much for that. We'll continue tracking J.D. Vance's visit, him visiting the Prime Minister and holding a very, very crucial high-level meeting. We understand that there is also a dinner slated for this evening at 6:30 p.m. and we'll continue tracking that and give you all of the latest developments. Moving on, let's take a look at what's happening in Maharashtra. It's an NDTV Profit exclusive. Ola Electric finds itself in more hot water as Maharashtra's Joint Transport Commissioner has ordered RTOs to close Ola Electric stores operating without a trade certificate. Let me quickly go over to my colleague Tushar, who's been tracking the story relentlessly for all of the details.
On 16th April, Maharashtra's Joint Transport Commissioner shot off an email which was actually show cause notice to RTOs in the state to actually shut down those Ola Electric stores that still do not have trade certificates. According to that email, about 131 Ola Electric stores have been inspected, out of which 104 were found to be without a trade certificate. About 43 of them have already been shut down. The rest 64 have to be shut down on 1 day's notice. A total of 214 Ola Electric stores have been seized so far from 131 Ola Electric stores. In response to this particular story, Ola Electric said that our claims regarding the stores in Maharashtra are speculative, incorrect and misplaced. We continue to work closely with concerned authorities in Maharashtra to address any specific queries of the government. Now, we have to remember that this is actually a result of the operations or the inspections that the Maharashtra government has been carried out on Ola Electric stores. It was initially found that several of these Ola Electric stores were operating without trade certificates or sharing one amongst them. Ola Electric actually earlier this month it said that it's now in the process of applying for all these trade certificates and will comply with the norms that the state government has or the state RTOs have. But Ola Electric has continued with the raids. Transport Minister Pratap Sarnaik had earlier told NDTV Profit that about 300 to 350 Ola Electric stores in the state were found to be operating without trade certificates. It's still an evolving story. We'll continue to bring you the latest on this front.
Thanks, Tushar, for that update. But I'm going to quickly cut across to my colleague Himakshi now, who's joining us from the Newspit, who will provide deeper insights into the timeline of Ola Electric, detailing how and when it has faced scrutiny. Himakshi, we're seeing Ola Electric facing several challenges, particularly in Maharashtra over time. Give us a sense of what's happened to and, where we are at this moment.
Absolutely, Sanjana. So, in the month of March, action against Ola Electric stores were taken in Maharashtra, and several were found, without trade certificates or sharing one among themselves. So, on 4th of April, Ola Electric got a first notice from Maharashtra government over lack of trade certificates. Then on 5th of April, Maharashtra Transport Minister Pratap Sarnaik said that 300 to 350 Ola stores were raided. And then on 9th of April, Ola Electric had told Maharashtra that it's in the process of applying trade certificates. And now on 16th of April, Maharashtra Joint Transport Commissioner sends again a show cause notice to the RTO on, regarding these trade certificates of Ola. But now, Maharashtra has come down with a response saying to shut down Ola Electric stores operating without any trade certificates, and 43 out of 107 Ola Electric stores without trade certificates have been shut down so far. Back to you, Sanjana.
Right, Himakshi, thank you so much for that. We're looking at a couple of incidents that have been taking place, particularly for Ola Electric, deepening their woes with regards to trade certificate violations, allegations surfacing that Ola Electric was using a single trade certificate for multiple outlets, which is against the law. This leading to inspections by RTOs in Mumbai, in Pune, what we have been tracking, resulting in the seizure of scooters and closure of non-compliant stores. We also then saw the company running into financial and legal troubles, with vendors initiating insolvency proceedings against an Ola Electric subsidiary over unpaid dues to the tune of 25 crore. And last, Ola Electric claimed high sales numbers, but registration data, as we have been showing you, reportedly showed only a fraction of those vehicles registered. So it remains to be seen now what action Maharashtra continues to take against Ola Electric and what the company actually says in response. Let's shift focus now to what's happening in the national capital. We saw scenes of chaos ensuing over the weekend with the Delhi airport runway's partial closure, but now